ambiguous. I remember when this administration in February put out a national security memorandum talking about the fact that it wasn't just the nuclear program they were going out with the IRGC, but the fact that they could sell this oil, they take those funds and give it to the proxies like Lebanese Hezbollah and Hamas and Houthis in the region. The president yesterday said, I could stop it if I want. They're going to need the money to put that country back in shape. They desperately need money. And then he has meetings with them, his team, next week. So are sanctions now back on the table, and they're going to loosen up this year, this idea of maximum pressure?
Yeah, this is difficult to understand. As you know, the consistent criticism of the previous administration, and I think justified in the minds of many, is that they didn't enforce the tariffs. They didn't enforce these sanctions, rather, on Iran, and allowed them to build up this money, allowed them to build up these proxies. I'm sure it's not what they wanted, but that was the outcome. That was the criticism from the incoming administration. So it's confusing that this is the path the president's willing to go down.
Especially since after sanctions on tankers, owners, brokers, and traders, the U.S. blacklist now covers more than 2/3 of the 150 vessels that have handled the shipments of Iranian crude this year. That's what the data says. So they have gone after all of these flagged ships that go to China. China's buying all the oil, but they're doing it through, say, Malaysia or the UAE. But now the president is saying China can keep buying the crude, which makes you think that they're going to loosen up potentially on maximum pressure. So are they just going after the nuclear program? Is that all they care about? Or do they actually care about the money that this regime is giving to proxy groups like Hezbollah and Hamas?
Watch this space. It's been quite a ride in the oil market this morning. Brent and WTI trading as follows after getting absolutely whipsawed into the 80s, back down into the 60s. Crude has been all over the place.
Yeah, and that's what we've seen, where we saw actually a little bit of a rebound over the past couple of trading sessions. Honestly, to me, this is the big question. How do they crack down on a nuclear program without some other constraints, given that we're still looking for those 400 kilograms of enriched uranium?
Isn't that scary?
It's so scary to me.
Like, that's the #1 question. I keep coming back to that.
100%.
Where is it? No one knows.
The IAEA needs to get back into the country. And do you think the regime is going to let the IAEA's inspectors back in? I think that is a big question we are waiting to understand.
WTI, 65.20, Brent crude, 67.93. Let's turn back to that story from the Journal reporting President Trump is toying with the idea of naming a replacement for Fed Chair Jay Powell earlier than expected. Powell's term runs for another 11 months. Trump reportedly exploring an announcement in September or October. And to your point, that's a lot of runway between September and October all the way out to May.
Neil Dutta put out a note today, and he said you could argue that there already is a shadow Fed, and that would be Chris Waller. And you could see the disproportionate impact that his comments have had on the market as really acting as such. If you take a step back, this isn't very popular for someone who has to talk about stuff all day, every day. But I kind of feel like maybe we're giving this a lot of air when essentially this is the president wanting to get lower interest rates amid a lot of economists that agree with him and economic data that actually points to already a rate cut in September. So it is a distraction to build on what Jim Zelter was saying from some of the other issues.
Totally agree with you. I said the same thing in the last hour or so. By the time you get to September, they might already be doing what the president wants them to do.
Totally. So are we making a mountain out of a molehill, given the fact that this is a president who makes headlines pretty much every day, and we already know what he thinks of Jay Powell?
Well, if Jay Powell does a U-turn, does that mean he gets an interview? Is he potentially now back in the docket on the list?
He was appointed by President Trump. This is also really important to remember. He is a Trump appointee himself. So exactly to that point that Jim and yourself that you were talking about, loyalty. How much is that really going to be at the front and forefront? What does that mean?
So is Waller, so is Bowman.
Exactly.
And I think you might be happy with the two of them.
And Bowman was mentioned in the Breitbart report. Not in the Wall Street Journal report, but in the Breitbart report. So there might be actually more names than we are understanding.
We'll be playing this game repeatedly for the next 7 months, something like that. Okay. Wanted to squeeze in this story. Shell saying it has no intention of making a takeover offer for its fellow oil giant BP, refuting an earlier report about active merger talks. Shell saying it hasn't, quote, made an approach to, and no talks have taken place with BP with regards to a possible offer.
I went down a rabbit hole this morning about UK rules around mergers and how this actually takes them off the table for 6 months because now they have to wait that long before they can make the actual bid because there was a formal denial. What is up with that? Can you just explain what that is?
Well, imagine if you were worried about the price being bid up before you could close the deal.
There we go. Okay. All right. So this is the way of doing it. Look, BP has fallen so much, and they've been trying to create a new business other than fossil fuels, even though they're an oil company. And so there's a real question about whether Shell, as also a UK company, will be the answer to a lot of the problems that a number of people have said.
I'm pleased that's how you spent the morning.
It really really took me down a path.
Don't waste your time doing that, Brad.
I did. I wasted a lot of time.
I moved on from the UK stuff a long time ago.
I know, but you moved here.
I moved here. It's far more interesting. Let's turn to NATO. Member countries agreeing to a defence spending target of 5% of GDP. Mike Schumacher of Wells Fargo writing, just say no to 30-year bonds. Rising defence spending means heavier issuance, meaning pressure on the long end. Mike joins us now for more. Mike, welcome to the programme, sir. Provocative piece, and I think a lot of people will agree with you. And Mike, the interesting thought that you and the team have got is this is not just the United States. This seems to be a global story.
It is, John. We think it's got legs. So you think about a secular shift in defense spending. We're talking probably 5, 10 years, something like that. It's going to have a long time to go. And I get it. There's a lot of skepticism. People say, well, NATO's target's been 2% for a long time. How many countries have actually hit that? Not many. So why would they go to 3.5% or 5%? Maybe they don't get there. But really the point is they go up in terms of spending. And I think most countries probably ratchet their spending up in the next couple of years. So if your runway is 2 or 3 years, you say, well, your average NATO country boosts defense spending by 0.5% of GDP. Do the math, that's a lot of bonds. We think a lot of long-term debt, and I doubt that it's fully priced.
A lot of people have pushed back on the argument that issuance matters. And I know that this is sort of the popular idea. And yet in the U.S., it hasn't, because we've increased our debt dramatically in periods where we saw rates at near zero. So I'm just wondering, at what point, what's sort of the tipping point where people become bond vigilantes and pay attention to issuance rather than just inflation?
Yeah, it's interesting. I think issuance does matter. So think about not just nominal rates, but real rates. I agree, inflation's high. That's why you've got high break-evens. But think about your nominal interest rate. Decompose that. Break-even inflation, real rate. I'll give you a couple numbers. So in the decade prior to COVID, the average real rate on a 10-year Treasury was 40 basis points, 40. Today, it's about 2%. That's a massive premium. Issuance does matter. So the market's saying, look, we've got the U.S., which is profligate. It's got 6% something budget deficit. A lot of bonds to come out. We have to charge a relatively high penalty. So I think the market's been imposing that for a while.
Germany is considering this 50-year bond. Mike, who is best positioned to tap their debt markets when it comes to this defense spending?
Ooh, 50 years tough. I remember when the U.S. talked about a 50-year back in the first Trump administration. I personally polled probably 40 or 50 clients. How many buyers do we find? Zero. So perhaps the Germans have more luck today, but I think when you look at really long-term debt, it's tough. But I would say in general, whether it's a 50-year or a 30-year, the countries that are best positioned are the ones that are starting with a relatively low budget deficit and low issuance. Germany is the obvious example. When you think about the outstanding volume of boons, it's less than $2 trillion. Just to put that in context, treasuries, you've got $24 trillion. Germany has a pristine credit rating. Germany will find buyers for long-term debt relative to other countries, but probably has to focus more on 20 and 30 or less on 50, in my opinion.
What is the idea of higher rates for longer? What does that do to valuations over a longer term? We've already seen what that's done to the housing market and sort of the stasis that's there. But do you expect equity returns globally to be substantially lower over the next 5 years, 10 years because of rates that are permanently sort of pegged at a higher level?
It probably makes people think about that trade-off a bit more carefully. And it's interesting. We used to do a lot of comparisons between the equity risk premium and bond yields. The problem is that model has shown the equity market, whether it's the U.S. or elsewhere, to be rich for a long time. But I do think that if bond yields are persistently high, so let's say that the, quote, average rate on a U.S. 10-year for the next 5 or 10 years is 3.5 or 4% instead of 2 something, does that impact the equity market? Probably. Is it something people can trade today? I don't think so. But when you consider longer-term allocations, it probably does play a role and probably eventually makes bonds more attractive.
Mike, some of the naysayers at NATO, though, were saying that this defense spending, this 5% target of GDP, is only because Trump is there. He has a 4-year term. How much is this analysis you have on only because Trump's president, and then potentially in 4 years, they're not going to reach even close to that spending?
That's a great point. That's why we focus really just on the next few years. So for us, we'd say, look, Trump is going to harangue NATO members to spend more on defense. That's pretty clear. He's done it already. He's been successful. Look at Canada. It's going to spend 2% of GDP on defense in the upcoming fiscal year after being 1.3 or 1.5, something like that. So he's already getting that done. So for us, it's not so much about what happens in 2030 or 2035 when who knows is the U.S. president, but if you think about the path for the next 2 to 3 years when Trump will be very visible, very loud, I think it's reasonable to say that most countries in NATO will ratchet up their spending quite a bit. So for us, that's the big impact on the markets. It's much less about what happens in the out years.
My quick final question, a question I think we'll ask a few times this morning. If the next Fed chair is a White House puppet, do we have to introduce some kind of EM premium to the long end of the curve?
Yeah, I'm skeptical about that, John, and here's why. When you think about the nominee, it's pretty clear people want to act a bit dovish to try to get that job, to get the interview, to get the nomination. But once the Fed chair is in place, how much control does the president actually have? Not much. It was a great point. Powell's a Trump nominee, Trump appointee. Can Trump really control what he does? No. So if it's Kevin Hassett or if it's Waller who gets the job, once that person's in the seat, once that person's been confirmed, I think he or she is going to take his own direction. So I'm not super concerned about that right now, but I think the markets might overreact between now and September, October, whenever that nomination comes out.
Appreciate the input. Mike, thank you, sir. Mike Schumacher of Wells Fargo. Important, thoughtful piece on defense spending and thoughtful comments there at the end about the future of the Federal Reserve.
You know, I don't get the sense that people are that fussed about this. And I think your comment earlier that this is an improvement from saying he was going to fire him, I kind of get the sense that's how people are taking it.
I do think there's a difference between some of the names, and I'll leave it at that.
I think
okay?
you are correct.
All right.
You don't have to leave it at that.
5 names there, and
some are better than
you
others.
figure the rest out. If it's 1 or 2 out of those 5, I think you'll see a very different market reaction to the other 3.
EM, what did you say, presidential puppet? You got EM dynamics?
White House puppet.
Yeah, White
We'll
House
introduce
puppet,
EM dynamics.
Yeah, and I think that you're right, the idea of financial repression.
Turkey tried this. It causes problems. Other countries have too.
Yeah, U.S., New Turkey.
Yeah, okay. We don't want that. And it's certainly not that right now. Let's be very clear about that. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. Former Barclays boss Jess Staley lost a legal battle to overturn his ban from UK finance over his relationship with Jeffrey Epstein. A judge siding with the Financial Conduct Authority ruling that Staley misled officials about his dealings with Epstein. The ruling all but ends Staley's attempt to restore his reputation. Meanwhile, the Federal Reserve released plans to relax a key rule which would reduce capital requirements for big banks. It also allows the banks to hold more treasuries and act as intermediaries in the $29 trillion market. The Fed board voted 5-2 to propose the changes. Bloomberg reported on the potential relaxing of the rule last week. And Israel's central bank governor Amir Yaron says his country's 12-day war with Iran will be a long-term positive for the country. He told our own Lisa Abramowitz, markets show Israel's geopolitical risk has been significantly reduced.
Markets are telling us that Israel's geopolitical risk has been significantly reduced. We're seeing it through the improvements or the appreciation of the shekel. We're seeing it through the reduction in the CDS of Israel. If the ceasefires continues, to go on into better economic activity.
Yaron also said Israel's Iran campaign costs the country about 1% of its annual GDP. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, reducing uncertainty.
The question is, who's going to pay for the tariffs? Reducing uncertainty would help, and also just what's going to be the final tariff rate and getting that settled. I think that's the path we're on.
In just a moment, we'll catch up with a very constructive Russell Brownback of BlackRock, live from New York City. You're watching Bloomberg TV.
Bloomberg launches our inaugural 25 African startups to watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We're integrated in every refrigerator, a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Equities at the moment firmer by 1/3% on the S&P, on the Nasdaq 100 up by 0.5. On the S&P 500 still within 1% of all-time highs. Under surveillance this morning, reducing uncertainty.
The question is, who's going to pay for the tariffs? The ultimate question of it is how much of it does show up in inflation. And honestly, it's very hard to predict that in advance. Reducing uncertainty would help, and also just what's going to be the final tariff rate and getting that settled. I think that's the path we're on.
Here's the latest this morning. Short-term bond yields falling as traders bet the Federal Reserve might cut interest rates in the coming months. Russell Brownback of BlackRock writing, the economy heads into this moment with structural strength. 2025 is likely a stagflationary outcome. Russell joins us now for more. Russ, good morning. Good to see you.
Thanks for having me.
Had loads of great feedback the last time you were on, and we were talking about all these shocks we've experienced, the Fed tightening, the regional banking crisis, the trade chaos of the last few months, and you talked about these points of resiliency in the U.S. economy. Just remind us all, what are those points right now?
Well, first of all, when you think about the private sector's balance sheet being pristine, both corporations and households. Secondly, you've got a structurally tight labor market. So the labor market's lost a little bit of velocity, partly due to supply constraints related to immigration, partly due to the uncertainty. But it's not job destruction. It's just a mitigation in job growth. And that's why the unemployment rate hasn't moved up yet. And then you've got structural investment in AI today, in general. The infrastructure build-out, data center and the like, we think that's 50 to 100 basis points of tailwind to growth every year between now and the end of the decade. And that doesn't even begin to factor in the potential productivity enhancements that come. So all of those things are these points of resiliency that have driven the economy through bouts of uncertainty over recent years. And we think that they'll be transcendent again this year.
If this is stagflationary or some level of stagflation, could it not be that bad? I mean, that's basically the implication of what you're saying, that stagflation isn't necessarily problematic for returns if there is this sort of structural investment underpinning it.
Yeah, absolutely. So the word stagflation comes from history when it was a really bad time. The word recession in general, in the industry today, I've only ever seen deep scarring recessions associated with shocks. We haven't had a garden variety recession in the U.S. since the early 90s. So when I say stagflation this year, I'm talking about at the margin. You're talking about slowing growth, that stays sticky high. Still a pretty good nominal GDP outcome.
We're not going to ask you who you want to be the next Fed chair, but there is a question about whether this environment does legitimize the discussion of waiting at the Federal Reserve actually be around where there is sort of an inflationary impulse that comes with the strength you're talking about.
I give the Fed a ton of credit for where they are. I think they're front-footed today. Core PCE inflation then was 4 3/8, so you had a 100% real rate. Today, backward-looking core inflation is 2.5. The policy rate's at 4 3/8. So your real rate is higher today. So with the setup that tariffs might or might not be inflationary, inflation's still above target, the Fed can now focus on the labor market. And so we haven't seen demonstrable weakness as measured by the unemployment rate yet. But if you get any modicum of weakness in the labor market, I think the Fed will react very quickly.
Are you concerned about a shadow Fed chair?
You know, listen, I understand the intrigue, the palace intrigue about all of that. I believe in the sanctity of the institution. I think there's a lot of very, very smart people, and they will be looking at the data and make the right prognostication and the right policy prescription for whatever the outcomes are. So I think that's very interesting. I love the history of the Fed. I don't think the independence of the Fed is in jeopardy.
If you had to game it out, if we were to question that independence, would that lead to steeper yield curves, a weaker dollar? Is that what you'd expect?
So, listen, I think that an important guardrail in general is the financial markets, and I think you saw that that's probably the closest to the money guardrail. You saw that happen and play in a pretty big way. And so I think the markets would protest any kind of degradation of that independence very quickly.
Do you lean against the weakness in the dollar that we've been seeing and certainly are seeing this morning?
Great discussion. I think on the one hand, you've got the status of the world's reserve currency, the dollar. That's not going anywhere. That's like trying to change 200 countries off the metric system. It's too embedded today. It's not going to happen. U.S. exceptionalism is about returns, superior returns in U.S. equity markets, higher yields and more ubiquity of credit opportunities in U.S. fixed income assets. The dollar is a different discussion. If the dollar is going to be engineered lower as a political matter, and you're a foreign investor, you might have a decision on the one hand, I'm going to keep my U.S. assets, but a different decision as to whether you want to hedge the foreign exchange exposure. So if it costs you 200 basis points a year, if you're a European investor, to hedge your U.S. equities, you might do that, but that's different than selling your U.S. equities.
Is it still the golden age of income?
It is absolutely the golden age of income. So glad you brought that up. Throughout all the uncertainty, what works is carrying. We love 3-day weekends because you earn your carry and there's no volatility in the market.
We all do, by the way.
Weekends anymore.
But when you can put together, through all this uncertainty, an investment-grade rated portfolio that yields 6.5% to 7% in a 2.5% inflation environment, getting these real yields, and because you own your duration in that front of the belly of the curve, you don't have all the implied volatility. That's the highest Sharpe ratio portfolio we've been able to put together in my entire career.
Are you a metric guy or an imperial guy?
I like both.
Yeah, I'm like this. I'm the same. I do distance in miles, speed in miles, and then temperature in Celsius.
Oh,
it's
no. Like a polymath.
You
can't do
that
that
in your head, Celsius to Fahrenheit?
No, I can't do that. I can sort of roughly sort of game it out, you know?
I'm
but I know that sort of mid-30s is triple digits, and that's how things
35
work.
is hot.
That's super hot. There we go. Russell, good to see you. You a mix as well? Do
No,
a bit of both?
absolutely not.
Just what are you? Imperial?
I'm sorry. It's just that's my upbringing. But I'm learning. I'm learning from you. You start talking in,
Mix of Europe, the UK, and, you know, sort of blend it together.
Yeah, I know. I'm not.
It's 28 degrees Celsius today.
Thanks for that.
You're welcome.
What's that in Fahrenheit?
82.
There we go.
I was going to quiz you.
Helping out the people in New York. Future mayor. Do you want to run? No? Independent? Don't fancy
Never know.
Russell Brown back of BlackRock. Russell, good to see you. Thank you, sir. Coming up on this program, Scott Cronin of Citi, Adrian Yee of Barclays, Neela Richardson of ADP, and the San Francisco Fed President, Mary Daly.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turns a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. they're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me. Now we're playing.
Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
the tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
the transactions,
Really a record-breaking moment.
Crypto VC is back.
and the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
As long as earnings are okay, the market can ignore a lot of the bad news.
The whole market looks pretty good, actually.
The market has been remarkably resilient.
Markets seem to be calling the all clear here.
We're going to see in the short run as the market can move higher.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. The third hour of Bloomberg Surveillance starts right now, 30 minutes away from some economic data in America. Before we get to that, we need to get to this. Tracking the latest developments down in Washington, D.C. Any moment now, a briefing in the Pentagon press briefing room with the U.S. Secretary of Defense, Pete Hegseth, and the chairman of the Joint Chiefs of Staff, Air Force General Dan Kane, on the latest from the events over the weekend, just how much damage was done in Iran.
Well, I think when it comes to how much damage was done, you've seen this administration really push back on the leaked report from DIA that was in the CNN and New York Times. I think constructively you need to look at the situation that even today, they probably don't have a precise damage assessment. Why? It takes a lot of time to get that data collection. Do you think the Iranians have a full, precise damage collection? We don't even know where the supreme leader is at the moment. Do you think they actually know on precise damage that was done to their nuclear facilities? Yesterday, they said their installations were, quote, badly damaged. But to get exactly how far they are taken back in terms of their capabilities, the IAEA said they don't know yet. It's months or it's years.
That news conference just moments away. When it begins, we'll head over to it and bring you some of the headlines. Also moments away, I mentioned some data at 8:30 Eastern Time. The highlight, there's a lot of it, but the highlight, it's got to be a read on the labor market.
Given the fact that jobless claims have been creeping higher when you take a look at the 4-month and 6-month moving average, a real question of whether we're seeing cracks in the labor market. We've had a number of guests this morning who have said absolutely we are seeing signs of weakening, but not necessarily weakness. That is going to filter into the parlor game that we keep talking about, which is who is going to be the person or the people who are going to be discussing this at the Federal Reserve.
We might be playing this game for a long time, right?
I think everyone's a little sick of it already, but we're going to be playing it and it's going to be great.
2 hours in and you're sick to death of the journal story.
I'm not sick to death of it. I just think that there's a lot at play underneath the market right now.
This is vintage Trump. He loves producing a moment. And right now, what he is producing is who's going to be the next Fed chair. And, you know, to a lot of our guests' point, this is probably better than him coming out and saying, I want to fire Fed Chair Jay Powell. It's more like, I might announce someone, I have a few names, palace intrigue.
A lot of palace intrigue right now. That news conference just moments away. Coming up this hour, we'll catch up with Scott Cronin of Citi with stocks near all-time highs. Adrian Yee of Barclays looking ahead to earnings from Nike, and the San Francisco Fed President Mary Daly as markets look for change at the Federal Reserve. We begin this hour with equities stalling near all-time highs. Scott Cronin of Citi is positive, writing, we believe higher margins support higher multiples. Ongoing technological advancements, think AI for one, will add yet another element to the productivity storyline. Scott joins us now for more. Scott, good morning, sir. Within 1% of all-time high. It's as if April 2nd never happened, Scott. Did April 2nd happen?
You know, Jonathan, the way I think about it is that it's, you know, what doesn't kill you makes you stronger. And April 2nd happened. It brought us to the edge of the cliff, if you will. We looked over the edge at what that magnitude of tariffs might have done, and it would have been very disruptive to a broad array of company-specific business models. So what's happened here, it happened. It caused the correction. It caused some right sizing in terms of valuations and a new, refreshing look at the fundamental setup. And as we've stepped back from that, I honestly think, along with the DeepSeek phase back in the early part of the year around AI, the combination of the two have actually set up very well for this rally towards new highs.
It's got a lot of questions about the Federal Reserve story out of the Wall Street Journal overnight. Lisa's already sick of it.
Okay.
You're not sick of it?
Well, it's just that it feels like it's kind of missing the point of what actually is the debate, which is the economy weakening?
Agreed.
Is inflation going down?
There we go. So let's continue with that, Scott. She's not quite sick of it, just wants to focus on other things. How Fed-dependent are these all-time highs, Scott? Are we even thinking about rate cuts being needed to drive this equity market higher?
You know, Lisa, I'm not going to say I'm sick of it. Jonathan, I agree with where you're going with this. The way I look at it is that the market, the U.S. equity markets are very good at dealing with incremental change. They're not so good at dealing with shock effects, okay? Liberation Day was a shock effect. DeepSeek was sort of a shock effect. What's happening with the labor market is a gradual unfolding more negative narrative in terms of the consumption trends. We highlighted this with Q1 earnings. We think it's a natural extension of where we've gone in the post-COVID world, and it's kind of setting up for what we think is going to be sort of a more mixed consumer dynamic at work that's going to end up influencing where consumption patterns go, probably where broader labor patterns go, but with a very mixed or almost muted impact on U.S. equities.
Scott, something Lisa's been great about is just drawing a distinction between the market and the economy. The market's not the economy. With all of that in mind, how do you think about leadership in the stock market?
Yeah, well, once again, I'm going to agree with Lisa on this. We for years we've been saying, hey, look at don't confuse Wall Street, i.e. the S&P 500, with Main Street, i.e. the broader U.S. economy. Wall Street's beating to a different drum right now in terms of earnings resiliency. As you pointed to at the top of the show, our focus on margin improvement, productivity enhancements over time, all of these provide a fundamental tailwind for different parts of the market at different times. Right now, what you're seeing is this, sort of maniacal focus on growth triggered by the AI investment spend, which is not going away. We're probably more comfortable in that now than we were, say, a year ago. And what it's doing is perpetuating this growth influence that's reading through, obviously in big tech, but it's reading through to the broader index levels. And we think all of that is still in very good place. We've been overweight tech, comm services going into Q2. Don't see any reason to really change that at this point. That's where the leadership is. If anything here, what we're looking at is probably a little bit more risk of a melt up akin to the 97, 98, 99 timeframe in U.S. equities before we got to, eventual bubble burst.
What an interesting final point. Scott, really smart, as always. Scott Cronin there of Citi on this equity market. Scott speaking to what we've heard a few times now. The pain trade is higher. He's looking potentially for a melt up that we saw way back in the 90s.
And this is what a lot of people have said, that still people are positioned for weakness that we might be seeing on the margins in economic data. But the reality is the market's moved on, and they've moved on to AI that will replace us all and make labor.
Is that what's going to happen?
I mean,
okay,
I think
this is so gloomy.
Okay, let's go to something heavier.
We're going to move on to something much heavier. We're tracking the latest developments out of Washington, D.C. Promise you an update on this briefing, which is underway with the Defense Secretary, Pete Hegseth. Let's take a listen.
What this assessment, a linchpin assumption, you know what that is? That means your entire premise is predicated on a linchpin. If you're wrong, everything else is wrong. And yet, and still, this report acknowledges it's likely severe damage. Again, this is preliminary, but leaked because someone had an agenda to try to muddy the waters and make it look like this historic strike wasn't successful. I'm going to get to the chairman in a moment because he's going to lay out the particulars for you based on his professional military experience. But here's what other folks are saying. The DIA that put that report out says that this is a preliminary low confidence. It points out that it's not been coordinated with the intelligence community. How about the Israeli Atomic Energy Commission? There's the devastating U.S. strikes on Fordo destroyed the site's critical infrastructure and rendered the enrichment facility inoperable. Have any of these quotes made their way into the New York Times or the Washington Post? MSNBC? CNN? Any of these quotes? How about this one? This is a new one from the UN, the United Nations. No friend of the United States, or certainly Israel often. Here's the head of the UN Atomic Energy Agency this morning, Rafael Grossi. U.S. and Israeli strikes caused enormous damage to Iran's nuclear sites. Don't take my word for it. How about the IDF's chief of staff? I can say here that the assessment is that we significantly damaged the nuclear program, setting it back by years. I repeat, years. The Iranian foreign minister, the spokesman, our nuclear installations have been badly damaged, that's for sure. I'm sure that's an understatement. John Radcliffe, the director of the CIA, putting out a statement just last night. CIA can confirm that a body of credible intelligence indicates Iran's nuclear program has been severely damaged by recent targeted strikes. This includes new intelligence from a historically reliable, very different than preliminary assessment with low confidence. He's saying historically reliable and accurate source and method that several key Iranian nuclear facilities were destroyed and would have to be rebuilt over the course of years. CIA continues to collect additional reliably sourced information to keep appropriate decision makers fully informed. How about DNI Tulsi Gabbard yesterday? She writes, and I quote, "New intelligence confirms what POTUS has stated numerous times. Iran's nuclear facilities have been destroyed." Institute for Science and International Security President David Albright, overall, Israel and U.S. attacks have effectively destroyed Iran's centrifuge enrichment program. Time and time again, I can go down the list. Those that understand, those that see, those that do proper assessments recognize that what the United States military did was historic. And again, before I pass it to the chairman, because you, and I mean specifically you, the press, specifically you, the press corps, because you cheer against Trump so hard, it's like in your DNA and in your blood to cheer against Trump because you want him not to be successful.
That was a press briefing with Pete Hegseth, the Defense Secretary. Exactly what we expected. Some heat for the press given the coverage of the strikes over the weekend. Still not clear how much damage was done, but he seems to have a high degree of confidence that a lot of those sites in Iran, the nuclear sites, were totally obliterated.
I think we really need to wait for more of the data collection to happen. This is sensitive material to get the precise understanding of what actually was done to these nuclear facilities and how far back this puts Iran. You had Rafael Grossi talk about the fact that Iran can, of course, rebuild their nuclear facilities, but if they're really damaged, this will take years. At the same time, the president is still looking for a diplomatic off-ramp. He said yesterday, the United States, will be meeting with Iranians next week.
I'm not sure this is a press briefing. It sounds more like a press beatdown at the moment, doesn't it?
It sounds like someone got on the phone with Pete Hegseth and said, please go out there and tell them what we think of their stories, and that is exactly what he's doing.
And he's doing just that. Any headlines, we'll bring them to you. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Ahmed. Hey, Yahara.
Hi, John. The pressure is piling on the Fed chair. The Wall Street Journal reporting that Trump may announce Jay Powell's replacement early. The new chair wouldn't take office until May, but the Journal reports Trump could make an announcement as soon as September. The president said yesterday he has 3 or 4 people in mind for the job. He's called on Powell to lower rates by 2.5 points. Meanwhile, consumer products giant Mars is facing headwinds in its bid to acquire competitor Kellanova. The European Union has opened an in-depth investigation into Mars $36 billion bid for the maker of Pringles chips, Rice Krispies, and Cheez-Its, my personal favorite. The EU antitrust chief saying the deal would boost Mars' already strong product portfolio. And we end on the NBA draft. The Dallas Mavericks have the next face of their franchise after selecting Cooper Flagg with the top pick. The 6'9" star won multiple National Player of the Year awards during his lone season at Duke. Following the Mavericks, the Spurs selected Rutgers guard Dylan Harper, and the 76ers picked Baylor's DJ Edgecombe. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later on. Up next on the program, the Morning Calls, plus Adrian Yee of Barclays with a preview of Nike earnings due out later on this afternoon. The opening about 1 hour, 17 minutes away. Stocks are higher, positive by a third of 1%.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The opening bell is 1 hour and 14 minutes away. Equity futures positive by a third of 1%. On the Nasdaq up by 0.5. On the Russell at the moment, positive by a third of 1%. Just want to touch base with the bond market briefly and talk about the very front end of the yield curve. It's starting to get more interesting. It's 5 consecutive days now that we've seen yields lower at the front end of the curve on twos. So we're back down to 3.76 and we're heading lower, down another 2 basis points, opening the door to, I think, a live discussion in July, a live discussion about reducing interest rates. And even if they don't cut, we're expecting the possibility of dissent. And then just on the margin, I know you don't want to talk about it, but we should talk about it. On the margin, the prospect of a new Fed chair being announced sometime soon to take over from Powell next year.
You know, and this really goes to Neil Dutta's point. Are we already seeing a shadow Fed, and is that what you really have seen in the price activity? Because since that Fed meeting last Wednesday, we have seen the probability of a September rate cut go from 60% to almost 90%, and it comes to the heels of Chris Waller, who made comments, as well as Mickey Bowman, saying that July could be that live meeting, along with some data that potentially is disinflationary. Just wait for PC tomorrow. I'm excited.
Are you excited for that?
I am.
What about claims at 8:30?
I actually think it'll be really interesting. Very
We've got
excited
Lisa's
about that.
attention for the next 40 minutes. Good news.
Definitely your option.
Euro dollar right now 117. That dollar weakness still coming through in the FX market. Another session of euro strength. 117, the highest going back to 2021. That's the price action cross asset. Let's get you some morning calls. First up, Morgan Stanley raising its price target on Microsoft to 530, citing upside for the company's Azure cloud service. That stock is up by 0.3%. Your second call from JP Morgan cutting its price target on Apple to 230, expecting macro uncertainty to weigh on iPhone 17 demand. That name is down by a third of 1%. Or rather a 0.1%. And your third and final call, it comes from RBC, upgrading General Mills to outperform, noting encouraging guidance despite a sluggish backdrop. The stock is up this morning by 1%. Let's turn to another company reporting earnings. Nike results due out after the closing bell. Adrian Yee of Barclays has an equal weight rating on the stock, writing the following: we see more pressure in the near term, which could be exacerbated by the overhang of tariff pressures and demand uncertainty. Adrian joins us now for more. Adrian, welcome to the program. Let's just go from the top. What are you telling clients about what to expect later on?
Yeah, so the company is reporting its fiscal fourth quarter. They have been doing a guidance philosophy of just doing the out quarter. So we expect to get lower guidance on the fiscal first quarter ending in July, but they probably will give us some color on FY26. And we certainly expect that the kind of post-earnings consensus revisions could be revised down to kind of the 170 to 180 range. That's about, call it 7% lower than the street. That's not bad for a company that's been lowering earnings for 4 or 5 consecutive quarters. So while we're equal weight and we think they're going to lower, the sentiment is negative. Stock has been underperforming last year, year to date, and since the last earnings call. So I would say that we're equal weight, and we actually, dare I say this, are looking to be more constructive, believe it or not, in a contrarian sort of way as we go into the next couple of quarters, because certainly Elliott Hill is doing the right things.
Adrian, let's talk about one particular region before we get to what the CEO is doing. I want to talk about Asia, and more specifically maybe China. When you think about that continent at the moment, are you more worried about that continent as a source of demand or a source of supply?
Both. I mean, it's unfortunately, the demand outlook, particularly for Nike and the footwear industry, they have been incredibly and heavily so. This is very, very company specific. So outside of the overall macro trends that are pressuring the China market, we've seen some deceleration or second derivative kind of slowing in the negative impact on that macro environment. Having said that, for Nike, they were extraordinarily promotional. They were trying to get through inventory last year, so they need to anniversary that. And that's usually not as a good year for margins, and it's never a great year for top line sales. In terms of supply, Nike has about 17% coming from that region, significantly more exposed than other footwear manufacturers. And so we expect to hear from them as well, pressure on this incoming August quarter coming from the tariffs as well.
Do we have a sense, Adrian, of who's going to end up paying for them, of whether Nike is passing them on in terms of higher prices to consumers, or whether that just means tighter margins going forward?
It's a little bit of both. And what I would say is thematically, what we think Nike is going to talk about are kind of price increases that will obviously start with the July, August back to school timeframe. Our supposition or the expectation that we have for kind of Nike's pricing philosophy is that under $100, probably a do nothing scenario, between 100 and 150, selling price, probably about a $5 price increase. And we're expecting about over $150 shoes, very selectively, but on average, probably about a $10 price increase. All in, that's about a 4 to 5% total, what we call ASP, average selling price increase for them. So the main and biggest way to solve this tariff problem is to pass that on to the consumer. But also through the supply chain, we also expect a shared environment, both with their vendors and with their marketplace partners like a Dick's or a Foot Locker.
You have a really complicated job right now. I'm trying to decipher what is macroeconomic and what is name specific at a time when we were talking about Nike losing market share to other producers, whether it's On, whether it's Hoka. How much is Nike in a position to keep some of those higher income earners, these higher income consumers that are able to pay some of the higher prices to offset some of the otherwise what would be margin compression from tariffs?
That is the million-dollar question, and you are spot on with identifying that as the difficulty, right, for Nike specifically. If you are On running, we've already seen On raise prices, right, when it launched a new product in Q1, successfully passed through brand equity, mind share. It's all there, and they passed it through without any problems. If you are Nike that is struggling to regain mind share, it's really, really hard to raise prices while trying to do that. So there's this weird sort of juxtaposition of I need to raise those prices in order to offset this margin pressure, and yet I don't have the brand equity and the mind share that the consumers want to pay more. What I will also say is that they are bringing to market a number of new, untested, a whole swath of a dozen new releases to offset what we call the big three, the Air Jordan 1, the Air Force 1, and the Dunk, right? Tried and true, decades-long, winners, and you have new product into the cycle. So for Nike, it's a very company-specific kind of problem for them where they're trying to have this push-pull environment of offsetting the tariffs, but then needing to sort of induce both customers to come back as well as their marketplace partners, right, to give them shelf space.
And any evidence yet that these new brands like Nike Skims is actually working?
So we're all probably going to hear about that. So Nike X Skims, like last week. So there's two big announcements intra-quarter that happened. The first of them was that Nike is now going to go with Amazon, right? That's a great positive in terms of a new channel partner. So new version of wholesale sales. So we actually like that. That's a net positive. At the same time, about a week ago, I think it was a week ago, they also talked about the deferment or the deferral of the Nike X Skims. So that actually is going to get tabled. People have said that that's sort of a negative. And what I would just say is that the company has so many different initiatives that it's driving. And of those two, the bigger one that's going to impact the business is the Amazon relationship. So I think they're reorganizing and re-strategizing on where is the biggest bang for management's time, the capital, and the efforts of the company. And I think you're starting to see a lot of those decisions being made in real time.
Adrian, good to catch up with you ahead of those numbers later. Adrian Yee there of Barclays on Nike talked about the strategy of Elliott Hill and the difficulty as well. The mitigation tariffs, mitigation strategies for the tariffs. You've got to get that brand heat back, the innovation, refresh the cycle at the same time. That is tremendously difficult, and address the problems they've had with distribution over the past few years.
Where they tried to go more to just come to our website and buy it rather than distribution of a number of different stores for sneakers. I just wonder how you deal with this, given the fact that they really got out of the running loop. And Hoka and On Holding really took over how you get that pricing ability to really offset margin compression.
That's why they're coming to market with a number of different brands like Nike Skims, seeing if they can get people back into this excitement. At the same time, though, people still love Air Jordans and Dunks. You have to keep the old brands as well. So they have to do a lot at once.
The people, but not runners. And that's the issue.
Not runners.
One of the issues. I think it speaks to a much bigger issue at Nike. And that's the problem. It's not that you lose the running sector and you've lost everything as a company. It just speaks to them taking their eye off the ball of a much, much bigger issue over the past few years.
Just, my on-the-ground research with the sample size of one at home is that the resale market for Air Jordans hasn't been as hot lately, and it's not necessarily the same type
I have a pair of Air Jordans.
Still read on things?
That's what I read on things.
That's interesting. Do you know what is hot at the moment?
Yeah, these like European brands and some other stuff. I mean, it's all these sort of esoteric brands.
Kids are doing the trading still.
Yeah.
Nice.
Well, I mean, but there's different kind of trading, and it's sort of...
Where do they source the sneakers from?
Well, a lot of it is secondary market, so a lot of it is sort of used stuff, but in perfect condition, and then they try to keep it perfect.
So they don't wear it?
So they don't wear it, or they walk really stupidly.
So you don't get the crease?
So they don't get the crease. They walk like really dumb.
That seems pointless, but okay. Seems to be making a lot of money, though, from what you've told me. Nike this morning, up by 0.6%. Up next, a double dose of economic data. We'll get jobless claims and durable goods just around the corner. Lila Richardson of ADP here to react, and we'll get the breakdown from Mike McKee. From New York, this is Bloomberg.
flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that not enough guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on.
I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
60 minutes away from the opening bell. Equity futures at the moment positive by 0.3% on the S&P 500, within striking distance of record highs. In the bond market, on a 2-year bond yield this morning, yields declining for another session, a fifth straight day. We're down by 2 basis points, 375.61. Going into this economic data, we're looking for jobless claims this morning. Claims, the estimate 243, the previous number 245. With the data, let's cross over to Mike McKee. Good morning, Mike.
Good morning, John. Well, we've got a lot of data to talk about. Jobless claims coming in a little slower than some of the others, so let's do durable goods. Durable goods orders on a headline basis hasn't crossed yet, but ex-transportation up 0.5%. The capital goods orders, non-defense ex-air, what we call core durables, up 1.7% after falling 1.5% last month. So this is good news. Businesses still spending. We will have to see what the breakdown is there. Here's jobless claims. They fall to 236,000 from 246,000 last week. There were a lot of people who thought this may be a seasonal adjustment problem that pushed claims up in recent weeks because school was ending, and maybe that's partly the case here, because we do see a fall of 10,000. Certainly doesn't suggest that the economy is falling back. The advanced goods trade balance comes in much bigger than expected, $96.6 billion. The forecast was for $86 billion. Imports were flat on the month after falling 20% last month. So that's an interesting number. We maybe got some rebounds in orders after the president put a lot of the tariffs on pause. And finally, GDP, this is the third reading. It comes in at -0.5%, which is significantly worse than what we had seen in the second reading, which was a 0.2 decline. Personal consumption was only 0.5%. It had been initially reported as 1.2%. So it's going to be interesting to take that apart and see what exactly is going on with the GDP numbers, although even they are about 2.5 months old now.
Mike, can I just ask you just to compare and contrast what's happening with initial jobless claims and what's happening with continuing claims? The two stories, the two pictures maybe you could paint looking at those two data points at the moment.
Well, continuing claims have been interesting because they have moved up and down, and the trend should be, we thought, that maybe people were having a harder time getting a job, and that comes out in today's numbers. We go from 1,937,000 to 1,974,000 in continuing claims. Continuing claims would give you the idea that companies are not hiring at this point, which is pretty much the narrative that we've gotten. Jobless claims, though, the initial jobless claims are suggesting that companies aren't firing people either. So everybody's still sitting on their hands waiting for tariffs, waiting to see what the Fed's going to do, waiting overall for some indication on the economy.
Mike McKee, thank you, sir. With the latest on the economic data, conclusion, it's getting harder to get a job?
To me, I think that you nailed it. I mean, it really is continuing claims at the highest level since 2021, since November of that year, because people aren't getting a job so quickly. And it speaks to this question, can we be in this stagnant jobs market for a long period of time without a material weakening, at least in confidence, if not in the actual economy?
Joining us now is Nita Richardson of ADP. Nita, good morning.
Good morning.
You and others have talked about this so-called low churn dynamic in this labor market. Is it getting harder to get a job?
It is, and it is especially for new graduates. We've seen that be a predominant story. So what companies are doing is they're taking a pause on welcoming younger workers into the workforce. They're taking a pause on hiring, maybe even hiring senior roles. They're still in that wait and see mode, a slowdown in the hiring momentum that we saw at the beginning of the year.
Can there be this low churn type of dynamic for a really prolonged period of time without there being some at least perceived weakness in the labor market that becomes reality?
You know what? It's interesting how concentrated hiring has become. If you look at that last government report, what you see is 96% of the hiring has come from healthcare and leisure and hospitality. 2/3 came from healthcare. There's a lot a company can do other than let go of a worker. One thing they can do is cut hours. 55% of workers in the United States are hourly. So we may not be seeing the slowdown in the initial jobless claims numbers, but they are showing up in hours worked. And I think that's a number to watch. Continuing claims is a number to watch. And then the concentration of the employment that's coming, and mostly in a very non-cyclical sector, a structural sector like healthcare, that's an indication that everybody else is in wait and see mode.
You know, this is such a difficult market to get a hand around because is it weakening or is it weak? Is this normalizing or is this really problematic? And does it highlight a potential crack to come? What's your take on that? What's the sort of tell?
There's nothing normal about an economy that's not dynamic, especially a U.S. economy. It feeds on dynamism. So I would read the labor market as in a stasis. There's no movement. And that doesn't play out. You asked me how long does this happen until we call it a weak market? Well, it shows up in productivity. If you have a labor market that's not dynamic, that is not, ingesting new talent, is not moving, and workers are going to higher paying jobs and being promoted, that feeds into the productivity numbers, and we saw that the last read on productivity was quite weak, 1.4%. The power of exceptionalism comes from not just workers, but output per worker, and that's what's slowing. That's where you're going to see the weakness first.
Neil, you say it's harder to get a job, but is it easier to get fired right now? Are they the same?
Depends who you ask.
It can be quite easy to get fired depending on what you do.
I mean, take out some of personal issues. Are companies laying people off?
It doesn't look like that. It looks like people are holding on to their workers. And in fact, we've seen at ADP in the data, in the payroll data, not only are they holding on to existing workers, they're actually rehiring workers that have left and come back. And I think, to your question, hiring has become more cautious. They've changed the composition. Employers are less likely to take a new bet on a worker they don't know. They'd rather hire someone they do know who can onboard quickly, who's very efficient, or not hire at all. That's what we're seeing in the data, and that again feeds back into the lack of dynamism that we might be experiencing.
I'm going to ask a question Jonathan always asks. If you're hired right now, you have a job, are you going in and asking for pay rises?
You're probably going in and asking for a pay raise, yes, and not getting it. So yeah, the ask is there, but the action is not. And you can see that in how our initial job switcher data is looking. Yes, you get a bump from switching jobs, but it's not the same bump that you would have gotten 2 years ago. And it's not the premium of getting that bump versus what your pay growth would have been if you stayed at your previous employer isn't really there. So yeah, you can ask. Be careful how much you ask for.
Keep asking. Keep asking. I always say that. Keep asking. The companies don't want you to ask, do they?
Well,
they want to have that leverage, get comfortable, not earning enough.
Yeah, keep asking because the firing rate isn't that high, so, go for it.
Keep pushing. Mike McKee's going to keep pushing. Mike McKee has more data for us. Mike, you wanted to focus on the trade numbers, right?
Well, trade numbers and durable goods, there's a couple of interesting things here. The exports for the United States fell 5.2%. That is the most since the largest drop, shall we say, since 2020. It isn't clear why that would be, because prices for U.S. goods have been dropping as the dollar drops. So this is, in the trade business, pretty much a story about exports not living up. Now, on the durable goods side, we saw a rise of 16%, which is the largest since 2014, an increase of 16.4%, but it's almost all Boeing, 158% rise in Boeing non-defense aircraft sales or orders during the month. And some mixed news underneath, because factories, the stuff we normally think about, like machines and primary metals, fabricated products, those rose, but computers, communications equipment, electrical equipment, and appliances all fell, orders for those during the month. So it isn't clear exactly how strong durables are, even though the headline number is pretty strong.
Mike McKee, appreciate the update. Mike, thank you. Nita's still with us. Nita, wanted to turn to you on the Federal Reserve just briefly. Matt Lazzetti at Deutsche Bank said this is not uncertainty. He says you can see in the forecast a lot of division. Do you hear and see a lot of division?
Yeah, I think that's to be expected. When things are really bad or really good, you should see a lot of consensus. The gray areas are where it's hard to drive that consensus, and it really depends on whether you want, as a policymaker, to make a preemptive move because you may think that the economy is weakening and rates are too restrictive, or you're still in wait-and-see mode. And you can see that various actors are responding to different parts of the economy. It's like we all are looking at a puzzle with missing pieces. And you're trying to figure out what's in the center of that puzzle, and you don't have the pieces at the ready. And those pieces probably won't materialize for months, and in some cases years if you're talking about long-term capital investments. So you're guessing. You're guessing what the center of the economy is. You're guessing about policy over the next 6 months, over the next even 6 years, because many companies that are manufacturers are making 10-year investments, not 3-month investments.
Do they have sufficient information to sit there and say, we're forced to make a guess right now, and we've got to make a call? Is that as soon as July, or can they keep on waiting? Because the chairman keeps saying, we can wait, the economy's solid. Is the economy solid?
If you're looking at the unemployment rate, you can go with a solid message. It has not budged in a couple of months, and it's still quite low if you look at it historically. So there is a reason to wait. If you're looking at an economy where, if you look at all the typical median projections, they are expecting slower growth, higher inflation, higher unemployment. If that is your forecast, you might want to make a preemptive move, and that's what some of the committee is doing. But overall, the consensus looks like to wait and see, and they have the data support to do so.
Nita, it's good to see you, as always. Thank you. Nita Richardson there of ADP. Equities at the moment positive by a little more than 0.25% on the S&P 500, with an update on stories elsewhere. Back with us with your Bloomberg Brief. Here's Yahara.
Hi, John. Recapping the flurry of data we just got, U.S. made good exports fell 5.2%. That's the largest drop since 2020. Meanwhile, jobless claims fell to 236,000 from 243,000 last week, and continuing claims came in at the highest level since November of 2021. Meanwhile, Vice President J.D. Vance is set to headline a political fundraiser in Nantucket next month to rally support for the GOP ahead of the midterms. Sources telling us here at Bloomberg, tickets run as high as $250,000 per couple to be part of the host committee and $100,000 per couple to attend. And the feud between President Trump and billionaire Elon Musk is producing a potential winner in Jeff Bezos. The Wall Street Journal reporting the Blue Origin founder has spoken to President Trump at least twice this month as he tries to bag more government contracts. Notice we did not cover the drama around his wedding in Italy. That's your Bloomberg Brief, John.
Yahara, what was the price of that wedding? Do we know?
No, not yet.
What did it come up to? 50 million? I saw a number like 50 million.
I mean, the number of outfits, the number of people, the number of flying, but we're not covering it. I'm not watching.
I think big weddings, I just think it's too much.
Well, a 3-day event could cost between about $64 million to $76 million.
Wow.
This is according to some individuals talking to
Do you really want to be at your own wedding and not know who the people are that are attending the wedding?
I think they know who the people are think that it's who's who of the world. You think that they don't know.
There's a number that gets like those weddings get too big.
I mean,
you
it's
pretend
difficulty when you've got family members coming in who all like hate each other, and they're coming in. You don't know any of them.
Family
What's the
members,
point?
Leonardo DiCaprio,
This is experience
Mick
speaking.
Jagger, Oprah Winfrey, Orlando Bloom.
Bramo speaking from experience, all right?
Let's move on.
Up next, the San Francisco Fed President Mary Daly joins us live from New York City. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jumana Versace in Doha, Qatar, and this is Bloomberg.
The opening bounce 44 minutes away. Your scores look like this: positive by a third of 1%, getting closer and closer to all-time highs on the S&P 500. On the Nasdaq this week, already there at another record, up another 0.4% this morning. Just briefly in the bond market, yields lower at the front end of the curve earlier on this morning. That's where we stay. We're down another 3 basis points, 374.59, as traders begin to boost bets on interest rate cuts, particularly following reports that President Donald Trump may fast-track announcing his pick to succeed Fed Chair Jay Powell. The Federal Reserve has a lot to think about already. And joining us now to share some of those thinking is San Francisco Fed President Mary Daly. President Daly, welcome back to the program. It's good to catch up with you. I want to start with this data, and maybe we can spend some time on the Palace intrigue later on. Jobless claims, initial claims lower than expected, continuing claims higher than expected and creeping higher over the past few months. From your vantage point, President Daly, how much weight would you put on one versus the other, and what's the labour market picture look like in your point of view, your opinion?
Well, the labor market's shaping up to be solid, and the data today confirmed that. Now, continuing claims are going up because it takes a little longer to find a job. That's consistent with the hiring numbers just being slower as the economy comes to a more sustainable pace. But when I look at the labor market, there are really no warning signs that it's weakening. We'll continue to watch that, but right now it's progressing solidly, although more slowly than before.
President Daley, a lot of people have said that it is a data-dependent Federal Reserve, and yet we haven't seen enough data to really understand whether inflation is the primary objective or whether it really is some of the weakening that we've seen in the labor market, albeit from a strong place. When will you have enough data to really make that determination?
Well, one of the challenges of central banking that you just have to accept is that we never have perfect data, so you're always making judgments, and you want sufficient data to make a judgment that is really going to be best for the American people. So right now, we have incoming information on the labor market, which does not signal real weakness. It just signals slowing. So we'll continue to watch that. And then on inflation, the data have been good so far coming in. If we were only backward looking, we would say, oh, it's time to adjust the interest rate. But we have to be forward looking, and then you have to make judgments about how you think inflation will shape up going forward. And there I really see three scenarios, and I'm leaning towards one that I'll tell you more and more, but the one scenario, of course, is that it's just delayed. The tariffs are going to have some impact on inflation. It is, after all, an increase in costs, and that will be a more persistent effect. The second opportunity or possibility is that it's delayed, but it will be a one-off. And then the third, of course, which I think is increasingly possible, it's not my modal, but it's increasingly possible, is that this just doesn't amount to as much as the models in history would tell us, because businesses find ways to absorb the costs and they split it down the production chain, and ultimately consumers pay less of that. So I think those last two scenarios, it's delayed, but it's a one-off, or it doesn't materialize to the extent that the models would suggest. Those are where, you know, I'm putting increasing probabilities, and we'll just have to collect some more information to make a decision. But, you know, ultimately, we can't wait for perfect information or we'll be behind, and we can't do that to the American people.
It sounds like, President Daley, you're leaning toward a sooner rate cut if it is confirmed that this tariff impulse isn't as inflationary as people expected. Is that correct?
Well, sooner than what? I mean, my modal outlook has been for some time that we would, you know, begin to be able to adjust the rates in the fall, and I haven't really changed that view. It does seem like that. Of course, if the tariffs are a one-off, you can look through them, and if they're just not going to materialize, then you have to watch both sides of the mandate. And I think that's really important. It's not one or the other. It's both sides of our mandate that have really come into frame since we brought inflation down from the really high levels to something that's closer to our target. Ultimately, we have to watch both sides, and that's what I'm doing. And then the fall looks promising for a rate cut. I don't know for sure. I mean, we have to be open about what we don't know. Humble is, I think, the word that comes out of the inflation run-up. And so, but we will, you know, there's a lot of differences of views on the committee. I see that as a real positive right now because people bring their perspectives, and the data will guide us to what is the one that ultimately looks like reality.
President Daley, John was talking about the palace intrigue, and I do wonder about how the increasingly political overlay to the Fed has complicated your messaging, given that there is this debate about the dual mandate, et cetera. How much has it affected the way that you communicate?
You know, not really. One of the things that I recognize on a regular basis is if I go out and talk to the people who live in the 12 Federal Reserve districts, so that's 9 states, very diverse states in the West, they don't actually bring this up at all. What they bring up is, what do you think is going to happen to inflation? Will you be able to restore inflation to 2%? Will you be able to restore price stability? Do you think the labor market is going to be preserved during it? Because ultimately, I really want both jobs and lower inflation. I want to be able to get ahead. And so far, the people in my district are cautiously optimistic overall, thinking that the economy is weathering some of the worst concerns and the uncertainties, but continuing to move along. So cautiously optimistic is where they are, and I think that reflects what's on top of their mind, less about what's happening in Washington and more about what's happening in their lived experience in their communities.
So, President Daley, would you dismiss some of the discussions around shadow Fed and all of that as simply palace intrigue and not necessarily affecting what would happen on the Fed? Are you concerned about that?
You know, ultimately, what I'm concerned about is the two mandates Congress gave us, full employment, price stability. There's work to do there. That's where all of my focus is. And the Federal Reserve is an institution. It weathers a variety of different points in time, ultimately because we only think of one thing: how our work can further the American people in their lives and livelihoods, and how we do that through our congressionally mandated goals. So that's what we think about. We've had a durable history since 1913, and I would consider that to be continuing to do our job well.
President Daley, one argument we've heard to reduce interest rates sooner than maybe, say, the fall as you Fed believes that the policy rate is still restrictive. Does that not convince you enough right now?
Not completely, because remember, inflation's been above our target for some time, well above our target during periods of time. And there's a sense where people really want us to get that down. Inflation is a tax on people, and every time we let people continue paying that tax, it erodes their well-being. So I'm very focused on getting inflation down to 2%. Us being sure that we're on that sustainable path, as long as the labor market doesn't show signs of weakening, is really important. So you have to make a view, you have to have a view about what you think tariffs will do to inflation. Now, my own view is that they will potentially raise inflation. That's my modal outlook, but they should dissipate over the period. It's not going to be something that builds into inflation expectations, and thus we really have to lean against it. But we can't just be assuming we know just because that's our modal outlook. We have to really collect the information and understand. Remember, data dependence isn't a backward-looking activity. It's a forward-looking activity. Right now, we're looking forward by talking to our contacts, and they still feel uncertain about what they will do. They're going to try to pass some along, but they, as a number of people you've had on your show have mentioned, firms don't have all those abilities, whether they're managing their brand or just they have exhausted consumers who can't take anymore. That's what we're waiting to find out. But I don't think we're behind in our waiting. We've got policy in a good place, the economy's in a good place, and that's what we'll continue to monitor.
President Daley, how much of a lesson was it last year when the Fed cut by 100 basis points only to see long-term yields rise significantly in the face of growth and inflation expectations? Is that something that you worry about could happen now?
You know, really, financial markets are an input to my decisions, not an output that I'm worrying about. And ultimately, you know, we want to see financial conditions align with what we're trying to do for the economy, and we'll adjust as needed. But, you know, we make policy. There's many things that affect yields. We make policy that we believe will be, with the lags in monetary policy, supportive of both of our goals. And so I don't spend a lot of time wondering what the bond market will do, especially given there's so many things going on in the bond market right now. It's been quite volatile. So really it's about what do financial conditions overall do, and what does that do to growth and activity and inflation? Does it restrain it or support it? And that's where my focus is.
Final
or is it
question.
an input?
Just quickly, President Daley, just want to squeeze this in. What would life be like with a permanent role in Washington, D.C. compared to, say, San Francisco? How would that feel?
Hotter. But seriously, you know, one of the things that my experience with the Federal Reserve is you have to contribute from wherever you sit. And that's what we all do when we get around that table. There's 19 of us, and we don't think about who is in what role. It's really how do we debate, discuss, bring our best thinking and our best disagreement to bear so we can make the right decision at the right moment for the people we serve.
President Daley, appreciate your time. Very diplomatic, as always. There's a better climate on the West Coast, right? California.
Oh, it's just awesome. No humidity.
I know.
It's 53 degrees today. It's 84 in D.C.
What is that in...
Swampy down in Washington.
But it could have been, it's hotter.
Here the money's better on the West Coast too.
Figuratively and literally.
It's important as well. From New York City this morning, good morning. Thank you very much for choosing Bloomberg TV. This was Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
there is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were gonna probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is gonna get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we don't want to lose you, Emily, in all of this?
Stargate, put that name down in your books. What we're undergoing right now is sort of the largest infrastructure bill in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
All right, we are pushing towards that record on the S&P 500 futures higher. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, the chips are up. Micron issues an upbeat report while NVIDIA reclaims the throne as the most valuable company in the world. And as we approach the second half, Barclays sees further gains ahead for stocks, while Goldman is betting on more volatility in this market. Plus, it's game on for bank stocks. Wall Street firms are set to have a revival thanks to looser regulation and a rise in deal making, as well as this elevated interest rate environment. Katie, what are you watching this morning? Happy Thursday.
Happy Thursday. It's almost Friday. Let's start with the chips because Micron, as Matt said, its earnings topped estimates. You had the AI equipment maker give a rosy forecast as it looks to expand its reach to EV and gaming chips. Shares only up about 0.8%. They were up higher initially after the numbers, but came in a little bit as the call went on.
All right, so we're going to focus in on the rise, the rally in tech stocks. NVIDIA obviously leading the pack there, on track to extend gains after closing at a record high. It's added nearly $1.5 trillion with a T, trillion dollars to its market cap since April. You can see in the pre-market it's up 1.25% and is now worth more than $3.8 trillion, overtaking Apple and Microsoft and everybody else as the most valuable company, Katie, in the world.
Yeah, there you have it. Let's stay on these two giant chip makers. Bloomberg Tech co-host Ed Ludlow joins us now. Ed, let's start with Micron, because it was a rosy forecast, but it wasn't exactly runaway growth that they were predicting, and maybe that explains the somewhat muted reaction in shares.
Yeah, I think a big part of the forecast for the fiscal fourth quarter on sales, and remember, their sales, its revenue, was pricing. So high bandwidth memory is everything. Clearly, demand for high bandwidth memory is there, but it's also the situation that they are capacity constrained. And so there was this endless discussion and back and forth and a number of questions from the sell side on the call about pricing and how they've used that. Because remember, in the prior quarter's earnings, it had impacted margins. Now they were able to use it to deliver some outperformance on the top line. But very much the story from Micron is simple. The AI demand is going to grow faster than the historic demand for DRAM and NAND that go into computers and smartphones. And that's how they're repositioning this company.
How much competition does Micron face? Ed, yesterday we were talking about the fact that, you know, they're not the only player in town.
Yeah, it's really key to understand the field. So there are essentially three makers of high bandwidth memory. In the United States, Micron is the biggest memory chip maker, but in Asia you have SK Hynix and Samsung. And what is happening right now, if you believe that we are still in the relatively early innings of building out data center infrastructure, where you have high performance GPUs or AI accelerator cards that need high bandwidth memory, lots of hyperscalers, cloud computing companies are validating the performance of each of those. And it was really interesting. This is why we talk about NVIDIA in this context. Every time Jensen Huang name checks one of these names, the stocks react. But that is because NVIDIA is looking at all of them to see which marries up better with their GPUs.
All right, Ed, thanks very much. Ed Ludlow there is going to go off and prepare for his tech show. Bloomberg Tech kicks off at 11 a.m. Definitely a show you want to watch today. And really, I mean, lately, these tech stocks have been powering everything again. As we said, NVIDIA has added $1.5 trillion since April.
It's
market
amazing.
cap.
It's amazing. And you make a good point that, okay, we're near record highs, but if you really decompose the breadth of this rally, it comes back to big tech, which isn't a bad thing when you think about index math, but you could get concerned about the health of the rally.
Let's bring in Vijay Rakesh. He is Mizuho Securities senior analyst joining us now. He has an outperform rating for both Micron and NVIDIA. And let me ask you, Vijay, about the first about the smaller company. We're talking about Micron because of the earnings. As Ed mentioned, they do have, well, they have a lot of competition, and as Katie was talking about, it wasn't sort of the knock the cover off the ball forecast that Wall Street was expecting. How do you see it?
Yeah, thanks for having me on, Matt. I think this is just the beginning for Micron. I think I would say the competition for Micron is actually less. When you look at the high bandwidth memory for AI servers, they're really two suppliers, Micron and Hynix. Samsung has yet to get qualified, and we see that continuing to be a challenge for them into next year. So we think Micron's high bandwidth memory for AI servers will probably grow 100% year on year into 2026. And if you look at the earnings profile, earnings could almost double from current levels over the next 2 to 3 years. So there is still significant earnings leverage left in Micron, significant HBM growth, which really is dovetailing with the whole AI market growth. So that will be a massive tailwind for them as you look out into 26, 27. And combine that with NAND, that is also seems to be in a very constructive mode here in terms of NAND pricing going up. So that will be a tailwind for them as well.
So I hear what you're saying, that when it comes to the fundamentals, it certainly seems like the stars are aligning in your view. Let's talk about valuation a little bit here, because this stock has come a long way very quickly. It's up 51% through the close, I believe. I mean, when you think about just the trajectory of shares, I know you have that outperform rating, but are we due for maybe a breather here?
Yeah, I mean, to that point, obviously, Katie, as you mentioned, the stock is up 100% in the last 2 months. So you're seeing a little bit of a, kind of a consolidation here. But that said, I think what we see broadly in semis is, for Micron specifically, is a massive tailwind in HBM. But that said, for semis, what we have kind of highlighted is also potential for some tariffs coming through in the next couple of weeks, especially with Section 232 from the Trump administration trying to bring manufacturing back home. So that could be a little bit of a headwind challenge for the broad semi group in general. But outside of that, if you look at what's happening to AI servers, HBM content on AI servers, HBM content on ASICs, custom ASICs from Broadcom, etc., it all is going up and up to the right. So we continue to see that as the tailwind for Micron.
Vijay, you have a massive coverage universe, not just the magnificent 8, but I even see General Motors in here. What is the stock that you're most excited about? What is the story that when you wake up in the morning gets you into the office?
Oh, there's a long list, but I think I would definitely count NVIDIA, Broadcom, Micron in those names, as well as Credo Semiconductor, which has been one of the enablers in the data center there. But also, I think the analog group in general is starting to find a bottom as auto, industrial, and consumer demand starts to bottom out and stabilize in the back half. So I would say those should be the buckets that investors should be focused on into second half and 2026.
All right, Vijay, really appreciate your perspective on the heels of those Micron earnings. That is Vijay Rakesh of Mizuho Securities. Let's take a look at some of the single stocks moving this hour. It's not all about big tech. It's not all about the chips, even though that's some of the most important stories in the market right now. But let's get more with Bloomberg cross-asset reporter Isabel Lee. Isabel, what's going on underneath the hood?
We have to look at Walgreens. So the company reported profit that beat expectations. So this is a hopeful sign as the company prepares to transform back into a private company. So adjusted EPS came in higher at 31 cents. Revenue was also higher than estimates at $39 billion. So shares are edging higher, but just by 0.7%. So Walgreens is the second largest U.S. pharmacy company in the U.S., and it's set to be purchased by Sycamore Partners, that's a private equity firm, for $10 billion by the end of this year. So Walgreens is also in the process of selling its health business, Village MD. So next we're looking at McCormick. So we can see shares here also jumping. So McCormick is a flavor and spice company. If you don't know this, it means that you're not in the kitchen often enough.
We all know McCormick.
Okay, good. So it reported EPS that topped estimates, and the company also reaffirmed its top line and bottom line and profit and sales guidance. It is worth noting, though, that the company's outlook is based on tariffs currently in place, so they really haven't factored in any potential tariffs that may arise.
It is a $20 billion spice company, and every time I'm in the grocery store, I have to ask myself, is this cumin better than this cumin, or is all cumin the same?
It's not all the same.
No?
I always pick the ones in a jar, in a glass container, because I like to waste money like that.
I just have really strong brand loyalty. So
what is your brand?
Well, I can't say that on there. Not investment advice.
You'll whisper it to me later.
Yeah.
Okay.
Nike also, speaking of brand loyalty.
Nike is reporting after the bell today, so investors will be looking at tariff impacts, China business, and of course new products. So Third Bridge said that they will be looking at how management will come up with new products. We have Bloomberg Intelligence saying that they will be focusing on Nike's women business, especially after that Kim Kardashian partnership being pushed back. And Jefferies in general is just optimistic that Nike's clearing off of their inventory will pay off. So
This is good. How do they work on your feet, Isabel?
No, I use Adidas. Adidas?
Adidas, yes.
I say Adidas because, we're in New York.
But it's Adi Dassler's company.
In any case, I'm a Hoka gal, so I don't know. Nike has a lot of issues. You think about the new CEO, Elliott Hill. So he came in with the goal of making Nike cool again, which is hard. That's a fundamental problem.
I mean, Jordans will never not be cool, right?
I know, but in terms of, they kind of lost the sneakerhead community a little bit. But then you pile on a trade war, supply chain issues, tariffs, all of that on top of Nike. And it's been a really, really tough road for this company. So we'll have to see how that goes. Isabel Lee, great roundup. As always, looking forward to those results after the bell. Let's talk about where we stand about 20 minutes before the opening bell, though. The S&P 500 up about 0.2%. We're very close to record highs, I believe.
Yeah, I mean, this is the futures picture, right? But yesterday we closed unchanged at 6,092.
Like perfectly unchanged.
Yeah, almost exactly, right? We were down 2/100ths of, 2/100ths of a point.
That's a sneeze.
But 6144 is the number we're looking for. So if we're up 50 points, that's it.
That's all you need, just 50 points. We'll see if big tech can get us there. You do have the NASDAQ 100 higher pre-market as well, even though it seems like Micron not exactly really throwing its weight in the ring. Like you said, they didn't exactly knock the cover off the ball.
It's not, I mean, it's not a gigantic company, right? And there are smaller companies. VJ was talking about Credo, which is only a $15 billion company. Micron, $150 billion. NVIDIA, $3.8 trillion. By the way, I'm very excited about the next story that we're going to talk about after this break. Jefferies profit slumps on weak deal making, but Mike Mayo says it's game on for bank stocks, and Jefferies has outperformed all of the major banks on Wall Street over the past 5 years. Stay with us. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me. Now we're playing.
Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5. Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Let's get to high interest and look at what's making headlines around the world. President Trump takes aim at Fed Chair Jay Powell. Again, the Wall Street Journal says Trump may announce Powell's replacement as soon as September. The president said yesterday he has 3 or 4 people in mind for the job. Powell's term as chair doesn't end until May 26, but the idea is to put pressure on him and maybe distract the street a little bit with a new kind of shadow Fed, not like Alan Melcher. Shell says it doesn't plan to snap up rival BP. The company denied earlier reports saying it's neither in talks nor has it approached BP for a takeover. Shell's statement triggered a 6-month bidding block under UK takeover rules. And Palantir short sellers are bailing as the stock continues to climb. Shares of the software maker continue to rise thanks to fervent retail traders and heightened geopolitical tensions. Palantir's stock has rallied nearly 300% since last October, making it the best performer on the S&P 500 this year, which has kind of gone under the radar to some extent, Katie.
A little bit. We talk about it now and again, but certainly not as much as NVIDIA, for example. Let's talk about Jefferies, though. I know you're psyched for this story, Matt. Jefferies shares falling in pre-market trading after reporting a decline in second quarter earnings, market turmoil really weighing on deal making in a big way. Let's talk now with Bloomberg Intelligence financials analyst Neil Sipes. So you can see Jefferies shares down about 5% pre-market right now. I want to put this into context, though, because you take a look over the past 5 years, the stock is absolutely crushing it, up 370%. But this year, it's really struggled, down about 27%. And you think about the effects of this trade war, this pullback that we've seen in deal making, it seems like Jefferies has arguably been hit the hardest.
Yeah, and I think that speaks to what this business actually is, which is much more heavily geared to the investment banking, the advisory underwriting landscape, where we entered 2025 in a really robust scenario where we had pretty lofty expectations for the deal-making rebound across all businesses. What we've seen at Jefferies, and I think what explains a little bit of what you pointed out, is we've seen some of the steepest revisions in estimates over the past handful of months, which generally relates to the fact that we had what we experienced in April, where you have uncertainty and volatility. That's the enemy of M&A and deal making. So ultimately, the expectations for a really robust 2025, it feels like those are getting pushed out further into 2026. And I think that's what we saw a little bit with Jefferies' results yesterday is, yes, the profit was hit, the stock is down as a result of that, but the rosier second half outlook, I think, is something we're going to be looking for as we sort of see the materialization of some of the momentum in capital markets.
I'm so excited about this story because I did like 10 seconds of research on it before I came out here. And we just showed the chart. It's beat all the big Wall Street banks, even if you put, Shanali gave me the cap light comps that I should be running. So it's beat all of them too, except for Evercore ISI. And then I saw Mike Mayo's quote, which I thought was great. So he says, right now, you have a triple play when it comes to banks. So long as there's no recession, it's game on for bank stocks, giddy up. Anytime someone says giddy up in a quote, I'm listening, I'm paying attention. He says it's because of deal making, because of loosening regulations, I guess deal making to come, and it's because of the high interest rate environment. Do those three things hold, and is that helpful for Jefferies, which had kind of a weaker deal making picture thus far than we would have wanted?
Yeah, I mean, the statement definitely applies to more broader traditional banks with the lending side of the business as well. But for Jefferies, again, it's going to be much more of that investment banking focused. And I think his quote rightfully caveats assuming no recession, right? Because economy is always going to be the wild card. And as you think about that, I think from the broader banking landscape, you have the sort of constructive outlook for both key revenue sources, the non-interest income, that's going to be things like wealth fees, capital markets, trading, and then net interest income. Yes, we have easing rates generally and gradually over the next couple of years is the expectation at least. But those are still at rates that we haven't really seen in the post-Great Financial Crisis era. So you can end up in the scenario where the easing rates are actually supportive of loan growth, relief on deposit costs, et cetera. That can kind of create that sort of giddy up scenario, I guess, if we're going to use his terms.
Before we let you go, I do want to just focus on Jefferies because it feels like there's a lot of ifs here. You mentioned if there's not a recession, if we see that growth and that comeback in M&A in the second half, then that could stack up quite favorably for Jefferies. If that doesn't happen, it seems like this ugly year, though, could get even worse.
Yeah, and I think a lot of it, again, is unfortunately going to hinge on sort of the macro economy, which is, of course, nearly impossible to forecast. And I think that's really the story with Jefferies here is it's a market share story. You've seen them add senior bankers. Their headcount is 50% higher than their record year in 2021, right? So if you sort of look at a normalized run rate for the business, it's much larger than it is today. But of course, you need the environment to cooperate. So as we sort of look forward, we're going to be looking for the momentum in the capital markets underlying the business. And what really the expectations are underpinned is, secular profit expansion as well as cyclical profit expansion. So we have to have both to sort of see that business fire on all cylinders. So second half awaits.
All right, Neil, great to have you on the program. Thanks very much for joining us. Bloomberg Intelligence analyst Neil Sipes there covers financials for us. Coming up, strategists say AI and stagflation are the big themes going into the second half of 2025. Feels like we've been here before. Economist and market strategist Lauren Goodwin joins us to talk about that next. This is Open Interest.
the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome back to Open Interest. Barclays says that fears of foreign investors pulling out of U.S. assets are overdone as attention shifts away from tariffs and taxes. Strategists see AI as one of the strong drivers of corporate earnings in the coming quarters. We've certainly heard that before. Meanwhile, Goldman Sachs strategists anticipate higher stock volatility in the second half of 2025 as stagflationary shocks threaten the current market rally. So two sides to that trade. Joining us now at the desk is New York Life Investments economist and chief market strategist Lauren Goodwin. Lauren, great to see you.
So nice to be here.
So we are days away from the second half. You just heard two different cases for how it could go. When you look into your crystal ball, how do you see the rest of 2025 shaping up?
I'll be completely honest with you. I have a view, but it is not reflected in our asset allocation. I think this is a period where investors have pretty balanced risks, and what the market is focused on right now are the upsides, and we see that from the just incredible V-shaped recovery we've had since Liberation Day. So investors are seeing the deregulatory impulse of the Trump administration finally moving forward. They're seeing the idea that tariffs may be lower than was threatened just a couple of months ago. They're focused on good news, and I think there's reason for that. These are upside potential positive catalysts for the market. But the reality as well is that tariffs are likely to be higher than they were just a couple of months ago, and that's and the policy environment is causing businesses and consumers to really pull back on what they're looking at for the second half of the year. And so we're not expecting a overwhelmingly negative scenario, but it's one where a very broad and boring look at quality and diversification is really what makes sense from an allocation perspective.
All right, we have to go to break, so I'm going to save my eco questions for you. But like, we had a slew of data today, right?
Did, a big
so
stack.
we had, for example, goods exports down 5.2%, right? GDP, was it negative 0.2? No, it was negative 0.5. So it seems like the left tail is something that this market may want to be paying attention to. Continuing claims,
PCE.
higher than anticipated. PCE, higher than anticipated.
There you go.
A lot of not fantastic news. Lauren Goodwin stays with us to go through that. She is an economist as well as a market strategist. And futures?
And futures, they're green right now.
The market doesn't care.
Market doesn't care. Looking past that stack of economic data that we got, looking past the fact that we have a lot of deadlines coming up when it comes to taxes and tariffs. We'll walk through all the opening action up next. This is Open Interest.
For Trump to have been, you're never too young to learn AI. That's why he's urging the government for school kids as young as 6 to be taught how to use it.
Within this system, from first grade, they all start with the AI education. They play 4 years, just playing. And then from 5th grade, they start to develop AI by themselves. And STEM and robotics, I see very clearly how Vietnam should be in future. Vietnam just about 100 million people, young people, good education, and latest technology. That's the only way to go. Education not contribute much profit for equity, but from the country point of view, that's most useful contribution what equity should do. And today we're thinking about every kids, not in cities like Hanoi or Ho Chi Minh City, but kids in the countryside should got the good education. That's what we're going to do now.
So you're leapfrogging?
Yes, exactly.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne Ruhodern in Buenos Aires, Argentina, and this is Bloomberg.
We are moments away from what could be the start of a trading day on which you see an all-new, all-time record high. I know that's I said that yesterday, but it does look like we're in sniping distance of it. Right now, futures are up 0.3% on the S&P. NASDAQ futures are up 0.4%. We only need to go 52 points to get a closing record on the S&P 500, and this market wants to rally. You hear the opening bell on the New York Stock Exchange. Talos Energy ringing the bell there. They're pumped, but their shares have posted a negative return over the past 5 years, so they may want to get back to work. Meanwhile, here at Popular, which is a Puerto Rican bank, this guy, Ignacio Alvarez, is retiring, and he should be celebrating. He has more than tripled the shares of the bank since he took over as CEO in 2017, and more than quadrupled since he moved into the C-suite as COO in 2014. So that's an awesome way to go out.
Yeah.
Ignacio, great job, man.
Good on you. Enjoy retirement. Let's talk about Micron.
Yes,
a
let's
little
do
bit
it.
here. Micron shares up about 0.6%. Earnings topped estimates, but when it comes to the forecast, the AI equipment maker, they did project growth, but it wasn't runaway growth. So maybe you're seeing some of that enthusiasm drain out of this stock. I will note that Micron was up 51% through yesterday's close. So stakes were certainly high. They didn't necessarily disappoint, but maybe it just wasn't enough. Matt Miller, you can see shares trying to decide what to do at the opening bell.
Yeah, we don't need them anyway, Katie, to push to record highs. I mean, they make a difference at $150 billion. When I was a kid, that was a massive market cap, but NVIDIA is worth $3.8 trillion, extending gains after closing at a new record high yesterday. As we've been saying today, the market cap has added $1.5 trillion. The company has added $1.5 trillion in market cap since April. That's massive. I mean, there are only like 5 companies worth that much or more on the entire S&P 500. So we've seen these huge moves, and I guess it's because the economy continues to look strong. We don't get the recession. We don't get the stagflation that people have been, in and out of forecasting for the last couple of years. We are back with an economist at New York Life Investments. She's also the chief market strategist, Lauren Goodwin, still with us here. Lauren, I want to just pick your brain about the eco screen that we saw today. On the Bloomberg terminal, you can type ECO Go, and you see today just a ton of data. We had imports and exports. The trade balance is huge. We had GDP. It's down to negative 0.5%, worse than we had anticipated. Core PCE, as Katie mentioned, is higher than we had anticipated at 3.8%. Continuing claims are higher. Like, what does this economy look like to you?
Well, first of all, I live with ECOGO, so that, you know, it's like just a regular part of my day. If we take a step back and look at the last 6 months, what we're seeing in the eco data screen is completely expected, and underlines the point that if we didn't have some of the economic and tariff-based, inflation-based risks that we have looking forward, there would be a pretty clear cut for the case for the Fed to be cutting closer to neutral already. So the employment environment has been normalizing over the last couple of years. I believe we're continuing to see that with some softness, but certainly not recession indicators at this point. And prices are just starting to reflect some of the purchasing that companies would have needed to be doing over the last couple of months. I think that trend is likely to accelerate here as we look forward and companies get ahead of their Christmas time or holiday time borrowing, and so or purchasing. And so this is a period of time, let's call it the impasse, the summer impasse, where we're not seeing the economic risks out there borne out in the data, but we'll continue to see them accumulate.
Well, to that point, Lauren, I'm taking a look at the notes you sent over to our producers. You write that your investment strategy remains patient, diversified, and transition-oriented. I haven't seen that phrase used before when it comes to a portfolio. So just walk us through what that means.
Yeah, you know, we believe that we've seen a series of structural changes accelerate over the first part of this year, but really those structural changes are years, if not decades, in the making. The transitions I'm speaking to are the felt experience of the pandemic, giving everyone, people, governments, companies, a sense that supply chains are in many cases should be protected, right? What that means for the geopolitical environment, what that means for corporate investment. We've seen a massive crowding in of company and consumer behavior following global governments in this way. And so there are capital intensive and interesting investment trends that are unfolding now, and they require a portfolio to look a little different than it has. So that includes really more than anything, a broader look at diversification across public and private markets, and of course, geographically as well.
Is that the way to, I mean, not hedge, but avoid, you know, a left tail coming up and biting you in the butt? Because it does seem like, you know, everybody wants this market to rally. And like yesterday, Goldman Sachs said, there's so many low quality stocks that are riding this wave up that if we have a downdraft, it could be a thud.
Yeah, look, we've seen such a pronounced rebound in the U.S. equity markets, in particular since Liberation Day. And at those valuations, investors have to ask the question, are the risks ahead so balanced to the upside? And I'd argue that the risks are balanced, but perhaps not so optimistic. And so if you're looking at that valuation profile, your opportunity set might be a little bit different. From our perspective, we're taking gains in equity, deploying them in credit, and we can talk a little bit about what that looks like. But we're also looking at an equity market profile in the U.S. that might benefit from some private markets exposure, especially in the small cap space, where we see more of an engine sort of the real economy, really, and considering also the not just structural ideas I've mentioned, but also the cyclical reality that other parts of the world are cutting rates faster than we are, playing into industrial and financial sectors in those other countries.
You mentioned that you live on EcoGo. I've been looking at INGO, which is the Bloomberg Index browser. So for the last, you know, 5 or 10 years, maybe 15, nobody wants to talk to the fixed income person at the cocktail party, right? Because there's no return. And now it's amazing. I mean, you're looking at massive returns. Year-to-date returns for Treasuries, 7%. Plus you get to clip the coupon. Like,
it's funny. For so long, the bond guys were thought of as pessimistic, and they're earning no yield anyway. But now they're kind of cool. And I do want to talk a little bit more about private credit. I actually caught up with the CEO of JP Morgan Asset Management earlier this week. We were talking about high yield versus private credit. His view is that private credit looks a little bit frothy right now. I believe we have the specific quote that there's a lot of money and investment investors chasing finite opportunities in the private credit market. You also have liquidity trade-offs. You take those two things in combination, and on a marginal basis, I would put my marginal dollar in public high yield rather than private credit. I thought that was really interesting because private credit has been so hot. It sounds like you see a place for it in a portfolio, but when you stack up high yield versus private credit, how does that risk reward look to you right now?
The answer to your question, which is such a smart question, lies in actually an economic reality, which is that corporate profits are so strong. We are likely to see them move lower over the coming quarters, but we're starting from an economic reality where companies have raised an enormous amount of cash and been really smart with their capital stack. That includes in public high yield issuance. And so I agree with the bullish position on public high yield. Valuations are high, spreads are tight, but if you're looking at a 2 to 3 year buy and hold, grab a couple of high quality, high yield issuers, and that's a really interesting opportunity. I'm not worried about defaults on that time horizon for high quality. But the same is true in private credit. This is an asset class that, just like in public credit, has a wide variety of operators, some higher quality than others. And if we look at an environment where you can harvest meaningful all-in yield, and that's really what you're looking at, is avoiding defaults, capturing the yield. In this economic environment, if you can work with a conservative, very quality-focused private credit borrower, that's another couple-year opportunity that I think is really interesting in this environment, and probably more interesting now if you think that rates are going to be moving lower as we move forward in the year.
Yeah, and spreads may be tight, but that means yields are high as well. So you just kind of have to choose which to focus on. Lauren, great to see you. Really enjoyed speaking with you as always. That is Lauren Goodwin of New York Life Investments. Meanwhile, back in this equity market, we are on record watch. Let's dissect this rally right now. The number you need to keep an eye on is 6144 for the S&P 500. You take a look at where we are right now, 6112. So we are very close, and good news. Breadth is very strong today. You have more than 400 names in the green right now, fewer than 100 in the red. And you take a look at what's leading right now at this moment. Good news, it's big tech. Microsoft, NVIDIA, Meta, really leading this rally. You do have JP Morgan fighting to get into the top three. We'll see how that shakes out. On the downside, you do have Apple. That's not surprising to see in 2025. Equinix and Tesla as well, but still not necessarily dragging us down when you think about who they're competing with. Let's take a look at the sector level, and it will broadly reflect what we're seeing on the individual movers as well. Up at the top, you have materials, utility, energy. The list goes on. Tech down here, only with a 0.2% gain for the sector overall, but certainly more green than red. Your sole loser today, Matt Miller, is real estate, off by about 0.7%.
Is that a Mom Donnie thing, you think?
I don't think so. I think that would be a lot to extrapolate.
Coming up, NVIDIA, Micron, and other big tech stocks soar. We are looking at well, I guess Micron is swinging back and forth between gains and losses, but NVIDIA now worth $3.77 trillion, one of only 3 companies in the world worth more than $3 trillion. We're going to discuss what's going on at the chip makers with Bloomberg Intelligence global head of tech research. This is Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. we're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And this morning, we have a tech theme. Let's start with Apple getting cut over at JP Morgan, slashing the company's price target to $230 from $240. Analysts over there see iPhone 17 demand being impacted by macro uncertainty. Shares down a little bit this morning. Meanwhile, Morgan Stanley is raising its price target for Microsoft to $482, or rather from $482 to $530, very specific. The analyst cites upside from the company's Azure cloud service. And finally, Baird, Wedbush, and Stifel are among the firms that are raising their price target on Micron. The chipmaker did come out with an upbeat earnings forecast, but it wasn't quite enough to impress Wall Street. You can see shares kind of trying to decide what to do today, Matt.
Yeah, absolutely. And we're going to talk about what Wall Street does with tech today and this year. We got the Micron story, which is kind of did she or didn't she, right? Because as you said, a lot of people were hoping for more growth in the outlook. Mandeep Singh joins us right now. He's the global head of tech research for Bloomberg Intelligence. And Mandeep, before we get to NVIDIA, and it's almost all I care about right now, let's talk a little bit about high bandwidth memory chips.
Yeah.
It's just as boring as it was when I started covering DRAM 25 years ago.
Really selling it.
Yeah, no, I mean, I can't get hyped up about this, but Ed Ludlow from Bloomberg Tech says I should. Do you agree?
I think so. Given the print last night, 15% sequential growth for this quarter and guiding for 15% sequential growth, mostly driven by high bandwidth memory, which is a $6 billion business now. That didn't exist last year. So when people talk about AI data centers as a market, and you know it's about $250 billion right now, if you look at NVIDIA's revenue, expected to grow to $500 billion, memory, HBM, is one of the major components of that data center expansion, and that's what they are showing in their results, is that $6 billion revenue will likely double next year. I mean, I think you will see positive revisions for the next. Yeah.
Before we had 20 megapixel cameras on our phones, right? Katie, we used to buy these digital cameras.
Tell me about these old
And you would put these little memory cards in there that you'd buy at like the drugstore, the newsstand. There used to be newsstands.
Right.
And it didn't matter whether it was from SanDisk or Micron or SB Hynix. I didn't care. It all works the same. Is that true about HBM as well?
So you're absolutely right. HBM is a duopoly between Micron and SK Hynix. But the thing I would like to point out is the market is still supply constrained. So look at the cost of a server. It's gone from around $10,000 to $270,000 with AI and NVIDIA chips. The cost of memory in the traditional server was like $4,000. With HBM, it's about $12,000 to $15,000. So it's 3x. The cost of, like NVIDIA obviously has had the most kind of use in terms of the ASP increase, but HBM ASPs has also gone up 300%. And that's where this is a secular trend. Look, memory cycle will have its peaks and troughs. Typically, these are 7 to 8 quarters, but I expect this to continue for another 3-4 quarters in terms of positive revisions.
I am not going to ask you about an acronym right now. I want to zoom out a little bit and situate this conversation in the context of what's going on the geopolitical landscape, because we talk about trade tensions all the time when it comes to NVIDIA. It feels like that conversation isn't quite as loud when it comes to some of the other chip makers. Micron comes to mind. Do you think about what NVIDIA is dealing with? Are some of those issues idiosyncratic to NVIDIA, or are they industry-wide as well?
They are industry-wide, but the thing about AI servers and AI gear right now is it's supply constrained. Everybody wants it. And the more supply constrained it is, it gets reflected in the ASP growth of these companies. So the reason why NVIDIA's gross margins keep growing, at least they have so far, is because the market is supply constrained. To Matt's point about memory kind of being a commodity, yes, it will eventually be a commodity, but for now, HBM doesn't look like a commodity market, and that's why the pricing keeps growing.
All right, Mandeep, great to speak with you. Great to see you. That is Mandeep Singh. He is Global Head of Tech Research over at Bloomberg Intelligence. Now, speaking of trade tensions coming up, Nike investors hoping to get clarity about the delayed launch of its partnership with Kim Kardashian's Skims. Also may be curious about the supply chain as well. We'll break down what to expect in the earnings report up next. This is Open Interest.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a look at what stocks are doing right now. Just about 20 minutes into the session, we're looking at S&P 6108. If you care about a new all-time world record high, it's 61.44 on a closing basis, 61.47 on an intraday basis, and we may get there today. We may not. We still have one more trading day this week, though. NASDAQ, really little change, but it had its gains. As we mentioned, NVIDIA hit an all-time high yesterday. NVIDIA itself currently down, but only 0.1%, so now it's worth less than $3.8 trillion, but I believe still more than Microsoft and more than Apple. Those are the $3 trillion companies. Micron falling as well. So we're losing some momentum with these companies falling. Shell is up after saying it is not in talks and does not basically want to buy BP, as had been reported. You have Walgreens, Boots Alliance, and Nike both gaining, but not doing a lot on earnings news. Katie, let's focus in on Nike.
Yeah, Nike coming up after the bell today, and those earnings are expected to move shares more than 7% in either direction. Bloomberg Intelligence senior retail analyst Poonam Goyal says that the company's turnaround could be at a turning point. She joins us now. So Poonam, this turnaround, let's talk about it a little bit, because Nike has seen 3 straight years of losses. It's down another 17% on a total return basis in 2025. Investors have been waiting for quite a long time here.
Yeah, you're absolutely right. The story for Nike has been very, very, sad, because you've seen them essentially lose $5 billion in top line over the last 2 years. Their shares have crumbled, and it's all because they have inventory that they can't sell. So what we're looking for today is where their inventory stands. Their inventory was down only 2% at the end of their last fiscal quarter, yet sales were down double digits. We need inventory to be down more, and that's what we're looking for today. But also the newness, right? So Nike has to reconnect with its shoppers. It has to bring more newness into the pipeline, and it's working on that. The question is, are we at the bottom today, and will we move up from here? And I think the inventory number will help us decide that in a meaningful way.
Nike is going to, I see on Instagram, Poonam, it's going to drop on Friday the Nike W Air Max Phenomena SWDC. This is like a sneaker, but also a loafer.
Ooh, a snowfer.
And it's horrendous, honestly. Does anyone expect this to sell? Who at the company made this decision?
Look, I think, they're trying, these drops are in limited quantity, right? You have to remember when you're looking at these drops, they're not making millions of units. They're a select quantity. It's for someone who wants to be different, who wants the latest fashion, the latest style. Some drops are going to go, to a far extreme, and some are going to be very popular. This may be the far extreme one, but it just shows that they're trying, right? They're trying, they're testing. And from what we know and from what we see, most of their drops have been very successful, especially the drops that they've had with the Kobe shoes. So I do think that they're making strides in what they're doing for the newness, but they have a lot of old stuff that they still need to get rid of.
Yeah, and I will note that those snowfers are $500, I believe.
I mean, they're part of the Serena Williams collection, and
For sure.
Is a legend.
She is.
Plus, she has really rich friends, so maybe they buy all of them.
We have 30 seconds left with you, Poonam. What is the latest on the Skims partnership?
Yeah, so it's been delayed till later this year, and they've said that it has nothing to do with supply chain. We think some may be due to supply chain. It just may be, them not being able to get the product at the right price at the right time. Because remember, there is now a high tariff on goods from China. So if Skims is being made in China, which is a big question to ask today, then we do think supply chain does have some part in it.
All right, Poonam, great to get your take. We will always be looking at your research. Our viewers can do that as well by typing BIGO on the Bloomberg terminal. Coming up in the next hour, Liz Ann Saunders says retail traders are buying the dip to power markets. We also have the CEO of PayPal joining us, Alex Chris, on his firm's stablecoin ambitions. This is Bloomberg Open Interest.
worse because of what's going on in Russia and Ukraine? Is that something you worry about in terms of the impact of Russia, Ukraine on your investment appetite for things like that?
I'm not worried about Russia invading Norway anytime soon. We are a member of NATO. We do border to Russia, but now, since Finland and Sweden joined NATO, we feel stronger than before.
So today, what would you say your biggest investment concerns are? You're running $1.7 trillion fund. For the average person not managing that much money, what should they be worrying about, and what are you worrying about?
No, I think you've got two things. One, you have the known unknowns, right? So, and there at the top of my list would be two things. One is inflation, because I think there is an argument in a tight labor market when you potentially decline the supply or reduce the supply of labor. In the US, you put on tariffs. These things can be inflationary, and there could be a moment where, given the high level of government debt, that the investors suddenly decide, you know what, we want a much higher coupon to lend to, to governments. And so you could see a step up in interest rates, which could be negative for financial markets. Then, of course, all the AI-related stocks, the epicenter here is Taiwan, so you need to watch that. The thing that really scares us when it happens is the unexpected,
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. A surprise decision from a CDC advisory panel handpicked by Health Secretary Robert F. Kennedy Jr. They've voted in favor of recommending a shot that protects babies against RSV. Correspondent Michael Wallace.
The Prevention Advisory Committee's vote was 5-2. It's suggesting babies under 8 months who are born during or entering their first RSV season should get 1 dose of Merck's clesrovimab. One of the dissenting panel members is concerned about deaths in clinical trials of the vaccine. The other is worried about the timing of the shot and that it might interact poorly with other vaccines.
Pediatricians had been concerned the vote would go the other way. Dr. Jennifer Duchan at New York City's Mount Sinai Hospital.
RSV can be extremely severe. It can send children to the ICUs. It can cause them to need intubation, a breathing tube.
A negative note on the economy today. The Commerce Department says it shrank more than earlier estimates showed. CBS News business analyst Jill Schlesinger.
There was a huge uptick in imports, a deceleration in consumer spending, and also a downturn in government spending. Putting those three things together meant that we saw the economy shrink by 0.5 percentage point in the first quarter of the year from the previous quarter.
Defense Secretary Pete Hegseth's doubling down on the Trump administration's insistence U.S. airstrikes demolished Iran's nuclear capabilities.
The reality is you want to call it destroyed, you want to call it defeated, you want to call it obliterated. Choose your word. This was an historically successful attack, and we should celebrate it as Americans, and it gives us a chance to have peace, chance to have a deal, and an opportunity to prevent a nuclear Iran.
The Ayatollah spoke today for the first time since the strikes and the ceasefire with Israel. He warned against any further U.S. attacks on Iran. Israeli press reports say Israel has temporarily stopped aid to Gaza after a hardline Israeli official threatened to leave the government if it continued to reach Hamas. Reporter Linda Gradstein from Jerusalem.
Israeli press reports said the aid cutoff came after images circulated on social media of masked men on aid trucks, and Prime Minister Benjamin Netanyahu ordered the army to present a plan within 2 days to prevent Hamas from taking control of the aid.
A quartet of private astronauts has reached the International Space Station.
Dragon contact and soft capture complete.
The Axiom mission blasted off from Florida yesterday, carrying a crew from India, Poland, Hungary, and the commander from the U.S. It is a first for those international travelers. The Dow is up 171 points. S&P ahead 22 as it nears a new record. This is CBS News. They're cleaning up across France after violent storms overnight.
Gale force winds, heavy rain and hailstorms lashed the country overnight. 2 people were killed by falling trees, including a 12-year-old boy. Flights were delayed, Paris metro stations flooded and roads turned into streams by the torrential rain. Even the parliament was hit, the roof springing a leak during a speech by the French Prime Minister. The violent storms signalled the end of a heat wave that saw large parts of France sweltering in temperatures in the high 90s. Elaine Cobb, CBS News, Paris.
A celebrity couple is calling it quits. People confirms Katy Perry and Orlando Bloom have ended their engagement 6 years after he got down on one knee and proposed on Valentine's Day. They'd planned to get married in 2020 but postponed when the pandemic hit. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. The market's telling me, here's another AI play. Just bid it, buy it. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
The semiconductor business is a really cyclical business. These are 2 big-time blue-chip companies. Are people just too exuberant out there?
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well. Norma Lind and Paul Sweeney with you this morning. Coming up, we're going to check in with Michael McKee. He's Bloomberg's international economics and policy correspondent. Get his thoughts on some of this eco data that we got today. A whole slew of stuff. What do we need to pay attention to? Will Harris, Bloomberg Intelligence Senior Global Energy Analyst. Shell, BP, is a deal there, not there? I'm seeing conflicting reports, but we'll get an overview of what's happening in the global energy business. Kirsten Fortin-Rose, Senior Fellow at the Atlantic Council, on the latest in the Middle East. And Jonathan Palmer, he's the Senior Equity Analyst at Bloomberg Intelligence, talking to us about Walgreens. They reported some numbers. We'll get the lowdown there on that business as well. So we got a lot coming up in the next couple of hours. Markets are trading higher. Let's get a snapshot. We'll go to Lisa Mateo for a Bloomberg Business Flash. Lisa.
You got it in this Bloomberg Business Flash, brought to you by IBKR. Will the U.S. retail sales growth rate be greater than 1.5% in June 2025? At IBKR Forecast Trader, the yes recently at 11%. Start predicting today at ibkr.com/forecast. The last trading day for this contract is July 17th. All right, we've got stocks rising. We're on records watch. Bonds falling. The dollar weakening. This is after more mixed economic data. So let's get to it. U.S. made goods exports. They fell 5.2% month over month. That was the largest drop since 2020. While imports, they were little changed. First quarter GDP, that was revised to a drop of 0.5% annual rate. That was below all estimates. Recurring applications for unemployment benefits rose to the highest since November 2021, but initial claims, they decreased. Now just in housing data, we have some pending home sales month over month for May. The survey was for 0.1%, came in at 1.2%. 1.8%, so a big difference there. All that said, we get to the NASDAQ up 0.3%. Same for the S&P 500, the Dow up 0.4%, 176 points at 43,158. We go to the yield space, the 2-year yield 3.74%, down 4 basis points. The yield on the 10-year 4.27%, and that's down 1 basis point. The Bloomberg Dollar Spot Index, that's off about 0.4%. Chipmaker Micron Technology, it gave an upbeat forecast for the current quarter, helped by demand for AI equipment, but shares are taking a turn. They're down more than 1%. Could be because analysts, they just weren't as impressed with its high bandwidth memory business, and that could be the reason why shares are lower. NVIDIA shares, they're higher. They're up about 0.8% after riding to an all-time high yesterday. The company's market cap added nearly $1.5 trillion since April. That's with the current market cap of nearly $3.8 trillion, overtaking Microsoft. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Nora.
All right, Lisa Mateo, thank you so much. We appreciate that. As Lisa was saying, we are higher on the equity markets today. Let's take a look at some of the stocks on the move. Today, I'm Paul Sweeney with Norma Linda, and we are joined by Bloomberg's Christine Aquino. Christine, what are you looking at?
Well, Paul, let's take a look at the biggest decliner on the S&P 500 today. That is Equinix, ticker EQIX. The decline is currently now up to more than 13%. So if that continues, that's going to be the biggest one-day decline since 2010. And so that is because it's a data center REIT, and it provided a long-term outlook at an investor day earlier this week. They plan to build out capacity through 2029, but it looks like a lot of that will be from upfront debt issuance. So they're facing higher interest expenses. So they've seen 2 downgrades. Raymond James cutting their rating to market perform from strong buy, and they're saying that the company's going through a period of adjustment. And then BMO also cutting their rating to market perform from outperform, also cutting their price target to 850 from 1,045. And again, analysts are saying that near-term growth is going to be subdued, even if growth accelerates.
Interesting. I mean, this is a stock that I actually cover super closely. I mean, I go to REIT Week every year, which is the
REIT Week?
REIT Week. It's here in New York City. They also have it out in the West Coast as well, but it happens in June. And it's one of the most popular REITs. So you see the room packed out, but I'm also looking at Digital Realty Trust, which is a peer down as well today on the news. But what else are you keeping an eye on?
Looking at McCormick as well today, Nora. That's ticker MKC. Gains around 4% at the moment. So pairing some of those opening gains there. And so they reported before the bell. Second quarter EPS topping estimates, and management also reaffirming its profit and sales guidance. And so analysts are really liking that, especially because their outlook also reflecting a plan to offset costs related to tariffs. So they're currently in place. They're assuming it's a 10% tariff on all imported U.S. goods, an incremental tariff on goods from China into the U.S. And so, you know, analysts from Barclays saying that, you know, the fact that they reaffirmed their guidance despite the incremental impact from tariffs, that eases some investor concerns recently.
All right, McCormick's based in Hunt Valley, Maryland, right outside of Baltimore, home to one of my favorite golf courses, Caves Valley. But you look at McCormick over the last 5 years, the stock price on a compounded basis, negative 0.75%. This thing's been dead flat for the last 5 years, where the S&P's up about 17% compounded annually. I don't know what you do with this stock or these types of companies. I mean, you know, there's just no catalyst at all for these kinds of names here. What else are you looking at?
Looking at Enphase, so that is the strongest performer on the S&P 500 at the moment, ticker ENPH, and currently gains accelerating to more than 9%. So really, it's just kind of a continuation of what we've seen this week. It's been a strong week for this solar sector in particular, because we did get news that some Senate Republicans are looking to discuss some changes to a provision in the broad spending bill. So initially, the House version of that would propose to end tax credits for rooftop solar panels earlier. And so Senate Republicans potentially softening that provision, though we did get some analysis from Bloomberg Intelligence this week. If we do get that provision from the bill, that could crimp some of the margins, and Enphase, one of the potential victims of that. I think they're looking at margins falling to 25 to 30%, which would be back to the levels before the Inflation Reduction Act.
Christine, thank you so much. Appreciate that. Christine Aquino, she's a managing editor for Markets Live over at Bloomberg News. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Well, today, Federal Reserve Bank of San Francisco President Mary Daly spoke exclusively to Bloomberg Television's Lisa Abramowitz about how she sees the labor market outlook. Let's take a listen.
One of the things that I recognize on a regular basis is if I go out and talk to the people who live in the 12 Federal Reserve districts, so that's 9 states, very diverse states in the West, they don't actually bring this up at all. What they bring up is, what do you think is going to happen to inflation? Will you be able to restore inflation to 2%? Will you be able to restore price stability? Do you think the labor market is going to be preserved during it? Because ultimately, I really want both jobs and lower inflation. I want to be able to get ahead. And so far, the people in my district are cautiously optimistic overall, thinking that the economy is weathering some of the worst concerns and the uncertainties, but continuing to move along. So cautiously optimistic is where they are, and I think that reflects what's on top of their mind, less about what's happening in Washington and more about what's happening in their lived experience in their communities.
All right, that was Federal Reserve Bank of San Francisco President Mary Daly speaking exclusively with Bloomberg Television's Lisa Mateo earlier this morning. Michael McKee joins us, international economics and policy correspondent for Bloomberg News. He joins us here in our Bloomberg Interactive Brokers studio. So, Michael, I guess, Mary Daly's saying there's still some confidence out there, and at least in her part of the world, despite some of the uncertainties around tariffs, despite some of the uncertainties around geopolitics. Do you think she's representative of the Fed?
Oh, I think in general, Fed officials will tell you that things aren't as bad as they were, and confidence has come back a little. Still not high, but it's basically that nothing has happened for a while. I think we've focused on foreign policy and things like that for a few weeks. Now the question is, what happens when we get to July and we see the reciprocal tariffs and whatever else the president may do, the big beautiful bill, which took a massive hit in the Senate today when they knocked out the Medicaid provisions. One of the things that Daly said was that we have this uncertainty, and when they asked her about the idea of a July rate cut, she said, well, we've got all these things that are going to be coming up in July, like the reciprocal tariffs, and so we have to wait and see what it's going to play out to be and how people react.
Well, Mike, there's a lot that's happening between now and then, of course, but I am seeing some things saying that people are discussing a potential September Fed cut. But as we're looking at all the data that's coming in, it does feel quite mixed to the average individual. How are you parsing through it right now? What do you see?
Well, I may be a little bit less optimistic than Jay Powell sounds in public this week. Last 2 days up on Capitol Hill, he was talking about how solid the economy is. I think it's solid but fragile, put it that way, because the thing you hear and what Mary Daly was just talking about is that businesses are sitting on their hands and waiting to see what's going to happen. And if they think that there is a danger that things are not going to work out, they tend to try to control what they can control, which is, as you guys know, costs. So that's when they might start cutting back on people or reducing investment, and in that case, then the economy slows and the Fed has to react. The September idea is based on the calendar only, because we have July 30th, which most members of the Fed who've spoken, including Mary Daly today, sort of rule out July. But then the next meeting is in September, and you would have by that time data for June, July, and August. So that might give them enough data to move on.
We got a lot of economic data today, Mike. 30 seconds. Anything kind of jump out at you?
Well, there are a couple of interesting things. Big drop in U.S. exports, 5.5%, the biggest drop since 2020. And that is largely, according to people I've talked to, they think it was repatriation of gold back to Switzerland, because we brought in all this gold in the first couple of months because everybody was afraid that Trump was going to put a tariff on it. And okay, we don't need it, so we send it back. And then we had the largest rise since 2014 in durable goods orders, but it was almost all Boeing. There was strength in some machinery areas, which is good, but overall, it was sort of average. So we got some superlatives, but things that didn't matter too much in the big grand scheme of things.
All right, very good. Michael McKee, thank you so much for joining us here in our Bloomberg Interactive Broker Studio. Michael McKee, international economics and a policy correspondent for Bloomberg News. And looking at the markets, Got some green on the screen. Everything's up about 4 to 0.5% on the equity side. The Tom Keene VIX decidedly below 1716.4, so that's of note. Yields kind of continuing to drift down. I wonder when that's going to trickle into the mortgage market. I've got the 10-year Treasury, which is kind of where mortgages are priced against, down another basis point here. We're at 4.27%, kind of getting interesting. Gold steady, $3,300 an ounce. And Bitcoin, it's down a little bit, but still $107,000 for the cryptocurrency. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. We've got the dollar weakening, yields falling. This is all after a Wall Street Journal report that President Trump may announce Fed Chair Jay Powell's replacement as early as September, and that's pushing thoughts of interest rates up cuts sooner than expected. So right now, we'll start with the Bloomberg dollar spot index. It's down about 0.4%. We go to the yield space. The 2-year yield, 3.73%. That's down 4 basis points. The yield on the 10-year, 4.27%, and that's down 1 basis point. The stocks, we have the NASDAQ up 0.5%, 108 points, 20,080. We go to the Dow up 0.4%, 192 points at 43,174. And the S&P 500, that's up 0.4%, 28 points at 6,120. Shares of spice maker McCormick, they're up more than 5% this morning. This is after second quarter EPS it topped estimates, reaffirmed its profit and sales guidance. The company says it's also well positioned to lessen that impact of tariff-related costs. Then we go to shares of Walgreens. They're up more than about 1%. A beat on quarterly profit. Gets ready to move into a private company. It's set to be purchased by private equity firm Sycamore Partners for $10 billion by the end of this year. And then we move to Shell. It is setting the record straight, saying it has no intention of making an offer to buy rival oil giant BP. BP shares had jumped on speculation of a takeover. Now the shares taking a turn. We have BP shares in London up about 0.4%. ADRs down about 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Nora.
All right, Lisa Mateo, thank you so much. We appreciate that. Norma, Linda, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. I want to follow up on that story that Lisa was just reporting. Do we have a deal in the energy space or not? Again, Wall Street Journal was reporting that Shell, early stages in talks to acquire British Petroleum BP. Then Shell saying, no, not so much. So I don't know where we are here, but let's check in with Will Harris. It's his job to know what's going on. He's a senior global energy analyst for Bloomberg Intelligence. He's based in London. Hey, Will, what do you think's going on there with Shell and BP, if anything?
Yeah, so I think it's pretty important to point out here that Shell was very quick to refute these reports from the Wall Street Journal. It's pretty consistent with what we think. This would be a very opportunistic and potentially quite risky strategic departure for Shell. They have shown a very strict capital discipline for the last several years. And so this would be a big ticket item for them to try and absorb. Any deal would likely near $100 billion, assuming something like a 20% premium. And you would almost certainly see major antitrust hurdles, integration risks, synergy challenges over many years, which would follow. So in short, we think it's quite unlikely that Shell would make a run at the full takeover of BP. What we do think is probably more likely is they could be interested in select businesses of BP that they could add as sort of bolt-on acquisitions.
Had this played out, of course, it would have been a really major deal here. But what does M&A activity look like more broadly in the sector?
So M&A activity has sort of taken a bit of a back seat over the last little while. We've had a pretty bearish commodity outlook, notwithstanding the last couple of weeks with a surge in geopolitical risk. We're mostly seeing smaller, lower risk, near field acquisitions from these companies. They're not taking the kind of big risks that we have seen maybe in the last couple of decades, and that's for many reasons. I mean, these portfolios are much more global and much more diverse than they have been in the past, and there's this tension at the moment within this peer group of how much to focus on their core oil and gas hydrocarbon portfolios and how quickly to advance their energy transition ambitions. What percentage of their capex should they be investing in renewable power, hydrogen, EV charging networks, knowing that these are much lower return businesses than their core oil and gas projects.
All right, I'm putting on my M&A banker hat, Will, here, because I want to get a deal on the tape here. I want some bankers and lawyers to get paid here. BP's got a market cap of $80 billion. That's a big number. That's a lot of money. But Shell's at $200 billion, and ExxonMobil's at $470 billion. Is BP, are they big enough to play on the global energy stage these days?
So it's a good point, and the answer is not really. So BP has suffered terribly on valuation compared to Shell, and particularly compared to their American counterparts, Exxon and Chevron. This is for many reasons. They've had a flip-flopping strategy over the pace of their energy transition progress. Their costs have been far too high. Their spending has been far too high. They for a couple years they were planning to reduce their hydrocarbon production by a significant amount. They've turned that around. So they've sort of been all over the place. Their valuation has suffered, which makes them a potentially interesting acquisition target. We've written for a while now that the sum of their parts is much more than where they're currently valued. Their balance sheet is also quite over leveraged. So this makes them an attractive acquisition target. But as we know, there are very, very limited suitors out there. Exxon, Chevron, Shell, potentially some Middle Eastern NOCs. But as I mentioned, there's those massive challenges for a scale of this sort of acquisition. And as a result, we continue to think that it is probably unlikely.
Not much happening when you look at this share performance here for some of these U.S.-based companies like Exxon, as you called out, and Chevron here. But how are these companies scaling right now? What is it looking like right now in terms of how these U.S.-based companies are performing in comparison to their competitors?
So Exxon and Chevron have a very differentiated strategy compared to the Europeans. There's a very wide strategic divergence across the Atlantic. Exxon and Chevron have stayed the course with oil and gas for the most part. They are still investing heavily in oil and gas growth, particularly in the Permian and also down in Guyana, with some major projects coming online now and in the near future. And you can compare that to the European strategies, which have moved quite quickly into renewable power, solar, offshore wind, hydrogen, and I think the proof is in the pudding as far as how the markets have received these. You can see Exxon and Chevron are currently trading at about 30% higher on a forward earnings basis than the European group. So the market has certainly told them what they think. The issue with the Europeans is that they've been pulled in two different directions. They have their traditional energy investors, and they also have a growing cadre of sustainability-minded investors that are demanding a quicker reduction in carbon intensity and a quicker pacing of their energy transition investments.
Will, I've watched the first season of Landman. I now consider myself an expert on all things oil and gas. But I have to put myself in the shoes of some of these European investors. I mean, they're willing to take lower valuations, lower returns for, I guess, a sociological kind of bent there a little bit. Or are European investors, are they saying, screw it, I'm just going to go where I can get the best returns in this space. I'm going to go to ExxonMobil and Chevron and things like that. How are the clients that you talk to, how are they thinking about it?
Yeah, so to be clear, I think that this ideology is somewhat fading into the background for the time being, and I think it was initially viewed as the energy transition was unfolding a lot more quickly than in reality. And so it was sort of seen as a heavy carbon profile, was seen as a major risk to these companies. But in reality, oil and gas investors want oil and gas exposure, and so the European oil and gas companies have been sort of sitting on the fence as a result, and they've been unable to placate either side, either the energy investors or the sustainability-minded ones.
I was looking through some headlines that came through earlier on the Bloomberg terminal. It said the U.S. is also targeting EU methane regulations in trade talks. Also, the U.S. targets corporate sustainability due diligence directive. That's coming from the Wall Street Journal. What's the latest right now in terms of the atmosphere and environment? What are people discussing right now as we think about drilling really here?
So drilling is taking a sort of very cautious approach at the moment. The investment plans for these companies are relatively flat year over year, and I think this is shadowing really the commodity price environment that we're seeing. So the growth is somewhat subdued, but what we are seeing from this group is a big focus on shareholder returns, so buybacks, continued dividend policy growth, and a focus on trading for the larger of the group.
All right, so Bill, just to bring it full circle here, Shell, BP, do you think something happens? And if you do, would the regulators allow it?
So the regulatory issue is massive for this deal. I think it's important to note that this tie-up has been rumored to happen for longer than I've been alive, and it hasn't. And I think one of the big reasons for that is the antitrust issue. And so this particularly applies for the fuel retail marketing component of these companies, where you could potentially see the majority or even all of the fuel supply of certain countries being dominated by one company. Countries will not like that. So I think this is probably the number one reason why it hasn't happened so far. I continue to think it's the reason why it won't happen, but I would not be surprised Shell to be interested in something like BP's onshore U.S. shale business, which is called BPX, maybe their Gulf of Mexico portfolio, which is where there would be huge operational overlap and potential cost synergies, offshore Brazil in the deep water, and particularly BP's LNG business, which is about half of what Shell's is. But combining those, it would be controlling roughly a quarter of the global LNG market. So, and we know that's a cornerstone of Shell's long-term strategy. So I think those could be interesting. It's just a matter of the right price and how badly BP wants to fix their balance sheet.
Well, great stuff. As always, appreciate getting a few minutes of your time. Will Harris, Senior Global Energy Analyst, Bloomberg Intelligence. He's over there in Queen Victoria Street, Bloomberg European HQ. It is a spectacular building in the City of London, right next to the Bank of England. It doesn't get any more City of London than the Bloomberg HQ. Appreciate that. Norma Linda, thanks for hanging out with us here for a couple of hours here. What are you looking at in your day-to-day?
What's interesting, right? We're thinking about all that's happened in our news flow, the cycle, tariffs, trade concerns, so many different things, rates. But then I'm looking at the S&P just being a few points away from its record. So it really just shows the resilience of Wall Street. Despite all that's been going on, we're seeing stocks still rising. And as we look at today, of course, the trade is reflecting that.
Yeah, looking at it, we're at 61.26 on the S&P 500, up 0.6%. The Dow's up 270. The Nasdaq's up 120 points. Both of those about 0.6%. So I mean, if you went to sleep kind of on New Year's Day, didn't wake up to today, you look around, you're like, nothing happened.
What's changed?
Yeah, nothing happened. But you didn't see the 20% decline there in April around, or exacerbated
March,
by
April,
Liberation Day. Exactly right. And then the subsequent retracement of that move there. So we'll keep an eye on that. Keeps us going here. Coming up, we're going to have more discussions here. 10:42, Kristen Fontaine-Rose, Senior Fellow at the Atlantic Council. Get the latest on the Middle East. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, the S&P 500 top 6,100's now just a few points away from its February 19th record. We'll check in now. It's at 6,126. It's up about 34 points, or 0.5%. We go to the Dow, up 0.6%, 281 points, 43,265. And the Nasdaq up 0.5%, 113 points at 20,087. The Bloomberg Dollar Spot Index, that's down about 0.4%. In the yield space, we have the 2-year at 3.73%. That's down 5 basis points. The yield on the 10-year 4.26%, and that's down 2 basis points. Brent crude up more than 1.5% at $68 a barrel. We have COMEX gold down about 0.5% at $3,326 an ounce. And Bitcoin right now down about 0.2% at just above 107,000. Few companies making news this morning. Merck's RSV shot for babies, well, it won over RFK Jr.'s advisors, with the committee voting 5-2 in favor of Enflonsia. And Apple, it had its price target cut at JP Morgan Chase to $230 from $240. That's on the iPhone 17's incremental lineup launch. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Nora.
All right, Lisa Mateo, thank you so much. We appreciate that. Norma, Linda, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube. You can go over to youtube.com, search Bloomberg Live Radio, Bloomberg Live Podcast. Either one will get you to where you need to go. Got the smart TV thing, including like Roku and all that kind of cool stuff. You can just search Bloomberg Pursuits, and that's where you'll find us. So we get to you any way you guys like to consume media. Looking at the market, as Lisa was just saying, we got a nice strong tape out there, Nora. I'm looking at Bitcoin. While it's off 170 points here, we're right around $108,000 per token, and that's kind of right back to the high. So it just gives you a sense of that risk-on sentiment out there in the marketplace.
Just as we were talking about earlier, it's just you sleep, you wake up, and we're right back where we were. I mean, I'm looking at sectors in the S&P 500 right now. We're seeing real estate. It's the worst performing sector.
Real estate?
Real estate.
But rates are coming down.
I know, but this was also the case yesterday. I wrote a story actually recently. Yesterday, everyone was talking about Mandani and what that could look like. But we are looking at real estate stocks that actually fell off of the news, just based on his plan agenda and how that could actually affect some of those owners of multifamily properties if there are potential rent freezes.
Rent freezes, interesting. All right, let's get the latest on the Middle East here today. Talk about a fluid situation. That is certainly one of them. Kirsten Fontenrose joins us, Senior Fellow for the Atlantic Council down there in Washington, D.C. Kirsten, we heard from Secretary of Defense Peter Hegseth this morning with a press conference with the chairman of the Joint Chiefs of Staff going through the American attack on the Iranian facilities in Iran. What's your sense of kind of how this is all playing out here? It seems to have been, there's some conflicting reports as to the damage. What do we know?
What we do know from the IAEA, so taking out all potential interpretations from other governments, is that in Natanz, Israel hit the halls that were both above and below ground, which likely affected the power supply and centrifuge operations. So that's taking out quite a bit of the functionality. In Isfahan, they hit 4 buildings. This includes our strikes in here too, which is the uranium conversion plant. They hit a chemical lab, a fuel fabrication building, and a metal processing facility. And the IAEA says right now that no off-site radiation has been detected. At Fordow, both strikes, ours and any that Israel did in the vicinity, check out what we believe were underground and above ground facilities as well. We're seeing visible craters from the use of those bunker buster bombs, and those suggest likely heavy damage to the underground centrifuges. What we do know also is that Iran's research and power reactors were untouched. So that minimizes the spread of fallout, something everyone has been concerned about. What we also know is that there is concern about potential unaccounted for stockpiles of uranium. So there are questions about whether this material was moved prior to strikes, whether it is in a different facility farther underground. That is still up for debate. Before the strikes, Iran sent a letter to the IAEA saying that it would take measures to safeguard its program, which could have meant moving material, but that's uncertain right now. And we've seen a lot of conversation on social media about images of trucks near the sites before the strikes happened, but those, in fact, would not be involved in moving material. Those were for bringing in dirt and concrete and the like to try to reinforce the tunnels before they were struck. That was part of Iran's activity to safeguard that program.
So, I mean, if everyone's really been watching these developments rather closely, I'm looking at a story earlier today that talked about the fact that Iran's supreme leader claimed a victory for the war with Israel, but said that the U.S. intervention in the war achieved nothing. That being said, from your scope, how has the U.S.'s involvement in this conflict differed, if at all, from our previous interventions in the past? How are you really reading this most recent intervention?
Well, the U.S. involvement here was sort of a sign to partners around the world that the U.S. will help those who help themselves. So President Trump really did not want to be involved militarily in any strike that would put U.S. soldiers at risk or risk a long-term involvement. So with Israel clearing a path literally by eliminating air defenses and missile launchers on the route to the Fordo facility, it paved a way for the U.S. strikes to be very clean and very quick. But we're seeing these differing assessments of the damage, even by members of Iran's own government. You know, the foreign minister and the supreme leader somewhat contradicting themselves. But I think that's because they're talking about different audiences. The foreign minister is probably worried. He understands that statements denying damage to the program do increase the likelihood of further strikes by Israel or the U.S. against what might be left of that program. Whereas the supreme leader is worried more about the political and strategic level, potential coming talks with the U.S. and the like. And they are known for hyperbole. It's just part of what makes Iran's political statements always fun. In an English statement today, the supreme leader said that the Zionist regime was practically knocked out and crushed under the blows of the Islamic Republic, which is obviously hyperbole. And he also said that Al Udeid Air Base in Doha suffered heavy damage, which both the U.S. and Qatar confirm is not true. That is a joint air base. But this also tells us how desperate the supreme leader is to spin this war. Qatar has an estimated 2,000 troops of their own at Al Udeid who are also endangered. And right after the strikes on Al Udeid, Iran apologized privately to Qatar because they're very afraid of endangering Qatar's willingness to act as a mediator, even at the same time that the supreme leader was issuing these statements about how much damage they wrought to that joint facility. I think it's notable that his statements were in English because it's meant for a Western audience. You know, he's hoping certain groups are listening. He's hoping Trump is listening. He's trying to weaken the team's position for potential upcoming talks. They want U.S. citizens to fear a forever war and urge legislators here not to approve continued U.S. military action against Iran. They want to discourage the Iranian diaspora in the West from supporting what the regime fears could be grassroots opposition plots to overthrow them. They want Europe to fear that the job of eliminating Iran's nuclear program would distract the U.S. from the war in Ukraine. They're looking at the global South, courting influence in the UN. They want Russia and China to stay on side and to not assess that their relationship with Iran no longer brings them value. So differing audiences here for different reasons.
Here's about 30 seconds left. The truce between the Israelis and the Iranians seems to be holding. The Trump administration says the war is over. Is the war over?
It might be that the shooting war is over. What we have had for quite some time is sort of a gray zone war between Iran and Israel, and that is in the covert domain, in the cyber domain. They're known for constant and continuing attacks on one another in those spaces. There will also be a political battle. So they will be arguing for the hearts and minds of the leadership in the Arabian Gulf. They will be both talking to Russia and China, and certainly they will be trying to feed the U.S. differing not only battle damage assessments, but political assessments about the survivability of the regime. So you can expect to see a little tug of war, a little war there. But I think as long as the U.S. maintains that the ceasefire is critical to the U.S. Getting involved or not getting involved on either side, then you'll see that hold. But again, only in the shooting domain.
Kirsten, thank you so much. We appreciate that. Kirsten Fontenrose, Senior Fellow for the Atlantic Council, joining us via Zoom from Washington, D.C. Coming up, we're going to check in with Jonathan Palmer. He's a senior equity analyst at Bloomberg Intelligence on Walgreens and on the healthcare space in general. That's going to be coming up in just moments. Looking at the economic data, we had a lot of it today, kind of mixed at this stage. We'll have more coming up. This is Bloomberg.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, we got Norma Linda, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well, so check us out there on that intraweb thing. Walgreens Boots Alliance reported quarterly profit that beat Wall Street expectations. But this is the last one as a public company. They're going private, so I want to figure out what's going on out there in the world of the pharmacy business. Jonathan Palmer, Senior Healthcare Analyst at Bloomberg Intelligence, joins us here in our Bloomberg Interactive Broker Studio. He doesn't mail it in from points beyond like his management team. He's here in the city. Jonathan, talk to us about what is happening with Walgreens Boots. Not so much the earnings today, but what's going on with it? They're going private. Why are they going private?
Yeah, thanks for having me on, Paul. So it's an interesting lesson in terms of maybe how not to run a business. I mean, Walgreens was formed about a decade ago when it acquired Boots Alliance, the European businesses that it owns, right. And then it subsequently sold the wholesale business in Europe. And now it's just Walgreens and Boots pretty much. And then they have another little bit of healthcare services that I acquired a couple of years ago. But pharmacy's been in a structural decline for the last decade. You know, the Rite Aid tried to sell to them. That deal got squashed from antitrust purposes. Rite Aid has filed for bankruptcy twice now. There's a whole lot of pressure in this industry, and that pressure is coming from the payers, the PBMs, the insurance companies. And so it's an interesting time because I think we've probably reached the bottom where there's no more blood to be kind of squeezed from the stone from pharmacies, and we're seeing new reimbursement models come about, what they call like cost plus, like Mark Cuban's model, cost plus drugs, where the PBMs are actually forcing this on the pharmacies as a payment model. And so it's interesting in that Walgreens is probably selling at the bottom, but it might be, you know, a little brighter in the future from here.
So as we're looking at the pharmaceutical space or the pharmacy space more broadly here, you've got Walgreens, you've got CVS, but you also have, you know, Rite Aid and all these other companies, but they lean a lot into the retail space. So how much of these companies is really retail versus the pharmacy side?
Yeah, so the model has always been that the pharmacy in the back of the store was what drew people in, and they have to walk by all the shaving cream and shampoo and salty snacks, and those were higher margin products. The pharmacy was there to get them in the store. I mean, there's been the Amazon effect over the last 15 years, right? Everything goes online, so people aren't buying things in the same way that they used to for a convenience factor. I don't have to pick up my shampoo right here at CVS because it's going to come from Amazon tomorrow when I click the button. So that piece of it has kind of gotten smaller and less important over time.
So you did mention the idea of Amazon. You've got Hims and Hers. You've got all these other brands that are literally bringing stuff to your doorstep. How has this really impacted those brick and mortar companies?
Yeah, it's a great question because we've seen a move to online business models. So you mentioned Hims and Hers. There's Row. Amazon has their own pharmacy. I mean, they're not really big, impactful companies from like a dollar perspective. Like their revenues or share of prescriptions is really quite low. But I think what's happening is like we're just commoditizing all this, right, and making it super easy. I think ultimately in 10, 20 years, all of our prescriptions will be online.
Who sets prices for prescriptions? I know I'm going to regret asking this question because the economics of your business are the most complicated I've ever seen in my life.
Well, that's one of the big arguments around why there's so much frustration from consumers in Washington around drug pricing, because our drug prices at the point of Bloomberg's are different for people in Medicare and different for people from Medicaid. There's no one price. Like if you go and buy, I don't know, a toy from Walmart, it's the same no matter where you go. And it's usually probably within spitting distance if you go to a competitor. Drug prices are just all over the place. And so one of the reasons the PBMs come under such fire is they're the ones kind of controlling that system of pricing and making it not transparent. And so I think what's happening is we're getting to a place where transparency is being valued and being pushed, both in the market, but also from Washington as well.
So we're looking at this situation right now where Walgreens is being bought by Sycamore. You have Rite Aid that went bankrupt. You have all these companies struggling here. Where do you see this going moving forward in terms of those other companies out there? Do you see more of these buyout situations?
Yeah, it's a good question when I think about the landscape. I mean, as I mentioned a little while before, you know, I think we're going to see this move to more stuff online. Walgreens is interesting in that they've never really partnered with insurance in the same way like CVS has a PBM, they have insurance, they have this vertical model. United Healthcare has a vertical model. I think those are going to stay. I think we'll still see retail pharmacies because people still need to go around the corner and get something when they get, I don't know, a sinus infection or something like that. They need it today, but I think the value of those is going to be minimized over time.
I go, after years of being a CVS guy, and I've gotten like a gajillion doses over the years of like amoxicillin for the 4 kids at CVS. I'm now Main Pharmacy, Spring Lake, New Jersey. No big company.
You switch.
Yeah, I switch, and but even those guys will say, no, we don't.
You switch to a mom and pop.
Yes. Now, but they'll say we don't have everything. So sometimes some things we just don't. We're not going to carry because we can't.
We've done the same thing in Westfield, New Jersey.
Yeah. So there you go. So CVS was good for me. All right, Jonathan. Are we going to have any M&A in this space, or is nobody left?
Well, we've had a bunch of IPOs in kind of this like tech healthcare bubble. I don't know if bubble's the right term, but we've seen Hinge Health come to the market recently. Omada. There's a lot more waiting in the wings.
See? All right, Jonathan Palmer, Senior Healthcare Analyst, Bloomberg Intelligence, one of our best, joining us live here in our Bloomberg Interactive Broker Studio. For our listeners in the U.S., reminder, you can listen to us via satellite radio on Sirius XM, channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM, channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The rest of the Bloomberg Intelligence starts right now. We look at the market here. S&P 500 up 35 points. That's 0.6%. The Dow, quoting it for John Farrow, up 290 points. That's 0.6%. And the NASDAQ up 105 points. That's 0.5%. So stocks moving higher. Tom Keen's Memorial VIX 16.3 continues to move lower. This is Bloomberg.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. The market's telling me, here's another AI play. Just bid it, buy it. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
The semiconductor business is a really cyclical business. These are 2 big-time blue-chip companies. Are people just too exuberant out there?
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, coming up in this hour, Jerry Kutzel, Generalist Portfolio Manager, Fixed Income at TCW. Get his thoughts on these bond markets. The folks at TCW are wicked smart to a person. There's no bums over there. Mary Daly, San Francisco Fed President. She spoke earlier today with Bloomberg's Lisa Abramowitz. We'll bring you some color there. Barry Ritholtz speaks to us. Why? Because it's Thursday. We always talk to Barry on Thursday. And we just say, hey, Barry, what do you want to talk about? And it's always a great stuff. So we got a lot coming up here. Jake Silverman, Bloomberg Intelligence semiconductor analyst, give us his thoughts on what's happening in the semi business. I think Micron had some earnings here, so we'll talk to him about the global supply chain for these chips going forward. Right now, let's go down to Washington, D.C. Amy Marsh has got a Bloomberg Business Flash for us.
All right, thank you, Paul. San Francisco Fed President Mary Daly believes tariffs may not lead to a large or sustained inflation surge. She supports a rate cut in the fall. Despite a slowing labor market, Daly sees no warning signs of weakening, and she says monetary policy is currently in a good place. Daly spoke exclusively to Bloomberg Television. We do check markets for you all day long here at Bloomberg. The S&P 500 is up 0.6%, NASDAQ up 0.6%, the Dow up 0.7%, the Russell 2000 index up 1%. The 10-year Treasury yield at 4.28% and the 2-year yield at 3.74%. A downside surprise in the latest weekly jobless claims. Bloomberg's Michael McKee with that.
They fall to 236,000 from 246,000 last week. There were a lot of people who thought this may be a seasonal adjustment problem that pushed claims up in recent weeks because school was ending, and maybe that's partly the case here because we do see a fall of 10,000. Certainly doesn't suggest that the economy is falling back.
At the same time, Bloomberg's Mike McKee reports continuing claims rose to their highest level since November 2021, a sign that it is taking longer for people to find work. The economy shrank at a 0.5% annual pace from January through March as President Trump's import taxes at least temporarily disrupted business. Commerce Department reports a downgrade from its previous estimate of 0.2% drop in the first quarter. And a divided Supreme Court is allowing states to cut off Medicaid money for Planned Parenthood amid a wider Republican-backed push to defund the organization. It is the country's largest abortion provider. The 6-3 ruling was was handed down earlier today. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Paul and Nora.
All right, Amy Morris, thank you so much. We appreciate that. Let's take a look here at some of the stocks on the move today. I'm Paul Sweeney with Norma Linda, and we're joined by Bloomberg's Isabel Lee. Isabel, what are you looking at?
We have to start with Walgreens. So shares are higher by just 0.6%, but the company reported profits that beat expectations, and this is one of the last quarters of Walgreens as a public company. And this is a hopeful sign because the company prepares to transform into a private company later this year. So adjusted EPS came in at 31 cents. That's above estimates. Revenue also came in higher at $39 billion, also above estimates. So Walgreens is the second largest U.S. pharmacy chain, and it's set to be purchased by Sycamore Partners. That's a private equity firm for $10 billion by the end of this year. It's also in the process of selling its health clinic business, Village MD. So you see shares higher by 0.6%.
Definitely interesting seeing all this M&A that's happening right now in the healthcare space and all the IPOs going on, but you're looking at some other names that are not in the healthcare space. What are you watching?
McCormick. So if you don't know this brand, it means you're not in the kitchen enough. It's a flavor and spice maker. Exactly. And shares jumped as much as 6.1%. That's the most intraday since June 2024. Now it's higher by just around 5.8%. So the company reported EPS, the top estimates, and management also reaffirmed its profit and sales guidance. So it is worth noting that the company's outlook is based on tariffs currently in place. So they don't really factor in any potential actions that may arise for the remainder of 2025. But I guess it's really hard to predict, especially with taco trade and the tit for tat.
I wonder where do you get all these spices? From everywhere,
it's
I would
mixed,
think.
yes, from all over the world. So it's mixed, and that's why they're incrementally affected. We have Bernstein's Alexia Howard, who carries the street high price target of McCormick. That's around $101. She's saying that it's time to back up the truck on this one. So that's really
For a stock
strong
that over
words.
the last 5 years has done 0% compounded annual growth. So I'm backing up the truck. I don't know, be a little minivan maybe. We'll see.
Minivan.
All right, what else you got for us?
Nike. So shares are reporting after the bell today. The stock is up by around 1.18%. So investors will be looking for updates on the company's new products, China business, and tariff impacts. We have Third Bridge saying that investors will be looking at how management will be able to grow new product lines. Bloomberg Intelligence is saying that there will be a focus on women's business, especially after its new partnership with Kim Kardashian was pushed back due to several delays. Jefferies is overall optimistic with their efforts to clear inventory. They say that it's paying off. I have to bring up, though, there's online frenzy surrounding a Nike sneaker loafer called a Snowfer.
Snowfer.
So it has yet to launch, and resale prices are already past $500.
That's got Tom Keene written all over it. I think.
It's too much.
I
could
gotta
never
look up
do
and
that.
see what these look like. That's Nike
It's
in
not a
KE
great
for the
look.
ticker.
Yeah,
It's a
not great
Snowfer.
look. But I don't know.
Snowfer.
We'll see if the kids. I mean, people wear the sneakers with their suits these days. I don't know.
And slip them on and go on about your day.
Or sneakers that look dirty by design.
Is that
I
a
really.
thing?
And they pay more for that these days.
All right, Isabel Lee, thank you so much. We appreciate that, of course, here. If you want more conversations like this, folks, you subscribe to our new Stock Movers Report. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Isabel Lee, thank you so much. We appreciate that. Let's get the latest reporting here on what's happening down in Washington, D.C. We've got the one big, beautiful bill, I think as President Trump likes to refer to it. There's this tax and spending aspects to this deal. Megan Scully, she does all this stuff for Bloomberg News. She's a Bloomberg Congress editor, talking to us about what's happening there. Megan, I see that President Trump has pivoted now to some tax cuts to combat voters' economic anxiety. What's going on down there?
So essentially, this massive piece of legislation, it's multi-trillion dollars, and it is the basis of Trump's legislative agenda. It essentially enshrines his 2017 tax credit or tax cuts, the giant package from his first term, but also has lots of other goodies in there, as well as significant cuts to programs like Medicaid and food stamps. So right now, we are kind of in this extremely messy process of trying to get it through. It's already passed the House. Now the Senate is considering its own version and trying to get it through the Senate on the backs of only Republican support, which has proven to be very difficult. And the president wants it on his desk by July 4th, but it's unclear right now whether that will actually happen.
Megan, what's the latest with President Trump's relationship with Congress? What are the odds of this potentially making it through?
So right now it is, I would say, likely to get through at some point, but they really need to finalize a lot of these various provisions. The Senate parliamentarian, essentially the chief rules keeper in the chamber, is going through the bill to make sure it adheres to these really strict standards for them passing it only on the backs of Republican support. So basically in a way that makes it immune to a Democratic filibuster. That's where the hangup is right now. And we got a ruling this morning on Medicaid that essentially takes most of the provisions anyway, on Medicaid in the Senate bill, these cost-cutting provisions, and said it does not adhere to these rules and they need to be struck. So now Republicans need to find another way to save $250 billion in this bill. So it is, we're, kind of in the heat of the negotiations at this moment in the Senate, while also trying to appeal to, state and local tax deduction folks in the House, New Yorkers and New Jersey representatives, those from Southern California. So they're trying to thread a lot of needles at this moment. I think it eventually does get done, but perhaps not on the president's time frame.
So you mentioned this $250 billion in Medicaid and other healthcare spending that's being debated here today. How much of a roadblock is that for the Republican efforts here?
So it's interesting. It makes it easier to pass among some moderate Republicans, people like Senator Susan Collins, who have been concerned about the Medicaid cuts. So taking those out of the bill, particularly language that would harm rural hospitals, would help gain votes among a certain set of senators and would even help ease its passage among a certain set of lawmakers in the House. But it causes problems with fiscal hawks in both chambers who say that the bill costs too much money and doesn't save enough. So when you create this $250 billion hole, essentially you're creating a problem elsewhere in the Republican Party.
Megan, what's the most ambitious part of this bill? What's the sticking point here that you really need to get Democrat support from?
So this bill will pass without any Democratic support. It is much like Joe Biden's Inflation Reduction Act from 3 years ago. And that's why it needs to adhere to these really strict rules so it can pass the Senate on a 50-vote threshold as opposed to the 60 vote that most legislation requires. So this is really about infighting within the Republican Party and really corralling the various wings of the party. You have people who are concerned about repealing the clean energy tax credits that were passed during the Biden era. So you have moderates who are concerned about that. Then you have the fiscal hawks worried about it costing too much. So this is really kind of an intra-family negotiation for Republicans.
All right, Megan, thank you so much. We appreciate that. As always, Megan Scully. She's a Bloomberg's Congress editor, giving us some latest on this legislation that's winding its way through the sausage grinder down in Washington and D.C. That's how it all happens down there, folks. Let's switch gears, get back to the markets here, particularly the bond markets. Jerry Kudzil joins us. He's a generalist portfolio manager in the fixed income group at TCW. They're based in L.A. I went to TCW probably 2 or 3 times every year to see my equity counterpart, and I avoided the fixed income floor like the plague. Those guys are too much into the math. Jerry's one of them. Jerry, how are you guys thinking about this bond market here? It seems like my Federal Reserve's kind of sitting on the sidelines here. Where do you guys see value out there today?
Yeah, thanks, Paul. I'd say a really interesting question because the Fed, as we see it, is in a little bit of a difficult spot. They have to, they're dealing with potential impacts of tariffs and what that might mean for a price adjustment. They're dealing with soft data. The soft data, it looks like the economy might be slowing down, and we've gotten no confirmation from the hard data. And as you kind of try to put that all together, and you see a little bit of a slowdown in the labor market, and maybe a little bit of a slowdown in the economy. Well, if you don't get confirmation of that, and you get too aggressive, and you try to get ahead of that, and you're the Fed, and you begin to loosen, well, you could be looking at an uptick in inflation in the second half of this year, and that's going to look that's not going to look friendly, or look favorably as you do the look back kind of 6 months forward. So our view is that inflation data is coming down. Our view is that the economy is slowing down, and that ultimately the Fed is gonna have to ease rates. Whatever the pressure from the administration is, who the next Fed chair is going to be. Our view is that the data is speaking and is saying that the Fed should begin to move rates lower.
So the Fed is going to have to ease rates, you said, but what do you foresee the timeline for that being?
Yeah, look, July is a little bit is becoming a live meeting, kind of a 1 in 5 chance, 1 in 4 chance. I think our view is that it's probably not as early as July, but as you move into the fall, we think the Fed's going to start. We think there's enough confirmation here that the tariff impact will not be that significant. It will allow the Fed to begin to normalize rates. Look, we think rates are restrictive to the tune of 100 to 150 basis points. And every day that the Fed leaves rates in restrictive territory is a headwind for the economy. And ultimately, we're already seeing loosening in the labor market and the softening. That's not the concern it was for inflation. So as you take a step back, you say to yourself, well, the Fed should begin to, in our opinion, should begin to normalize and move rates lower. And that's a good thing for duration and a good thing for the bond market broadly.
Jerry, earlier in the year when we had that sell-off in risk assets, we had the volatility, we saw a lot of money actually leave U.S. markets, stocks, bonds, the dollar, and went to international assets, particularly over in Europe. Is that globalization? Is that diversification away from the U.S.? Is that a short-term trade in your mind, or is that something more fundamental?
This is a great question, Paul. I'd say kind of two things. Really short-lived. The market's done a good job of kind of navigating, anticipating, and kind of managing through these events. So these vol events, very discrete vol events, have the market's done a good job at that. As you think about the implications of some of these policies and what it might mean, I do think we believe that there's been a real structural shift kind of globally. I think emerging market flows would tell you that. We're seeing inquiry that would tell you that on the emerging market side, local currency side. And the shift in spend in Europe is very significant. It's a regime shift and will benefit flows, will benefit those economies, and essentially will benefit flows into that segment of the globe. And so it's not so much that we think there'll be an exodus of U.S. assets, more that we think there will be any kind of new dollars or incremental buyer that does favor, does favor a shift in your allocation globally. And we're doing that in our portfolios as well as we look at value between the U.S. and Europe.
Jerry, corporate credit markets are expensive and spreads are tight right now. Where do investors go?
This is a great question. Corporate credit spreads are expensive right now. But you pull it back, Liberation Day, and you saw some real volatility in the credit market. You saw investment grade credit spreads widen out 30 basis points. You saw high yield credit spreads widen out almost 200 basis points. But you take a snapshot of the marketplace, and if you just do pre-Liberation Day and post-Liberation Day, doesn't look like a lot's happened. So ultimately, there was an opportunity. It was really discreet. We did allocate dollars during that period, but we would say that that window's kind of shut. There's plenty of opportunity in the fixed income market to generate income. We're seeing a lot of interest across fixed income broadly. Yields still remain really high, even though spreads are tight. And we do favor both, kind of securitized products relative to corporate credit. We would say if you're looking across fixed income broadly, there's plenty of opportunity, and the asset-backed world, the digitization, data center infrastructure, and then on the CMBS side, there's still opportunity as well.
Jerry, great stuff. As always, Jerry Kudzel, Generalist Portfolio Manager, Fixed Income for TCW. We appreciate getting his time. All right, folks, coming up, we are going to check in with Mary Daly, San Francisco Fed President. She spoke earlier today exclusively with Bloomberg Television's anchor Lisa Bronwitz. And then we're going to check in with Barry Ritholtz, founder of Ritholtz Wealth Management, host of the Masters in Business podcast, coming up in just a moment. S&P 500 up 38 points. That's 0.6%. The NASDAQ also up about 0.6%. The Dow's up 300 points. How about that? This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Interactive Broker Studio, I'm Amy Morris. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. We do check markets for you all day long here at Bloomberg. The S&P 500 up 40 points, NASDAQ up 139 points, and the Dow up 301 points. The 10-year Treasury yield at 4.27%, the 2-year yield at 3.74%. San Francisco Fed President Mary Daly believes tariffs may not lead to a large or sustained inflation surge. She supports a rate cut in the fall. And despite a slowing labor market, Daly sees no warning signs of weakening and says monetary policy is currently in a good place. She spoke exclusively to Bloomberg Television. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, and that is a Bloomberg Business Flash. Paul and Nora.
Amy Mars, thank you so much. We appreciate that. Norma Linda, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, today, San Francisco Fed President Mary Daly, she spoke exclusively to Bloomberg Television's anchor Lisa Abramowitz. Daly joined for a wide-ranging conversation on the U.S. labor market, inflation, and tariff impact. Daly began this portion of the conversation by describing what the labor market looks like. Have a listen.
Well, the labor market's shaping up to be solid, and the data today confirmed that. Now, continuing claims are going up because it takes a little longer to find a job. That's consistent with the hiring numbers just being slower as the economy comes to a more sustainable pace. But when I look at the labor market, there are really no warning signs that it's weakening. We'll continue to watch that, but right now it's progressing solidly, although more slowly than before.
President Daly, a lot of people have said that it is a data-dependent Federal Reserve, and yet we haven't seen enough data to really understand whether inflation is the primary objective or whether it really is some of the weakening that we've seen in the labor market, albeit from a strong place. When will you have enough data to really make that determination?
Well, one of the challenges of central banking that you just have to accept is that we never have perfect data, so you're always making judgments, and you want sufficient data to make a judgment that is really going to be best for the American people. So right now, we have incoming information on the labor market, which does not signal real weakness. It just signals slowing. So we'll continue to watch that. And then on inflation, the data have been good so far coming in. If we were only backward looking, we would say, oh, it's time to adjust the interest rate. But we have to be forward looking, and then you have to make judgments about how you think inflation will shape up going forward. And there I really see three scenarios, and I'm leaning towards one that I'll tell you more and more, but the one scenario, of course, is that it's just delayed. The tariffs are going to have some impact on inflation. It is, after all, an increase in costs, and that will be a more persistent effect. The second opportunity or possibility is that it's delayed, but it will be a one-off. And then the third, of course, which I think is increasingly possible, it's not my modal, but it's increasingly possible, is that this just doesn't amount to as much as the models in history would tell us, because businesses find ways to absorb the costs and they split it down the production chain, and ultimately consumers pay less of that. So I think those last two scenarios, it's delayed, but it's a one-off, or it doesn't materialize to the extent that the models would suggest. Those are where, I'm putting increasing probabilities, and we'll just have to collect some more information to make a decision. But, ultimately, we can't wait for perfect information or we'll be behind, and we can't do that to the American people.
All right, that was San Francisco Fed President Mary Daly speaking exclusively to Bloomberg Television anchor Lisa Abramowitz early this morning. Speaking of the Fed, let's stay on top of that. President Trump says he has several candidates in mind to be the next Fed chairman when Fed Chairman Jay Powell's term as chairman expires next year. Some people are suggesting, does that create the semblance of a kind of a shadow Fed? I'm not sure what that really means. I haven't seen it before in my life. Barry Ritholtz, he's seen everything, folks. Host of Masters in Business on Bloomberg Radio. He's also the founder of Ritholtz Wealth Management. Barry, what do you make of all this talk about who's going to be our next Fed chairman? How do you put that into context?
Yeah, it's a very stark reminder why we have an independent Fed. And just to put some specific flesh on this, recall it was only last fall when then candidate Trump was warning Chairman Powell, hey, don't you dare lower interest rates. That might be good for my opponent, even if it's also good for the country, for the electorate. Now that there's not an election imminent, now he wants the rates lowered. And what we want is, it's preferable to have a apolitical, nonpartisan central bank that is exercising their imperfect yet best judgment about interest rate policy. Otherwise, just imagine rates going down, rates going up, rates all over the place to serve a partisan political purpose. And just look what took place with the fiscal stimulus. You had a huge fiscal stimulus, which really had a very positive impact on the economy. And there are people who would argue some of that is certainly political. But soon after, interest rates took off and the Fed was a little behind the curve in raising rates. And that was just with the fiscal situation, which is both Congress and the president. If we have a partisan political Fed, rates are all over the place. It's not going to be good for anyone other than politicians who want to get reelected.
Barry, reports are swirling that Fed Chair Jerome Powell could name a new replacement for him by September or October. Can you just speak to the significance of what it would mean to have a new Fed chair, especially when it comes to the central bank? They still have to take a vote when it comes to bringing down rates.
Right. So first, for the most part, the way the central bank has operated, the FOMC, the Federal Open Market Committee, has a tendency to follow the lead of the chairperson unless they kind of overstep their bounds. We don't see very often the FOMC disagreeing very openly, being in open revolt against the chairman or even chastising him. There was, I want to say it was early 90s with Alan Greenspan, where there was a sort of emergency rate cut that was sort of jammed by, maybe that was 90, 92, 94, something like that. And the FOMC at a subsequent meeting took pains to point out that this was inappropriate. And unless there's a true emergency, there's no reason to do things this way. So you tend to get a consensus. This is part of the reason why the Fed is apolitical, and it's also part of the reason why they move so slowly. They are a large, august, conservative institution that part of the reason they always seem to be behind the curve is it takes a while to herd all the cats and get them all moving in the same direction. That said, there's no such thing as a lame duck Fed chair the way there's a lame duck president, because, hey, the president can horse trade things in the future. Congress knows we can't ignore this guy because we're going to need him at some point in the future. But, you know, the last 6 months of the second term of a president, there's a reason all the focus is on international relations and diplomacy, because they don't need Congress for that. Any legislation will have been passed way before that. The Fed doesn't operate that way. The Fed chairman, you know, he can pretty much wrangle the votes he wants. It's not like, oh, you're a lame duck, we don't have to listen to you. They're still large and in charge. So the idea of a shadow Fed or nominating someone, I think that's, for the most part, much ado about nothing. That is not how the FOMC operates. I don't think it'll have a big impact.
Red headline crossing the Bloomberg terminal. Tesla executive and Musk confidant Omid Afshar departs the company. We'll have more reporting on that. As looking at Tesla down about 0.5% today on an up tape. Barry, aside from the Federal Reserve, what are you looking at in these markets? Because, boy, if you went to sleep on New Year's and woke up today, you're like, nothing happened. How are you looking at things?
So I have been saying the line I'm about to say for the past 30 years, and nobody ever believes me, but the evidence is it's absolutely true. There is nothing in the world more bullish than all-time highs, full stop. You stop and think about the S&P makes new all-time highs. So the pushback to that is, well, what about the very last one at the end? All right, that's a fair thing. From the lows in 74, the new bull market that started in 1982, you had a few hundred all-time highs, I guess, after 1,000% gain in the Dow. That last all-time high in March 2000, okay, maybe that wasn't your best entry point. But for the most part, bull markets always go further, they always go higher, they always run longer than the average person expects. All you hear about from the midpoint of the bull market is, oh, this market is overvalued, as if mean reversion happens right away. And we know it doesn't. So when you see all-time highs and then a bunch of people catastrophize, oh, here's how this ends badly. You know, I had a conversation with Rich Bernstein, formerly the chief strategist at Merrill Lynch, now runs his own shop. And whenever someone pushes back on all-time highs or talks about, just you wait, here's the problem, his response is, so you're saying your opinion is smarter than the collective wisdom of the market. Listen, markets aren't perfect. They will, at extremes, get it wrong. We certainly saw that before 08, 09, and we saw that at the bottom in 09. But for the most part, markets are mostly eventually pretty efficient. And so if the price is telling you things are at all-time highs, if the market is saying that, we could debate valuations, but the price makes it pretty clear the market is expecting more good news, more revenue growth, more profits. It's kind of hard to argue with that.
Barry, for a long time, the conversation was about inflation, and that was really ruling the market. And of course, that's still in focus, but we also had trade war concerns. We've had global conflicts going on. Where do you think the market is pointing its head right now?
So we went through the whole trade war craziness, Liberation Day, and I've described that as a collective failure of imagination on all our parts, myself included, because no one could really imagine that anyone would put the post-World War II Pax Americana at risk, which has, truly worked to the benefit of the United States. And I'm fond of pointing out that the market, James Carville might have been right about the bond market in the 90s, but in the 2020s, or even the 2010s, I don't want to be reincarnated as a bond market. I want to be reincarnated as the stock market, because every time the stock market drops 10, 15%, policymakers, senators, presidents sit up and pay attention. I don't have any information about what happens when the 90-day pause was announced, but I just imagine Bessent running into the Oval saying, hey, unless you want to be the next Herbert Hoover, you better do something about this, because we're down 15 on the way to down 30.
Yep.
And the market is what drove
All right,
the
we're going to have to leave it there, Barry. Thanks. As always, Barry Ritholtz, host of Masters in Business on Bloomberg Radio, and the founder of Ritholtz Wealth Management. We're going to have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Amy Morris. San Francisco Fed President Mary Daly believes tariffs may not lead to a large or sustained inflation surge, and she supports a rate cut in the fall.
It's both sides of our mandate that have really come into frame since we brought inflation down from the really high levels to something that's closer to our target. Ultimately, we have to watch both sides, and that's what I'm doing. And then the fall looks promising for a rate cut.
Despite a slowing labor market, Daly sees no warning signs of weakening and says monetary policy is currently in a good place. Daly spoke exclusively to Bloomberg Television. We do check markets for you all day long here at Bloomberg. The S&P 500 up 37 points, NASDAQ up 123 points, the Dow up 298 points, the 10-year Treasury yield at 4.27%, the 2-year yield at 3.74%. Sources say Omid Afshar, a powerful executive at Tesla and one of Elon Musk's closest confidants, has left the company. It is the latest high-level departure during a volatile period for Tesla. Tesla stock little changed. The economy shrank at a 0.5% annual pace from January through March as President Trump's import taxes at least temporarily disrupted business. Commerce reporting a downgrade from its previous estimate of 0.2% drop in the first quarter. The U.S. merchandise trade deficit unexpectedly widened in May on the biggest drop in exports since the onset of the pandemic. Imports were little changed. Commerce says the shortfall grew more than 11% to $96.6 billion. That is more than the $86 billion median estimate in a Bloomberg survey of economists. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Paul and Nora.
All right, Amy Morris, thank you so much. We appreciate that. Norma Linda, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Live Podcast, Bloomberg Live Radio. That's where you'll find us. Marketing in a world that values diversity, equality, and inclusiveness. That's perhaps at a challenge right now, at a little bit of a crossroads right here. We want to get the latest on that. Lola Bakari joins us. She's an inclusive marketing strategist for the firm's name is Bico. She joins us via Zoom from Brooklyn. Lola, talk to us about the current environment here from a marketing perspective. How are companies either embracing or kind of moving away from the concept of DEI in their marketing plans?
Thank you so much for having me. It is a very interesting moment right now, as I'm sure everyone is seeing. The company that's on everyone's mind when it comes to how DEI pullback and the pressure to do so is affecting brands is Target. So I'll start there. And I think what we're seeing is a hesitancy to do what's always worked, to celebrate Pride Month, to celebrate Black History Month, to consistently advocate for diversity, equity, inclusion across every level of a brand's identity. It's something that is being, I think, sort of pressured against by what I call a loud minority of voices at the cross purposes of the impact to the wider community of people across the United States and the globe. And it's a really challenging thing for brands because at the end of the day, we know we live in an increasingly multicultural world, and you just can't afford to alienate any of your audiences, which means it makes more sense to be inclusive, does it not?
Lola, how do corporations navigate this environment? Of course, there's different hurdles and obstacles that they may face when it comes to continuing the push for diversity, equity, and inclusion. But what do you do in this moment as a corporation when there's many things at play right now?
Yeah, and it's why I called my book Responsible Marketing. It's very simple. You behave responsibly. And what that means is that you always look out for three things: the social impact you have on all of your stakeholders, communities, customers, employees, etc. You look out for your brand's reputation, and you look out for your commercial impact. And your actions need to have positive effects on those three things for them to be valid, right? So that is where telling a brand that they should pull back from anything related to DEI doesn't make sense on any of those three levers, especially the third when we think about commercial impact. That's what companies exist for. So right now, what companies should be doing is making rational decisions based on what it looks like to be responsible in their environment, to their customers, to their employees, to their stakeholders, to their communities. And if that means continuing to operate their DEI initiatives, like a brand Costco is doing, like brands like Apple are doing, then it means doing that with strength.
So, Lola, the current administration clearly scrutinizing corporate DEI programs. How are these companies? I mean, do they want to go up against the U.S. government? I mean, how do they react?
No, nobody does. Nobody wants to go up against the U.S. government, but what the United States was formed on was a separation of private enterprise and sort of the importance of state guidance and federal guidance. And so companies do have a right to go up against the U.S. government. That doesn't mean they want to. But I think companies are more interested in their long-term commercial success than they are in appeasing the president of the United States and the current administration. So although nobody wants to be in this scenario, it is unfortunately the scenario that companies are being put in. And, you know, the lesser of two evils is to choose your long-term future success as a brand, as a company.
And we do see a lot of corporations those that are actually continuing some of these initiatives, they're renaming it. What does that mean in general in terms of the push for diversity, equity, and inclusion? Does it at all diminish the celebratory aspect of it?
I think it does. I think the question I like to pose to brand leaders and, you know, to corporate executives is, if you're moving away from words like diversity, equity, and inclusion, what does that mean you're moving toward? You can't sort of have it both ways. You can't decide to stop using a word like diversity in the United States of America and expect that people are going to see that as you still sort of celebrating it or championing it in private. That's not really how it works. We know that when we have diverse environments in companies, when we have diverse employee teams, our companies do better. That's proven in countless studies. Right? We know that when there's equity, everybody has a chance to succeed. We know that when there's inclusion, everybody is included in creating economic success and long-term generational wealth for themselves. And those are the principles that the United States of America stands by. So again, if we're going to be true to our long-term core values, we cannot afford to stop using words like diversity, equity, inclusion. That's just, it's akin to saying that in the United States of America, we're going to stop using a word like freedom. It would never happen, and this should not be happening.
So what are you recommending the companies do to navigate their marketing message in this environment?
I'm recommending that they stay strong. If what you said last year worked for you from a commercial standpoint, from a reputation standpoint, and from a social impact standpoint, then you should be saying it again this year. If there are things that you need to tweak in order to better resonate with your customers and your audiences, then do that. But don't make decisions from a place of fear. Make decisions from a place of fact. Don't make decisions from a place of emotion. Make decisions from a place of rationality. And I mean, I went to NYU Stern right here in the city. That's what anybody at any business school will tell you. And that's what I'm telling corporate leaders today. Sometimes we have to have conviction rather than coming from a place of fear.
Lola, thank you so much for joining us. Really appreciate it. Lola Bakary. She's an inclusive marketing strategist. The company's name is BeCo, BE/CO, BeCo. Joining us from Brooklyn via Zoom, talking about inclusive marketing. Some headwinds, some crosswinds, I guess, for marketers as they think about how to get their message out. I'll tell you what the message getting out from the stock market, Nora, is higher. I mean,
higher,
S&P,
higher.
Dow, NASDAQ, Russell, you know, all up 0.6% here today. So a pretty solid day here for the equity markets as we get back to and set new all-time highs.
But you know what's leading right now? Energy stocks. We are seeing that as the best performing sector in the S&P 500. Communication services, the one following. And as we called out earlier, we have real estate as the worst performing sector and consumer staples also in the red. Yep. But pretty strong day.
Yeah, I'm looking at just the commodity space. WTI crude oil, this is for Alex Steele, up 1.9%. The stock's, WTI is at $66 and change here. So it's been all over the place. We had gotten on WTI up to $76, call it $10 of risk premium in there from the news coming out of the Middle East over the past couple of weeks. And then we saw that come out in what might be an end to the war, as President Trump is calling it. So we saw that risk premium come out of crude. I got a little bit of a bounce back here today. Coming up, Jake Silverman, Bloomberg Intelligence semiconductor analyst. We got some Micron earnings, and what's that mean for the space? That's coming up.
This is Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right. We got Norm Melinda. We got Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We're doing all that kind of stuff. We're out there on your smart TV, you know, like Samsung TV, even little Roku, when you just search Bloomberg Pursuits, and we just pop right up there. All right, Micron Technologies reported earnings here today, a semiconductor company. I don't know a lot about this company, so I said, let's get somebody smart in here to talk to us about it. Jake Silverman, he's the one we got, semiconductor analyst for Bloomberg Intelligence. He joins us here in our Bloomberg Interactive Broker Studio. Talk to us about Micron in technology. What did they report, and what's it tell you about the semi space?
Yeah, so they had pretty strong results last night. It was a beat and raise, very strong on earnings, based on strong gross margins, the bit growth was really what drove the strength in the quarter, and pricing was relatively weak based on mix, but generally in the right upward trajectory. And really, you know, the way to think about memory is it's pretty ubiquitous across electronics. You can think about smartphones, PCs, servers, both traditional and AI. You know, everything that you have that's in your pocket, on your desk, sitting somewhere in your house, it's going to have memory or storage, some combination of the two potentially as well.
So we all know that demand for AI computing is really high right now. We're seeing a lot of those companies capitalizing on it, and Wall Street really keeping a high bar for these companies. But how is Micron matching up with all the other companies? Where are they in line?
Yeah, so generally speaking, you know, it's important to keep in mind that Micron and a lot of the memory peers really trade on a cyclical basis. There are quite a few inventory buildups, and then companies do restocking. And in the past, there wasn't really as much of an AI story for Micron specifically, but with high bandwidth memory, of some of their other products, you can think about high-capacity solid-state drives and high-capacity DRAM modules. That has all been an AI story for the most part, and we've seen a lot of tailwinds in that business. Micron continues to gain share, execute very well. It was a pretty important part of their story for this past quarter and heading into the end of this fiscal year.
You know, I said at the beginning, I didn't know a lot about Micron Technologies. No surprise, the stock's up 50% year to date. What's the story there?
Yeah, so, you know, there were definitely a lot of worries once we got into the sort of, tariff-related potential headwinds in April, and that really was a major drag on the stock price because there was potential for higher prices across all of their product lines, and that could really be a hindrance to demand for a lot of consumer-related, specifically products, but like PCs, smartphones, USB drives, and so as that kind of headwind kind of faded away, what's happened is Micron has gotten those tailwinds from AI and better pricing. And so there's just a couple of different factors that have actually been really helping them out. They've continued to generate solid free cash flow over the last several quarters, and the expectation is for that to continue. That's very important in an industry that's very cyclical.
So it said on the conference call that analysts were really asking the CEO questions about HBM. They're trying to get a sense of how much growth is coming. Can you explain what that is for our listeners?
Yeah, so high bandwidth memory, HBM, it's a very important part of AI servers. It's attached pretty much directly to the GPUs that NVIDIA sells that end up in these big server stacks. And so high bandwidth memory has been an area where Micron has been gaining share. SK Hynix was the incumbent, and Micron has been executing very well on their roadmap, first on 8-high, as you'll hear in the call, right, but also 12-high as well. So 8-high is for Blackwell, and 12-high is for Blackwell Ultra GB300 that's coming out. So that procurement cycle has already kicked in, and they're going to see pretty strong demand over the next coming months and quarters for their 12-high stack products. And it's really all AI related. Demand for HBM, it's AI.
So that takes us back to the big picture. And I know you and your technology research colleagues at Bloomberg Intelligence, you do a ton of work on AI. You've got what I think is the definitive report on AI. So folks, if you haven't seen it, go to the Bloomberg BI Go, and that's the definitive report on Wall Street, I think, on AI. We never talk about AI more because it's tariffs all day, every day. just give us the latest on the AI story. Are the investors you talk to, the clients you talk to, are they still as bullish on AI as they were, say, last year?
Yeah, I think there's a lot of optimism still in AI. For Micron specifically, it's been, we've been talking about NVIDIA kind of beating and raising for so many quarters, and maybe a little bit of a slowdown last quarter or so. But Micron, the story was so early. They still like a very small percentage of their revenue is AI related. So it's kind of interesting how there's been a little bit of a dichotomy in terms of AI not being the same tailwind for Micron that you'd see for some other companies like NVIDIA, but there's still a lot of optimism in the investor community, and there's quite a few people trying to understand where does Micron really benefit from AI and how much more, infrastructure expansion for AI, hyperscale CapEx, how does that benefit Micron, and how much more do we need to see for Micron to really benefit heavily from that?
All right, Jake, thanks so much for joining us. Really appreciate it. Jake Silverman, semiconductor analyst, Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. We have what I think is the best technology research on Wall Street. Mandeep Singh, Anurag Rana lead it, but we've got analysts globally covering the global technology space, Asia, Europe, the U.S., we're everywhere. So that's how you have to cover technology these days, and we make the investment. For our listeners in the U.S., a reminder, you can listen to us via satellite radio. I remember satellite radio. Sirius XM, channel 121. Kudos to Mel Karmazin. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories, global business headlines are coming up right now. S&P 500 up 36 points. Norma Linda, thank you so much for stepping in today. More coming up right now. This is Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. Pentagon Chief Pete Hegseth assesses the U.S. strikes on nuclear sites in Iran.
The reality is you want to call it destroyed, you want to call it defeated, you want to call it obliterated. Choose your words.
CBS's Olivia Rinaldi at the White House.
Clearly, the president was watching this press conference closely. He posted on True Social just shortly after it ended, calling it one of the greatest, most professional, and most, quote, confirming news conferences the president has ever seen. This comes after this White House and the defense secretary have really been working to discredit some media reports about a low intelligence assessment that said that the attacks on Fordo had only impacted what the Iran nuclear program could achieve by a few months.
Iran's supreme leader, Ayatollah Khamenei, spoke publicly for the first time in weeks today, saying the U.S. attacks did not achieve anything significant. The UN says centrifuges at least one location are no longer operational. Israeli officials have temporarily halted aid supplies to Gaza to keep them out of the hands of Hamas. Reporter Linda Gradstein in Jerusalem.
Israeli press reports said the aid cutoff came after images circulated on social media of masked men on aid trucks, and Prime Minister Benjamin Netanyahu ordered the army to present a plan within 2 days to prevent Hamas from taking control of the aid.
Back here at home, the Supreme Court says Planned Parenthood cannot sue South Carolina for being defunded by the state. Legal analyst Lori Levinson.
By saying that these individuals could not sue the state of South Carolina, who had decided that they would not give Medicaid funds to Planned Parenthood, the state was basically saying, we don't want to give the money to Planned Parenthood because, among other services, they provide abortions.
The vaccine panel appointed by Health Secretary Robert F. Kennedy Jr. has voted to recommend a new RSV shot for infants. To Gary, Indiana, where 5 people were killed when a train collided with a car.
The South Shoreline train carrying 32 passengers was traveling eastbound when it struck a car that had gone around the gates at the intersection of US 12 and 7th Street. All 5 people in the car were killed. No one on the train was injured. South Shoreline President Michael Nolan confirms the gates had come down.
Never, ever attempt to cross railroad tracks when signals are activated. Always expect a train on any track from any direction at any time.
The South Shore Line has resumed its normal schedule. Michael Wallace, CBS News.
And checking Wall Street, right now the Dow Jones Industrial Average up 300 points. This is CBS News.
Duke star Cooper Flagg was the top pick in the NBA draft last night, and there's a story about one of his college teammates who was also selected last night.
With the 10th pick in the 2025 NBA draft, the Houston Rockets select Kaman Malawach from Rumbek, South Sudan.
Tears streamed down Malawach's cheeks as he shook hands with Commissioner Adam Silver on ESPN. The 18-year-old Duke star was quickly acquired by the Suns, but there's a problem. His visa was revoked when President Trump announced in April all South Sudanese visa holders would be repatriated. That means Malawach may not be able to play in the U.S. without special action to cut through red tape. That could make travel difficult. Deborah Rodriguez, CBS News.
Nestle joins Kraft Heinz and General Mills with a plan now to eliminate artificial colors from food and beverages. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Well, things just got more complicated for the president's big, beautiful bill. Welcome to the Thursday edition of Balance of Power. As the Senate parliamentarian rules, some of the changes to Medicaid that we've been talking about in this bill are ineligible. They break the rules, sending lawmakers today back to the drawing board. We're going to discuss all of this coming up with Bloomberg's Mike Dorning, drawing on his experience here on Capitol Hill. The U.S. attack against Iran is stirring a big debate over the use of intelligence in Washington and the politicization of intelligence. We're going to get into this in an important conversation with Laura Galante from West Exec Advisors, former cyber executive for the intelligence community, also watching cyber threats against U.S. banks. You're going to want to hear this. We've got analysis today from our panel, Bloomberg Politics contributors Jeannie Shanzano and Rick Davis, and it's all after a look at Wall Street. Let's start with the markets right now and the helping hand of Amy Morris. How's it going, Amy?
Well, green on the screen, Joe. We've got S&P 500 up 41 points, NASDAQ up 148 points, and the Dow up 315 points. The 10-year Treasury yield at 4.28%, the 2-year yield at 3.75%. San Francisco Fed President Mary Daly believes tariffs may not lead to a large or sustained inflation surge. She supports a rate cut in the fall. Daly spoke exclusively to Bloomberg Television. Recurring applications for unemployment benefits rose to the highest since November 2021. That extended a sharp increase over the past 6 weeks and signaled more people are staying out of work for longer. Wolf Research Executive Vice President Stephanie Roth says job-finding prospects have slowed down pretty substantially. The layoffs have not picked up.
So it is a sign of a cooling labor market, which was largely consensus kind of heading into this year. I think that should be the sort of message, is that the labor market should hold up, but it is certainly a lot cooler than where it's been.
Download the Bloomberg Intelligence podcast to hear the entire conversation with Stephanie Roth. A divided Supreme Court is allowing states to cut off Medicaid money for Planned Parenthood amid a wider Republican-backed push to defund the organization, the country's largest abortion provider. The 6-3 ruling was handed down earlier today. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's get right to it. Balance of Power with Joe Matthew.
All right, Amy, many thanks as always. Welcome to the little Friday edition of Balance of Power. Yeah, it's Thursday, early side edition here on Bloomberg Radio, satellite radio, channel 121. If you're watching us on Bloomberg Originals, we see you. As well on YouTube, where you can always find us live, audio and video by searching Bloomberg Business News Live. We've got a problem here up on Capitol Hill, and this has nothing to do with intelligence involving Iran. We're going to get to that later on in the hour. It's the parliamentarian we have been speaking so much about, this mythical figure in the upper chamber, slowly kicking things out of the president's big, beautiful bill so they meet the rules. This bill meets the rules of reconciliation. It's got to be a budget-related matter, and some of the things that Republicans have written in here simply don't make the grade. And the most recent one we have has to do with Medicaid, one of the top read stories right now on the terminal. The parliamentarian, by the way, Elizabeth McDonough, this is a real person, ruling ineligible provisions that would have limited states' ability to tax health care providers, right? We talk about the provider tax with a lot of lawmakers here to help fund Medicaid. So this just blew a $250 billion hole in the plan. And yeah, sending lawmakers back to the drawing board here. Something either needs to be rewritten or they just leave this out, and that's not likely. Ask the coach how he feels about it if you want to know what they're saying in the United States Senate. Tommy Tuberville calling out the woke parliamentarian. If you can see this on YouTube right now, on the radio, he writes, the woke Senate parliamentarian who was appointed by Harry Reid and advised Al Gore just struck down a provision banning illegals from stealing Medicaid from American citizens. Glad Mike Dorning is with us. Deputy team leader, our Capitol Influence team here at Bloomberg, who's been around Capitol Hill a little bit in his career. It's good to see you. Is the parliamentarian woke? What does that even mean?
Well, this has to do with they want to pass this legislation with a special way where they don't have to do it the normal way, so it's easier to pass.
Yes.
Normally, they would have to make some concessions to Democrats because if you don't have 60 votes, you can't get stuff through the Senate. But there's this special workaround that they have for things that are purely budget related.
Reconciliation.
They call it reconciliation.
And we've been talking about the bird bath a lot. So I think our viewers and listeners are somewhat up to speed on this arcane exercise.
So there are provisions in there which the parliamentarian ruled are more policy. Like, for instance, they had a provision in there which said, hey, if states use their own money to pay for health care for people who are undocumented aliens here, then they would get penalized for that. And, you know, I haven't read the ruling, but perhaps they argue that's like beyond just a budgetary thing. So there are all these things that have like, they're running afoul of these budgetary rules. But now that's a problem, but not necessarily one that they can't find a way around. For instance, they could come up with other ways to cut $250 billion from Medicaid. Also, they're just right now, Thune, the Senate Republican leader, John Thune, says they're just going to try to refashion these so they comply better with these restrictions. The main more complicated, and they're likely to be delayed. It doesn't mean that the whole thing's run into an iceberg and is going to sink or anything like that.
Although, as of yesterday, they still didn't have the votes.
Yes.
So this just made things a little more complicated.
It's complicated. It's tougher now.
Yeah. Before we go to the big picture of how this actually has a real impact in votes, I want to bring you back to a conversation that we had yesterday. Erin Houchin, a Republican congresswoman, weighed in on this matter with regard to her own state. We asked her about what this would mean for changes to the provider tax when it comes to rural hospitals and nursing homes that could end up closing down without some sort of a stability fund that had been floated as an idea. Listen to Congresswoman Houchin before we move on.
I'm going to hear from my hospitals back home. They're not happy with the Senate proposed version of this bill. We've heard from them loud and clear. We heard from them on the House side. This is a funding mechanism that keeps our rural hospitals alive. So whether we like the mechanism or not, we do have to give something in return or something in its place, and we're not ready to do that yet. So I think that what the Senate is doing goes too far. I'd like to see them dial it back to the House version.
There's a Republican from Indiana speaking. Then we bump into the parliamentarian. What does this mean now for alternatives, as you're describing, to this plan that's being removed?
So one of the big problems has in fact been, just as the Congresswoman was saying, that the amount of money they're cutting from Medicaid would likely force a lot of rural hospitals and nursing homes to close. They just couldn't make it. And, you know, potentially hospitals elsewhere, but for the, you know, Republican base, it's the rural ones that matter the most. So even before this hit a, you know, speed bump with the parliamentarian in the Senate, some of the senators were saying, hey, we don't want a lot of rural hospitals closing in our states. And they were thinking about things like creating a fund, you know, one senator said $6 billion, another senator said $100 billion, but of creating a fund to give more money to rural hospitals because of all the Medicaid income they would lose.
So do they need to find $250 billion, or did this just become more palatable in the House.
So in some ways, it has, in the House, they did not cut as much from Medicaid as they did in the Senate. And partly that's because the Senate wanted to do things like make some business tax breaks permanent, some other things. And it does make it more palatable to some moderates or people who are concerned about Medicaid in rural areas that were going to be against it, like Josh Hawley, for instance. From Josh Hawley's perspective, this just became more palatable.
Fascinating.
But from some fiscal hawks' perspective, it's less palatable. And these are all things that are going to be worked out. It may take some more time. I'll give you a prediction.
Yeah, please.
There will be some big tax bill roughly along these lines passed sometime this year.
But this idea of the 4th of July is starting to look a bit unrealistic, no?
It's looking harder. I wouldn't say it's totally impossible.
John Thune pop up with a deal today and say we're voting this weekend?
John Thune could come up with a deal today, or more likely tomorrow or over the weekend. But it may not work out. But remember, the tax cuts don't expire till the end of the year. So your real deadline is December 31st.
Unless you want to manage the debt ceiling in this big thing, which they're trying to do.
That's a way to create a little artificial earlier deadline.
So they get this done by the time we hit the debt ceiling is maybe another way of looking at this.
That's one way of looking at it. But they could also just pass the debt ceiling separately. But the point is, when you're new, when you've got a new president and a new congressional majority, that's when you have the most power. So you want to take on your toughest, biggest things as early as possible before, like, hey, maybe there's a foreign war that goes wrong. Maybe there's inflation from tariffs. You could lose your popularity and your ability to just get this through. When you've just been elected, that's your moment of maximum leverage. So you want to jam what you want through then.
Is this an I told you so moment for Donald Trump? Remember when he went to talk to House lawmakers when they were debating this whole thing? And I believe the line was, don't F with Medicaid. Should they have listened?
I think that's in some ways, by messing with Medicaid, they made this more complicated. But that's not why they ran into a problem with the parliamentarian. And they can come up with ways to take this money out of Medicaid that would pass the parliamentarian. It's just the ways in which they did this ran afoul of some specific parliamentary rules that say, hey, this has to be about money. This can't be about policy.
Deep wonk out in our last minute. Has the parliamentarian ruled on the current policy baseline? Is this accounting method used in the House going to fly in the Senate?
My belief, I haven't checked that before I came on air. I don't think she's ruled on that yet.
That's still a big, that would be a massive complication.
Yes, now, it's a huge gimmick the Senate is using, where basically they're saying, they always have all these tax cuts expire, including some that they have in this one. Oh, we're really only doing this for 4 years or 10 years or whatnot. That makes them cheaper. But now they've kind of done that and then changed the rules and said, hey, well, we assume those were going to be permanent anyway.
Amazing. Great way to distill all of this with Mike Dorning. Many thanks, Mike. As always, from our Capital Influence team here in Washington, things are changing before our eyes. The idea of a weekend vote here on the big, beautiful bill remains in question. Remember, they wanted to do it yesterday to begin with. We're already looking at the potential for a vote-a-rama this weekend if they get a deal. We'll have more on this later with our panel. Coming up next, our conversation with Laura Galante about the intelligence debate in Washington. This is Bloomberg.
From the Interactive Broker Studio, I'm Amy Morris. This Bloomberg Business Flash is brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. We check markets for you all day long here at Bloomberg. The S&P 500 up 42 points. NASDAQ up 153 points. The Dow up 334 points. The 10-year Treasury yield at 4.26%. The 2-year yield at 3.74%. San Francisco Fed President Mary Daly believes tariffs may not lead to a large or sustained inflation surge. She does support rate cuts coming this fall. Despite a slowing labor market, Daly sees no warning signs of weakening, and she says monetary policy is currently in a good place. Daly spoke exclusively to Bloomberg Television. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now let's go back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. With us live from Washington, Amy Morris on the markets, and we'll get back to Amy for another check on Wall Street a little bit later on this hour as we talk politics in Washington. Thank you for being with us on the Thursday edition, the early edition of Balance of Power on Bloomberg Radio, on the satellite channel 121, Bloomberg Originals, yes, YouTube as well. If you're not on YouTube right now, it's a good time to come on in. Search Bloomberg Business News Live because we have something special for you here. Following the news conference this morning at the Pentagon with Pete Hegseth, the chairman of the Joint Chiefs, of course, Secretary of Defense, castigating the media for getting the story wrong on Iran and not celebrating our men and women in uniform, there are still massive questions about the intelligence complex behind this claim that we destroyed Iran's nuclear program. We're going to get into that because Laura is a true expert, having helped to run the intelligence community. By the way, that's got a capital I and a capital C. I'll explain that in just a moment. But we want to zoom in first on the cyber threats, also part of Laura's specialty, against U.S. banks. This is something that came up in testimony this week that we brought you live on Bloomberg when Fed Chair Jay Powell went up to the House. Remember, he had 2 days of testimony this week, and of course, we focused on his commentary about inflation, interest rates, tariffs. But how about cyber threats from Iran against U.S. banks? This is a conversation with Congressman Gottheimer, who was questioning the Fed chair. Let's listen.
We're in touch with the other regulators and the parts of the government that work on cyber, as you know, and we're in touch with the banks to say, for people to be on the alert for things like that to happen, and also we're on the alert because we're a target as well. So you're right to raise it. It's a big issue.
Enter Laura Galante, now principal at West Exec Advisors, former, as I mentioned, cyber executive for the intelligence community. Yes, that's a capital I and a capital C. And just to explain, this is a coalition, as self-described, of 18 separate U.S. government agencies that analyze and disseminate intelligence. The intelligence community that you ran cyber for stitches all of this together into one composite, which we're still waiting for when it comes to Iran. And I want to ask you about that in a moment, Laura. Welcome back. It's really great to have you on Bloomberg.
Nice to be here, Joe.
To hear that out in the open in a congressional hearing, what is the Fed prepared for, and what threat are we facing, cyber threat from Iran?
Chairman Powell has been laying out cyber threats as a key issue for Wall Street for years. And with the Iranian activity, the bombs dropped on Saturday, we're definitely in a heightened environment in terms of what Iran's willing to do. Now, in terms of Wall Street and the threat to banks and the financial sector, they're always on alert. These are platinum security programs that the banks have. But where Iran is going to play is on the psychological, the influence operations, being really loud and taking credit for activity. So where the banks have to focus is, where's there going to be something disruptive, where an actor from Iran can claim that they've had an impact on Wall Street, on the financial sector, and the Iranian government will want to use that to their advantage at home and domestically.
Yeah. How much of this stuff do we never hear about because nobody wants to say openly that they've been attacked or hacked, and nobody wants to take credit for the attack to begin with?
Well, there's a couple pieces to disclosure.
Okay.
The banks in particular have a lot of regulators and are really incented and do a great job about communicating when they're threatened. There's other sectors, I'll give you water, for example, who don't have the same incentive structure to be able to detect and then be able to talk about the cyber attacks that are hitting them. And this is where Iranian activity could get really interesting and threatening over the next few months. Yeah, water sector, energy sector, even transportation. Where Iranian cyber actors have focused in the past is getting into the industrial control systems, sort of the tech interface that controls water levels, chlorine, water pumps, that sort of thing.
And planting
and disrupting
bugs
them.
that could be a problem much later, right?
Yeah, even turning them off. In other cases, they'll put up the equivalent of kind of digital graffiti, a note that says Israel, to take down Israel, this device was made in Israel, Iran is here, really threatening, again, kind of a psychological effect. But different municipalities have had to take down their water systems as a result of this, just in the last couple of years. So,
is this Iran or China or both?
This is Iran in the case we're talking about now. China's got pre-positioned access at a pretty deep level across the energy sector.
What a thought. Pre-positioned access.
You know, Director Wray, the former FBI director, called them sleeper cells.
Yeah.
But essentially, they've got cyber access in networks that they could use at a time and place of their choosing. And the thought process for China, who's a real strategic actor here, and it's the Chinese military who's doing this, is use that strategic leverage to change how U.S. political will works. Will China be able to deter the U.S. from coming to Taiwan's aid or another ally in the Asia Pacific? And they're using those cyber accesses, they're lying in wait to use those if they need them.
Very scary. We're talking about a ceasefire with Iran, making a deal with Iran. We're going to sit down at the table next week. The missiles aren't flying, but these threats continue. Shouldn't this be part of a ceasefire agreement or a peace deal with Iran?
Iranian cyber activity has been happening in the last week.
Albania
has actually been the victim of some of this. They harbor a pro-Iranian group. So the actors here are on it. Now, the question in the next couple weeks, but even months, is what can Iran touch in terms of U.S. targets, U.S. critical infrastructure targets, and be able to tout the impact of that and potentially use that as a way to get more leverage in the ceasefire discussions and other negotiations that are going to be happening.
Amazing. This is exactly the conversation that I thought it might be, Laura, because we learn a lot when we talk to you. And I want to ask you about the debate that's going on surrounding the use of, the dissemination of, the politicization of intelligence in Washington at the moment. You saw the defense secretary, the chairman of the Joint Chiefs this morning, trying to stitch together a composite to back up claims that Iran's nuclear program has been obliterated, as the president puts it. We had an initial assessment that was apparently leaked to some news organizations, including the Washington Post, CNN, New York Times. So this incredible mission, and has been very angry about this in the Pentagon, at least as led by the civilian leadership of the Pentagon, suggesting that we've insulted the dignity of the pilots who flew this incredible mission that I think we all agree was quite impressive and might have revolutionized the way we do this. Talk to us about the process, because we're told it'll take weeks before we really know what happened. You were part of an organization that, in fact, oversaw 18 different agencies. How many are working on this? How long will it take to have a real answer?
Putting together a damage assessment, especially when it's complex, is what we're seeing after Saturday. Multiple targets, multiple different ways to read how that destruction happened against those targets. This is going to take time. And one of the things that folks in the intelligence community are going to be incredibly diligent about is making sure that they're taking a variety of sources. Some of that sourcing will come from allies. Some of that sourcing will come from reports on the ground. It'll come from a myriad of sources. And they need to take that into account to really understand what the damage looks like. So these first preliminary days, it's wild that this is playing out in the public sphere. The debates around how to gauge this damage and how to convey that and how to explain it is where these 18 agencies are going to be having really fruitful discussions, and then putting that together for the president in a variety of intelligence products. That's going to be the key work here. And it's tough when you have Pentagon leadership, when you have DOD coming coming out in saying some of this. But one of the lines that Kane said that I think is worth seizing on is DOD doesn't grade its own homework. The intelligence community does the damage assessment. And that's a really key point here. So let the intelligence community really get down to it and understand what's happened.
Well, once again, it is really the civilian leadership that's taking this stand, right? We haven't heard official Pentagon, beginning with the chairman of the Joint Chiefs, say exactly what the president has said. I don't want to pull you into a political conversation here, but it is remarkable, and I'm guessing your phone's been blowing up with a lot of folks from the intel community. Remarkable to see this administration, and specifically this president, having denigrated the intelligence community for many years, now turning to it for support to back up this argument.
The intelligence community's strength at its core, and you have so many professionals in there who've really dedicated their time and service to an unbiased approach to the facts. And what they're really going to focus on here is not being politicized and getting straight down to here's what we know has happened, here's what we don't know, and then using what we call confidence language, caveats, a way to explain that room. And political leadership, and it is remarkable to see Trump, so involved in the discussions with intelligence community assessments right now when he wrote them off so much in the first administration. But this is the work. And this is the moment when everybody should really be looking to the intelligence community to understand the picture. And that picture has to inform our actions. If we lose that and politicize that, that's when we're really not going to have a clear understanding of what's going on. And that will not be good for the U.S.
Are these leaks politically motivated when you hear about an initial assessment from a single agency knocking around certain quarters of the news media? Does that bother you?
I can't say. Leaks are always bothersome on classified intelligence, to put it mildly, right? This shouldn't be out there. The question is, can these agencies get the space that they deserve to have the debates internally? They're going to
see it first,
right? This isn't something that makes any sense, and in fact, it's really antithetical to national security to be having these intelligence debates on the outside. You want to give professionals the space to really bat around the facts, bat around different sources, and get to a conclusion that they agree on.
In our remaining moment here, does this go public when there's a final product, or is this something that we'll only hear about years later?
That's going to be up to the decision makers in the intelligence community on what's releasable and what needs to stay within channels. And a lot of that's about protecting sources. It's about a long-term view on American intelligence and what we preserve and what makes sense to put out publicly. So we'll have to wait and see.
Is there an initial, just to add on to that, an initial reading that's used internally by the Pentagon, for instance, to decide if they need to go back in, hit it again?
There's going to be a variety of intelligence products that are created over time that different policymakers in the Pentagon and elsewhere will rely upon. But this is going to be a really dynamic and important focus across the agencies.
We've got to do this again. Stay close to us while we figure this out. It's really great to have you back. I told you this would be an important conversation with Laura Galante, and there you have it. Where else are you going to hear a conversation like that but here this hour on Bloomberg? Principal West Exec Advisors, former cyber executive for the intelligence community. Google that, the intelligence community, capital I, capital C. You might learn something while you're at it. We'll assemble our panel next. Rick Davis and Jeannie Shanzano are with us today, of course, Bloomberg Politics contributors, as we dig further into this and the latest on Capitol Hill, the parliamentarian ruling that the changes to Medicaid you saw coming in the Senate will not be allowed in the reconciliation bill. We go back to the drawing board with Rick and Jeannie straight ahead on the fastest show in politics. This is Bloomberg.
From the Bloomberg Interactive Brokers Studio, I'm Amy Morris. San Francisco Fed President Mary Daly believes tariffs may not lead to a large or sustained inflation surge. She supports a rate cut in the fall.
It's both sides of our mandate that have really come into frame since we brought inflation down from the really high levels to something that's closer to our target. Ultimately, we have to watch both sides, and that's what I'm doing. And then the fall looks promising for a rate cut.
Despite a slowing labor market, Daly sees no warning signs of weakening and says monetary policy is currently in a good place. Daly spoke exclusively to Bloomberg Television. We do check markets for you all day long here at Bloomberg. The S&P 500 is up 40 points. NASDAQ is up 135 points. The Dow is up 357 points. The 10-year Treasury yield at 4.26%. The 2-year yield at 3.73%. The economy shrank at a 0.5% annual pace from January through March, as President Trump's import taxes at least temporarily disrupted business. The Commerce Department reported a downgrade from its previous estimate of 0.2% drop in the first quarter. The U.S. merchandise trade deficit unexpectedly widened in May on the biggest drop in exports since the onset of the pandemic, while imports were little changed. Commerce says the shortfall grew more than 11% to $96.6 billion. That is more than the $86 billion median estimate in a Bloomberg survey of economists. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back now to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. Watching Wall Street for us here on Balance of Power in Washington with our eyes on Capitol Hill. We'll have another update on the markets coming up soon. Thanks for joining us here on the early edition. You know, something always happens right around 12 o'clock when we get together at this time. This is why we always meet here on Bloomberg Radio. And sure enough, the parliamentarian made good on it today. Don't say we didn't tell you this was coming. Elizabeth McDonough, the Senate parliamentarian, drops the hammer on Medicaid today, ruling ineligible certain provisions here that we've talked about with a lot of Republican lawmakers on this program that would have limited states' ability to tax health care providers to help fund Medicaid. The provider tax that has brought the likes of Josh Hawley and Elizabeth Warren together on the same page. It's not going to happen. It's ineligible. It doesn't make the rules of reconciliation. So as we've been reporting, this blows a $250 billion hole in the plan, and there are a lot of questions now about what happens. What are the alternatives? Do they rewrite it? Does this blow the timeline to get it to the president's desk by the 4th of July? Glad to say our panel is with us to weigh in on this, including Republican strategist Rick Davis, Bloomberg Politics contributor and partner at Stone Court Capital, a man who spent a couple of years in the United States Senate. Jeannie Shanzano, our Democratic analyst and senior democracy fellow for the Center of the Study of the Presidency in Congress, also Bloomberg Politics contributor. Let's get into this, guys. Rick, you know what it's like to bump into the parliamentarian. What's the plan B? And what does this mean for John Thune's timeline?
Yeah, I think people are scrambling to sort of trying to figure out what they can do to rewrite these provisions. Josh Hawley has surfaced an alternative of just freezing the provider tax. That seems to have some traction within that group that has been opposing the current mark. But at the end of the day, they'll find a way to try and save some of that $250 billion. If they lose a little of it, that's okay. They're well ahead of the House when it comes to cuts. And so at the end of the day, I would thoroughly expect the talented tax writers, you know, in the Senate to come up with something that would get through the parliamentarian and make its way into the bill. Remember, some of these provisions were written as much to be a political tool as it is a financial tool. And the fact that the parliamentarian is skewering some of these cows is been expected for some time, and now they'll get around to writing the real bill.
Well, it's moving stocks. HCA Healthcare, Tenet Healthcare Group, both rising on this news today, Jeannie, because these hospitals were facing potential cuts to Medicaid funding. This is why lawmakers come on the air and scream about the idea of rural hospitals or nursing homes closing as a result of this. Ron Wyden, the Democrat from Oregon, who's ranking member Senate Budget Committee, talked about Republicans' attempt to capture ideological trophies that will leave Americans worse off. What do you make of the parliamentarians' ruling here, Jeannie, and Rick's idea that they're simply just going to write around it?
First of all, Joe, we will not be running into the parliamentarian at the pep rally at the White House today for the big, beautiful bill. I doubt she's invited, especially as you read, she's been receiving some vitriol by members of the GOP online. So she will not be there. I do think this portion will get rewritten, and I don't think this is a surprise. The reality is that Medicaid rather, has been a sticking point throughout. This provider tax is incredibly controversial, and hospitals are a huge, huge lobbying force on Capitol Hill. Every state in the country has hospitals. Many of those are rural, and the impact of this on those rural hospitals was really upsetting many members of the GOP, setting Democrats aside. I mean, the reality is Republicans have a problem here. The president wants to have this big pep rally at the White House today and sell this bill, but he's got to sell it around people like Tom Tillis, who is going around apparently with posters saying the bill is bad for North Carolina. So how do you both sell the bill while members of your own party are doing that on Capitol Hill? So it's an uphill battle. I think they'll do it. They'll rewrite. They'll get this done. But this may be delayed.
Jeannie referenced some of the feedback that we're hearing from certain Republican senators, Rick, among them Coach Tommy Tuberville, who writes on Twitter, the woke Senate parliamentarian who was appointed by Harry Reid and advised Al Gore just struck down a provision banning illegals from stealing Medicaid from American citizens, a perfect example of why Americans hate the swamp. How can the parliamentarian be woke? What does that mean, Rick?
Oh, it means he's running for governor of Alabama now, and he's got to stock up some of these future ads in advance. I mean, look, everything he says is probably focused on some poll he's got out of Alabama, and he's just repeating the push numbers. So you got to kind of ignore some of these guys who are simply using these moments for political gain, and I think that's definitely in the category. But look, I mean, I think one of the things that's missing are where are all these Republican governors representing these rural states? They are the ones who are going to pay the price first politically, because when these hospitals close or when these individuals get thrown off the rolls, they're still voters in those states, and they are the ones closest to the political world in these red rural states, and they are going to take it in the chin. And I'm shocked that we have not had a group of these Republican governors go to the White House and make their case to Donald Trump. He certainly understands the value of these red state Republicans.
Well, gosh, that's true. And, we had Jim Justice on the air from the White House a couple of weeks back, Jeannie, when it was still on the House side, saying that the president would never allow that to happen. And we remember the president going up to the House. This is, of course, a leak from behind closed doors, but it's Congress, so we heard all about it 5 minutes after it happened. Remember the line he said, "Do not F with Medicaid." Jeannie, should they have listened?
They absolutely should have politically. And I think, Rick was just talking about Tuberville's running for governor of Alabama. Well, why doesn't he care about the cuts? Rick knows better than I do the number of rural hospitals in Alabama, but certainly they will be impacted. And this is what many Republicans have been saying. You look at people like Roger Marshall, you look at people like Susan Collins. When the Senate was talking about possibly delaying implementation of this or the stabilization fund at $15 billion, Marshall was saying it should go down to $5 billion. Susan was saying it should go up to $100 billion. So, there is a lot of discontent over that. And that's just one of the issues that they're debating on. But, I also find it really, really troubling to hear some of what Tommy Tuberville and we've heard others have been saying about the parliamentarian at a time when you see elected and appointed public officials under violent attack. I think our leaders need to be very careful about who they call out in this kind of language. I'm not saying he said anything violent, but to describe this woman who has been appointed doing this very important job for the country in this way so publicly, I think is troubling in this environment.
Yeah, Tommy Tuberville goes under, right? Unelected bureaucrats think they know better than congressmen who are elected by the people. Her job is not to push a woke agenda. The Senate parliamentarian, all caps, should be fired ASAP. We found a little bit of background, Rick, and I had forgotten about this. 2001, I'll bet you remember it. Robert Dove, then Senate parliamentarian, was shown the door for enforcing the chamber's rules and procedures, and there was some confusion about whether he ended up leaving on his own or was fired, rehired, and left on his own. Could McDonough be fired over this, or is John Thune just too much of an institutionalist to let that happen?
Well, John Thune, I think, is an institutionalist. I do think he respects, the rules of the Senate, which they set themselves. And he's made it very clear that he is not going to bend on the filibuster rule. And what we're really talking about is using a device, reconciliation, to avoid the filibuster rule. And so with that comes a compromise. And the compromise is the Byrd rule. All these things were done in order for the Senate to not have to go find 60 votes for these fiscal measures. And so, I know that, Coach Tuberville has not been in the Senate very long, but I guess they give you a manual of the rules of the Senate before you actually start voting on things. And these are the rules. I mean, he cannot like the rules, and everybody gets that. But John Thune's job is to administer the rules. And the last thing he wants to do is crack open a debate around getting rid of the filibuster rule at a time when, he's trying to preserve it. So, this is a classic Senate debate. And the last thing that's probably going to happen is showing McDonough the door.
Classic. We're going to talk, Rick, with Bill Hoagland from the Bipartisan Policy Center in our next hour. I think he's got that manual. We're going to talk a little bit more about the rules here. Jeannie, you mentioned the big, beautiful event. Shame on me for not bringing this up until now. That's what they're actually calling it at the White House today. This is supposed to happen right around the closing bell, 4 p.m. Eastern time, which means 5 p.m. Eastern time. They're going to be in the East Room, the president, to make the case for getting this thing done. Jeannie, he'll be joined, we understand, from the White House by everyday Americans who would benefit from the bill, of course. Tipped workers, food delivery drivers, Border Patrol agents. What's going to go on here, Jeannie? You know the president's penchant for pulling people up to the podium. This one could be a doozy.
This could be fun. They mentioned the people from across the board who are going to be there. It is something like, we keep saying it's a pep rally. We all like a good party. The president, though, is looking at the polls, and he is seeing the polls, which quite generally show support for this bill around 38%. I'm sure a lot of that has to do with the fact that people are confused by what is in this mega bill, not to mention the fact that with all the Republican infighting, they haven't done a really good sales pitch on it. And of course, Democrats are salivating at the idea that these cuts go through and they're able to go try to win the midterm. So, he knows he needs to sell this thing. I'm really curious to see, though, Joe, and you probably have a better sense than I do. Can he refrain himself from talking about the Iran issue, which seems to have consumed him now for days, and focus on the big, beautiful bill, because he's really needed here. He is the closer. If this thing is going to pass, it's going to be because he gets in there and makes this pitch. And this is his legacy. And so it's really important that he begins the sales pitch today and he knocks it out of the park. And of course, I think he said the other day, he wants this done before anybody goes on recess. I don't know if that's going to happen now. Maybe he changed his mind, but he's pushing it.
In our remaining moment here, Rick, I wonder your thoughts on the timeline. We were supposed to be looking at a vote, maybe even tomorrow, or maybe a vote-a-rama into a weekend vote. Senators want to go home. To your good earlier point, by Monday, then the House swoops in to get it done for the president by the 4th. Can that still happen?
It can happen. It may not be exactly on that timetable. They're due to try to have their first vote on this on Friday, tomorrow. And so they're grinding away to get this language finished up into a final bill. They can get that done. It just depends upon whether or not they think the bill they draft will have the votes to pass, because there are a lot of grumpy Republican senators about this bill.
A lot of grumpy Republican senators, says Rick Davis. He'll be back in our second hour along with Jeannie Shanzano, and we will focus more on the Iran story with another doozy of a news conference today at the Pentagon. Headline just hit the terminal. Harvard has been subpoenaed by the House panel over tuition prices. We'll have more on that ahead on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
It's back to the drawing board on the president's big, beautiful bill. Welcome to the Thursday edition of Balance of Power as the Senate parliamentarian has her say, ruling ineligible some changes to Medicaid that could upset the apple cart here on Capitol Hill. I'm Joe Matthew, alongside Kaylee Lines in Washington. Thanks for being with us here on the early edition. Kaylee, this blows, according to Democrats, at least on the Hill, a $250 billion hole in this bill. It could blow the timeline for passage while we're at it.
Yeah, it's kind of a catch-22 here because on the one hand, this change to the provider tax potentially being taken out of the bill would appease the concerns of those Republicans who were not prepared to vote for this package over concern that it would disrupt specifically funding for rural hospitals. On the other hand, if you lose those cost savings you were just referring to and you send this thing back to the House where there's already plenty of fiscal conservatives who thought spending cuts did not go far enough, then it could be harder to get votes in the other chamber.
Right.
So it's complicating no matter what way you slice it.
And reminding us that Elizabeth McDonough, the Senate parliamentarian, is at the moment the most powerful person in Washington.
Yeah, and there are some calls today from the likes of Republican Senator Tommy Tuberville for her to be fired, to use his words, ASAP, though the Senate Majority Leader John Thune is not signaling, at least at this time, that he is willing to overrule the parliamentarian.
Highly unlikely. So there's going to be some rewriting going on here. It's just a question of how it impacts the timeline and, of course, what the House is going to say. And the wheels go around on Capitol Hill.
Yep, and we'll have more on this with Bill Hoagland of the Bipartisan Policy Center, of course, a veteran of the U.S. Senate, as well as Republican Congressman Troy Downing of Montana. They'll both be with us live in just a moment. But as we get things started here, as always, we want to check first on financial markets. And for a look at those, we turn to Amy Morris, who's here with us in Washington. Hey, Amy.
Hey, Kaylee Green on the screen as we check the markets for you all day long here at Bloomberg. The S&P 500 up 38 points. NASDAQ up 136 points. The Dow up 337 points. The 10-year Treasury yield at 4.26%. The 2-year yield at 3.74%. Fewer Americans sought unemployment benefits last week as layoffs remain low. Jobless claims fell by 10,000 to a 6-week low, but jobless workers collecting unemployment rose by 37,000, the most since November 2021. With many businesses reluctant to create new jobs, recent college graduates are facing the toughest job market in more than a decade. The economy shrank at a 0.5% annual pace from January through March as President Trump's import taxes at least temporarily disrupted business. The Commerce Department reports a downgrade from its previous estimate of 0.2% drop in the first quarter. San Francisco Fed President Mary Daly believes tariffs may not lead to a large or sustained inflation surge. She does support a rate cut in the fall. Despite a slowing labor market, Daly sees no warning signs of weakening and says monetary policy is currently in a good place. She spoke exclusively to Bloomberg Television. A divided Supreme Court is allowing states to cut off Medicaid money for Planned Parenthood amid a wider Republican-backed push to defund the organization. It is the country's largest abortion provider. The 6-3 ruling was handed down earlier today. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris with a look at the markets for us. Thank you so much. This is Balance of Power here in Washington, where we're having to wonk out a little bit today in terms of procedure in the United States Senate as they try to move forward on this budget reconciliation package. The mechanism, of course, reconciliation, the one that Republicans are relying on to make sure that they can pass the president's legislative agenda only on a party line vote. No Democrats required. The problem is if you want to use that process, the elements of the package need to pass muster with the Senate parliamentarian. And some of it, Elizabeth McDonough, said parliamentarian, ruled today, Joe, does not indeed pass her test, at least at this time.
That's right. The bird bath is happening as we speak. The bird droppings are piling up, and one of them here is, to your point, blowing a pretty big hole in this bill. We are doing a deep wonk out today. You have to do this to understand what we're talking about, and looking forward to that. There's no one else we'd wonk out with other than Bill Hoagland. But first, we want to get to Bloomberg's Tyler Kendall, who has the latest on these changes to the bill and what it might mean for the timeline. Tyler?
Yeah, hey, Joe. So the Senate parliamentarian ruled that the provision lowering the Medicaid provider tax doesn't comply with the rules required for reconciliation that Kaylee was just laying out there. Now, the Senate plan would have lowered the Medicaid provider tax over time to 3.5% for those states that did expand coverage under the Affordable Care Act. Essentially, according to that plan, that would have meant less federal matching funds for these states. So on one hand, this is considered to be perhaps a political win in that it takes off the table one of the most politically fraught issues that Senate Republicans were dealing with. In fact, many of the Republicans had raised concerns about what lowering the provider tax would mean, in particular for rural hospitals that utilize it to essentially up their funding. But on the other hand, it means less cost savings to the tune of $250 billion when you combine it with some of the other health care provisions that have been stripped out of this bill as part of the bird bath process. Now, we are still waiting on some some additional details and clarity from the Senate parliamentarian on why this provision in particular does not meet that threshold, that level for reconciliation, since we know that any provision in this bill will have to deal with budgetary matters. But at the end of the day, Joe and Kaylee, sources tell us that Republicans might try to rewrite this provision in some way to make sure that it does get through. But that could ultimately take time and delay the timeline to get this done by July 4th.
It's a perfect outline from Tyler Kendall. Thank you so much, Tyler. And the idea of the changes to the provider tax, to give you a sense of how many Republicans, including Democrats, were outraged by this idea, many of them from rural districts where local hospitals and nursing homes were set to close. We asked Congresswoman Erin Houchin about this, Republican from Indiana, just last evening on the late edition of Balance of Power. Here's what she said.
I'm going to hear from my hospitals back home. They're not happy with the Senate proposed version of this bill. We've heard from them loud and clear. We heard from them on the House side. This is a funding mechanism that keeps our rural hospitals alive. So whether we like the mechanism or not, we do have to give something in return or something in its place, and we're not ready to do that yet. So I think that what the Senate is doing goes too far. I'd like to see them dial it back to the House version.
The House version, of course, was a freezing of the provider tax level, whereas the Senate is looking to actually reduce it. But again, the parliamentarian says that Senate plan, as it stands right now, is not going to fly. And for more, Bill Hoagland, Senior Vice President at the Bipartisan Policy Center, is joining us here in our Washington, D.C. studio. So, Bill, the operative words really are as currently written. This cannot fit into the reconciliation process. Do you have a sense of what maybe it is the parliamentarian is identifying does not work and how it could be tweaked in order for it to pass muster?
Let me first address something that's we're wonky here this afternoon, as you say. The parliamentarian does not rule.
Okay.
The chair of the Senate, who's sitting in the chair, she advises the chair. So first of all, there's a real concern about the parliamentarian's ruling. She's not ruling. She is advising who's sitting in the chair. The chair can accept the advice or not accept the advice, which is an important point.
Thank you.
And I just want to make that clear. In terms of, I don't know.
That's news to most people. We hear about the parliamentarian ruling all day long. You've got senators calling for her firing today, Bill, so that's a pretty important detail.
I think that's so unfortunate. She is a career person. She's not political. She's just abiding by the law, and she is carrying out her responsibilities effectively. Reconciliation has become something that's much more than what it used to be, and people are using it for things that was never intended. This is supposed to be a budget act. Now, in terms of the provider tax, I don't know the specifics. I can tell you that I think we had a provision earlier this week that she said violated the Byrd Rule, had to do with the SNAP program and a state match. It was a simple fix. It was a date. I don't know exactly what it is that's creating the current problem, but I do have a feeling that it's probably something that's fixable, because this does save something like $280 billion, $250 billion over the next few years. So I just want to make it clear that this is, I think we're rushing to judgment here. I think the staff now understand there may be some tweaks they have to make in the legislation. It may be greater than that. I don't know, but I don't want to put all this burden that the parliamentarian has ruled.
Sure.
She is advising.
Well, I think the reason some people view this as being potentially something more definitive is because, by and large, the signal from Republican leadership to this point has been, we will abide by the guidance of the parliamentarian. Do you think if they cannot fix it, there's a chance that they actually decide to ignore her advice?
Well, exactly. Now, what happens is she tells the chair, this particular provision violates the Byrd Rule. A point of order is well taken. At that particular point, the chair, who's sitting in the chair, that could be the vice president of the United States, could say, no, I don't think so. And I'm not going to rule that it violates it. Now, at that point, we're wonky. At that point, somebody can stand up, I question the ruling of the chair. And at that point, it would require 60 votes to overturn the ruling of the chair. So the chair can make the final decision, and it would require 60 votes to overturn the chair. So it's possible that they could say, listen, we're going to roll the dice, and we're not going to fire the parliamentarian. we're simply going to raise the point of order and waive the point of order if it comes to that point.
So it sounds like Senator Tuberville should be calling for the firing of the chair, if anyone in this particular case, which I guess is not a very realistic idea. But so the idea, though, that this goes back to the drawing board, it can be rewritten in a way that may satisfy the parliamentarian.
Absolutely.
Yeah.
And I have a feeling this does have a budgetary consequence, clearly, $250 billion. And it does have a budgetary consequence.
Yes.
And so I think it meets that test. There must be something else it may be a date, it may be something. It's very restricted, but I think this is something that probably can be fixed by the staff. I don't know. I'm being fair about it. I don't know what specifically it was that created the point of her concern that it violates the Byrd rule.
So we have a question of if it can be fixed, also a question of on what timeline, knowing that the Senate wanted to have a vote-a-rama this weekend, start the recess, come Monday, give it to the House, hope this thing is all said and done, signed by the President July 4th. What does that timeline look like now in your mind, Bill?
I've been one of the more pessimistic ones about this. I think the July 4th deadline is kind of somewhat arbitrary in terms of we don't have to have this finished, and I think they can. I'm certain that's what the president wants, is to have it on his desk, but that requires getting it out of the Senate, and they're changing it, so it'll have to go back to the House. The House will have to be called back from recess next week to vote on it, to get it there by the 4th of July. There's still a lot of work to be done. It seems like you should slow down, take your time, do it right, and get the votes. Right now, I don't think they have the votes for what's in the Senate, let alone maybe what would be in the House. So it's going to take a little time here to still work this out. So I'm the one who probably will miss on this, because boy, there's a lot of pressure to get it done by the 4th. But I think that's a little bit too ambitious of a schedule right now.
We always learn something when we talk to Bill Hoagland.
Indeed.
Really appreciate this, Bill. A tempering voice and a bit of a reality check, right, to some of the headlines that we've been hearing with the Bipartisan Policy Center. Bill Hoagland with us in downtown Washington, D.C., just a few blocks from where Congressman Troy Downing is right now. The Republican from Montana's 2nd District joins us live from Capitol Hill for his view on all of this. And Congressman, it's great to have you back with us on Bloomberg TV and radio. You hear the concerns about timeline now that the parliamentarian has slightly changed the picture on the Senate side. Can you still get this done? Will the House be ready to catch a long ball if the Senate throws it out there, say Sunday night or Monday?
You know, I think I'm optimistic. We have had a lot of deadlines that people were saying there's no way we're going to hit, and we've still met those, and that's happened this entire Congress. So I'm still optimistic we can hit that deadline. I know there's a lot of work out there, but you know, I'm confident in the good work on the in the other chamber and what we can get done in the House.
Well, when we consider what's going on in the other chamber today, this decision or this advice from the parliamentarian that changes to the provider tax does not fall into what is eligible under reconciliation, is that a good thing or a bad thing in your mind, Congressman?
Well, it's unfortunate. There's a lot of stuff that has been, fallen by the wayside with these decisions with the parliamentarian, and I think there are, opportunities to, bring points of order, see what can be done on the Senate side, and I really hope that the senators come to a good resolution here. But I'll say I'm really disappointed in a lot of the stuff that's fallen off, and that's one of them. There's a lot of things that we worked really hard in getting consensus into getting really good policy. And the part that is the most frustrating about this is I think that, it wasn't perfect for everybody, but we got a really good product through the House, something that we can get passed in the House. And now that it's being kind of taken apart, or these parts are taken out, because it all works together, intricately. And so it's frustrating for us on the House side to see it going through this process. But I'm hoping that that the other chamber can, get to some consensus to get some of this stuff back in. And a lot of these are key components that we'll need to continue to have the support that we have had on the House.
Of course, you don't have a parliamentarian to deal with on the House side, Congressman, right? So you're speaking slightly different languages here, and I wonder how worried you are about what else we could hear from the parliamentarian if she has a problem, for instance, with the current policy baseline, the method of accounting that you were using in the House. That would be a game changer, would it not?
It would be a game changer, and it really comes down to the same thing I just said is we worked really hard. Leadership worked, the rank and file worked. We all worked really hard on getting some good policy together that all works together really well. I mean, we're looking at just how good this bill is in terms of the tax cuts, in terms of securing the border, of supporting our military, everything that's in there, making sure that we are protecting protecting Medicaid for those who are actually entitled to it. There's so much good policy in here, and it is a little frustrating to see things happening over there, but I'm still optimistic that we're going to get some resolution there, that the Senate is going to work hard at getting this through so it still passes muster and we get a good product that we can pass quickly in the House.
At this point, Congressman, as you hear from your colleagues across the conference, are you more concerned that fiscal conservatives in the Freedom Caucus or the SALT Caucus could ultimately be ones that act as the greatest barrier to making sure this thing gets requisite votes?
Well, you know, here's the thing, is they both have strong voices, and of course we all have to listen to both sides of that to get something through. We got this through in the House by a one-vote majority, so it's a fine line there of making sure that we are finding as best consensus as we can amongst these different parts of it. You know, everything, you know, like you mentioned, from the Freedom Caucus's concerns, and, you know, a lot of those I share, to, you know, the concerns we have on the other side, and, you know, some of those I share. You know, it's a very fine line that we got this through. Those voices are all meaningful because we can only, you know, we can't lose that many votes and still get this passed. So we need to make sure that we are, you know, finding not the perfect, but the good. And I think what we have right now is a really good bill. And if we can continue listening to both sides of this and understand that not everybody's going to get everything that they want, but this is a very important bill to the American people. It's a very important bill to my district in central and eastern Montana. And I do believe that we are going to find that consensus and get something that is a very strong bill through here.
When you talk to your colleagues from New York, New Jersey, and some of the other SALT states, or at least lawmakers with SALT districts, Congressman, what's the conversation like? You don't believe any of them would actually vote no and allow people's taxes to go up over the specific singular issue of SALT, do you?
Well, that's been a big conversation that I've heard bits and pieces, and you know, a lot of the colleagues that I have on that side, I mean, they've been very, very strong in their convictions there. Whether they would do that or not, I got to tell you, I don't know. I'm not really comfortable putting them to the test because I don't know, and it's really important to me. It's really important to my constituents that we get these tax cuts and we get these spending cuts in.
All right, Congressman, we appreciate you joining us live from Capitol Hill. That's Republican Congressman Troy Downing, representing Montana's 2nd District, live with us on Bloomberg TV and radio. Thank you so much. Of course, we're going to be hearing more about this one big, beautiful bill later on this afternoon from the President of the United States himself, holding an event slated for 4 p.m. Eastern Time, dubbed the One Big Beautiful Event. He's going to be trying hard to make the case for this legislation and everything he says it will do for Americans.
At least he's staying on brand with this. That's going to coincide with the closing bell, at least by the schedule here.
Yeah.
He's going to be joined by what they're calling everyday Americans at the White House. This will be in the East Room. We're going to be hearing from a number of different workers, stakeholders, I guess, who could benefit from this bill. The president could also make some comments about Iran.
Yes.
And we're going to get into that coming up next with our panel. Rick Davis and Jeannie Shanzano are with us. You saw that news conference at the Pentagon this morning, huh?
Yeah, with the Defense Secretary Pete Hegseth also watching the press conference from Caroline Leavitt, or the briefing rather. She says no talks are scheduled yet between the U.S. and Iran. We'll have more next here on Bloomberg TV and radio.
It's 1:21 on Wall Street. I'm Amy Morris, and we check markets for you all day long here at Bloomberg. The S&P 500 up 43 points. NASDAQ up 161. The Dow is up 353 points. The 10-year Treasury yield at 4.25%. The 2-year yield at 3.71%. We're awaiting earnings from Nike after the closing bell. The company continues to eye a turnaround despite tariff headwinds and inventory challenges. Store traffic, though, is improving, so Nike might report better direct-to-consumer sales. Shares of Nike more than 2% higher. Walgreens Boots Alliance reported quarterly profits beating Wall Street expectations. The company is set to be purchased by private equity firm Sycamore Partners for $10 billion by the end of this year, with plans for the future of Walgreens unclear. Shares of Walgreens right now about 1% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much watching Wall Street for us as we cover politics in Washington. We'll get back to Amy a little bit later on this hour for more on the Thursday trade. A lot of us started our days with eyes on the Pentagon. Pete Hegseth in a news conference alongside the chairman of the Joint Chiefs of Staff, as announced by the President of the United States last evening. They got behind the podiums just around 8 a.m. with a room full of reporters. The Pentagon press corps was assembled for an update on the mission over Iran, and as the president put it, to defend the dignity of the pilots who flew the B-2 bombers and the other aircraft, not to mention the support crew that was part of that entire massive precision strike against Iran. We didn't learn a lot more about intelligence, although we did talk about it quite a bit. The chairman of the Joint Chiefs showed a video about this bunker-busting bomb, its capabilities. They had satellite photos of the Fordow site, for instance, in Iran that we attacked, but there wasn't new intelligence to share. The headline on the terminal says it all. Hegseth berates media as questions linger on Iran strike impact. The Secretary of Defense went out of his way to castigate reporters in the room. Listen.
Because you, and I mean specifically you, the press, specifically you, the press corps, because you cheer against Trump so hard, it's like in your DNA and in your blood to cheer against Trump, because you want him not to be successful so bad, you have to cheer against the efficacy of these strikes.
So let's play this now to our political panel. Rick Davis and Jeannie Shanzano are both with us, Bloomberg Politics contributors. Rick, of course, partner at Stone Court Capital and Republican strategist. Jeannie, our Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. Rick, as we see the defense secretary quite literally calling out the press who was in the room for this press conference, what do you make of this strategy by the administration to undermine basically the news media and its coverage of this, rather than trying to iron out for sure first what we actually do and do not know about how effective these strikes actually were without having the intelligence in hand?
Yeah, look, I mean, I don't think it's anything new. I mean, we've all lived through the era during George W. Bush where the Secretary of Defense then, Don Rumsfeld, would berate the press on a daily basis, talk about, how they didn't understand what was going on, or that he had intelligence that they didn't have and he wasn't going to share it. And so this is nothing new in that regard. I would say it would do the press some good not to chase the speeding truck every time it leaves the garage. And then what I mean by that is there's a leak report. It's a draft report, and yet the press reported it as this is the conclusion. And we all know that they're still working on this thing. Today, the CIA came out and said Fedora was severely damaged, much more echoing the president's initial comments. We don't know where the president's getting his information, and we don't know the conclusions of this storyline when it comes to what is or isn't the future of the Iranian nuclear program. But you would think that it was a disaster, the attack that the U.S. put on Iran. And so I feel for the Secretary of Defense and his frustration. He can't control the media, but I think the media needs to learn to control itself a little bit. because it is almost borderline insulting to the military who risked their lives to do the attack to begin with. The last thing I would say about Secretary is he ought to quit calling the President of the United States Trump. He should call him the president. It's his boss. And if I kept repeating my last name of my boss over and over again, I think he would fire me. And I think that would be justified.
Wow, all right. A pretty interesting read from Rick and a pretty even-handed one, Jeannie. I'm curious your thoughts on this because, of course, blaming the media is the oldest trick in the book, and it's not something that we're unfamiliar with when it comes to this administration. Do we also need, however, to acknowledge the fact that the Pentagon press corps is a little bit different? These are specialized reporters in many cases who are not on TV every day, and they're not chasing every lead that comes out of the White House. Many have been there for 30 years or more, including our own Tony Capaccio, who is in the front row for that event today. Is it their job to question what's going on right now, Jeannie, or wait for a more complete assessment?
They are doing their job. I mean, this should be called out for what it is. It is distraction. And who better to get us distracted than the media that everybody likes to pound on? There was not one report that I saw, and I would love if somebody would share it with me, of anybody who reported on that assessment from the DIA, which said that this is the final word, this is it. Nobody said that. They said it was a preliminary assessment. And if they did say that, they're wrong and they can be called out on that. But this is all a distraction from the real issue, which when Pete Hegseth was asked about, he too sidestepped it, which is what happened to the enriched uranium and the centrifuges that were not at those three facilities that presumably survived the strikes. That means that Iran has the elements to reconstitute their nuclear program. When he was asked that by the crazy press, he didn't answer. And so that is what needs to be addressed. What is the state of the scientific community in Iran? Where does the knowledge lie to reconstitute this? Because you cannot bomb away that kind of knowledge. He sidestepped that all in his effort to do what this administration does, and quite frankly, a lot of administrations do, is to try to distract the public with nonsense. Go ahead, attack the press. They are doing their job. But give us the answers we deserve and need. And by the way, if the assessment is not ready, then just say that. But that's not what they've said. They have discounted the assessment they don't politically like in favor of one that is equally as preliminary, and that is the one the CIA wants. So they often conflict. That's pretty standard. We can wait for the assessments, but answer the question about the uranium and the state of reconstitution in Iran.
Well, the White House press secretary, Caroline Leavitt, is in the process of answering questions from the press in the briefing room right now as we speak. And no surprise, Iran is featuring heavily in the questions from reporters. Some of the things we've heard from Caroline Leavitt include that no talks are yet scheduled with Iran, but the U.S. is on a diplomatic path with Iran, and that the goal of meeting with Iran would be to work towards a lasting peace. She also noted to the conversation we were just having that only tidbits of the Iran intelligence report were leaked to CNN and the New York Times. But Rick, on this idea of talks in particular, knowing the president in the Netherlands yesterday at the NATO summit said he doesn't think it's necessary to have a diplomatic deal with Iran. How do you see this actually moving forward? Is it actually necessary? Do you believe the president still wants to be able to say he made a deal with Tehran?
Yeah, I think that certainly the Republican senators, more hawkish guys I know, they want to see an agreement with Iran, and they want to see Iran agree to do no more processing of nuclear fuel, right? I mean, like they want an agreement that is verifiable by IAEA and other inspectors, and bypass this whole debate as to whether they could or couldn't do it, and get them to commit to not doing it. And if they commit to not doing it, then we can start doing things like taking off sanctions and looking at better diplomatic relations and all those things that we want to have, but it comes at a price. It comes at a price to, you know, the Western societies who want fewer nuclear weapons running around the world. And so I think that initially the president's probably, first reaction of, hey, you know, they can't make a weapon now. That may be technically true. But the real question that Israel's going to ask, and people like Lindsey Graham and John Thune and others are going to say is, what can we do to tie up Iran so that this never becomes another issue where we have to get B-2 bombers over their airspace?
Mm-hmm. They're talking as well in the White House briefing about the sharing of intelligence with Congress and questions about limiting that information, Jeannie, something that we've talked about quite a bit this week. There was, in fact, a briefing scheduled for today with lawmakers, a Senate briefing that had been limited to just Pete Hegseth, we understand. Tulsi Gabbard, who testified in March, of course, that our intelligence agencies assessed that Iran was not building a nuclear weapon, notably absent from this briefing. What do you make of this turning of the screws on intel sharing with Congress?
Yeah, you know, they've been talking a lot about this leak, and absolutely, if there is a leak and that leak is coming from wherever it's coming, it should be investigated and they should plug the hole. But that does not mean that they get to bypass the law, which says that they have to alert Congress and they have to brief them within 48 hours. And so I'm happy the briefing is occurring today. It should be a full throttle briefing. So it is concerning when people are kept out, but that's obviously the administration's decision to make. You know, it is fascinating, by the way, that you have Donald Trump on the one hand saying that no talks are needed, but yet he cannot provide proof that the nuclear program is gone, because what would they do to ensure Iran will comply with this no rebuilding? I mean, that is the question that needs to be answered. And if you're not going to talk with them, how do you ensure that? And Congress has a right to know all of that. And so we are once again in a position where anybody who takes power in Iran going forward is going to say, we were hit because we didn't have nuclear weapons. The deterrent is nuclear. Let us go underground, AKA North Korea's model, and let us reconstitute. And the president, because he wants to say this was one and done, decades, and I solved the problem in 12 days or 12 hours or whatever he says, he doesn't want to deal with that very real, what would be a catastrophe for the West that Rick was just talking about. And that's what Congress deserves to know from our defense sector.
For what it's worth, today the reporting is that Pete Hegseth, along with Marco Rubio, John Ratcliffe, General Dan Kane, will be part of that briefing, just to be clear, and not Tulsi Gabbard. Last evening, we spoke with Senator Tammy Duckworth, who suggested that Hegseth may alone be briefing them. Great conversation, and thanks to both of you, Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors, with us here on Balance of Power, live from Washington, Thursday edition, alongside Kaylee Lyons. I'm Joe Matthew, as we turn to the cyber threat against the United States, but also the way this information is collected, Kaylee, and disseminated. We've got a real expert on this coming up. Ann Neuberger, who used to run cyber in the Biden administration, is going to join us coming up next on the fastest show in politics. This is Bloomberg.
1:40 on Wall Street. I'm Amy Morris. We check markets for you all day long at Bloomberg. The S&P 500 up 0.75%. NASDAQ up 0.9%. The Dow is up 0.9%. The Russell 2000 Index up 1%. The 10-year Treasury yield at 4.26% and the 2-year yield at 3.71%. Sources say Omid Afshar, a powerful executive at Tesla and one of Elon Musk's closest confidants, has left the company, the latest high-level departure during a volatile period for Tesla. Tesla stock is little changed. Sources tell the Wall Street Journal CoreWeave is in talks to acquire Core Scientific. No details yet, but Core Scientific has been growing fast and would likely cost quite a bit. Core Scientific is one of the largest owners and operators of high-powered digital infrastructure for Bitcoin mining and hosting services in North America. CoreWeave is a cloud infrastructure provider for AI. CoreWeave shares are down nearly 1%. Core Scientific shares, those are 23% higher. The Supreme Court, in a 6-3 ruling, says the Medicaid Act does not give beneficiaries a privately enforceable right to choose a specific provider. That decision allows the state of South Carolina to block Medicaid funds from going to Planned Parenthood for cancer screenings, contraception, and wellness checks. It also sets a precedent to allow states to cut off Medicaid funding for Planned Parenthood, even if it's not for abortion services. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew and Kaylee Lyons.
All right, Amy Morris keeping track of the markets for us. Thank you so much. Meantime, Joe Matthew and myself are keeping track of the ongoing narrative around the U.S.'s strikes against Iran's nuclear program this past weekend. And, of course, questions around what the intelligence suggests about just how effective those strikes were, knowing the administration maintains that they were totally obliterated in terms of these nuclear facilities. We heard as much from the Defense Secretary Pete Hegseth, who held a press conference at the Pentagon today to berate the press of coverage that suggested the strikes were not ultimately as effective as the DoD is claiming at this point. But amid all those questions around intelligence and what exactly has been accomplished here, our colleague Ed Ludlow had the chance to speak up with some pretty important individuals earlier, including Mike Gallagher. He's now Palantir's head of defense, but also a former Republican congressman and a former military intelligence officer. He sat down for a joint interview with Jonathan Webb, the CEO of the nuclear company, with Ed Ludlow, and Iran was a topic of discussion.
Listen, I think it was good for deterrence not only in the Middle East, but globally. For decades, the Iranians have used the cover of diplomacy to covertly advance their nuclear program. But ultimately, there are two things that are going to ensure a semblance of stability and peace in a region that has defied our past efforts to impose stability and peace upon it. One is a credible, conventional, and strategic deterrent, which is why it's so important that we rebuild our defense industrial base in order to give credibility to our deterrent. And the second is the framework of the Abraham Accords and our ability to build off that historic level of rapprochement between Israel and the Sunni Arab Gulf states. And the thing that unites those at times strange bedfellows, the long pole in that tent, if you will, is the shared threat of the Iranian regime, the leading state sponsor of terrorism.
Jonathan. Yeah, and where I'll jump in on that is to say there's a clear distinction between how you harness nuclear for power and nuclear for what we're seeing overseas as a potential weapon. I think it's important for your viewers that you know, when we think of nuclear, 100 operating reactors in the U.S., roughly 100 over decades, not one person in the U.S. has died from radiation fallout. So even 3 Mile Island, that, you know, if you look back at the stories in the 80s, the technology failed exactly the way it was supposed to. No one as a result, you didn't see radiation fallout. We are the best nuclear operators in the world. We need to get back to building, because if we don't build nuclear power plants, it's China and Russia that are doing that.
Really interesting conversation, Kaylee, and it helps to set up our talk with Ann Neuberger as we try to learn more about the intelligence surrounding U.S. strikes against Iran. And it brings us back to the Pentagon, as we were just discussing this morning. The Secretary of Defense and the Chairman of the Joint Chiefs speaking deliberately about the intelligence gathering process and castigating reporters while he was at it in the role of Pete Hegseth this morning for not waiting for a more complete picture. Also, leaks of a preliminary report that was not fully baked Ann Neuberger has spent a career in national security, now Payne Distinguished Lecturer at Stanford University, former Deputy National Security Advisor for Cyber and Emerging Technology in the Biden administration. She did join us on this program when she was in the White House and now in her new role. And it's great to see you. Thank you so much. You were a member of the NSA, and so you have unique perspective on this conversation that's taking place right now in Washington, D.C. What is your advice to our viewers and listeners who are trying to get their heads around what happened and seeing a lot of mixed reporting about news coming out of the intelligence agency? How long will it take to have a composite look at exactly what happened on Saturday night?
It's good to be here with you. And I would say first, as you noted, I'm no longer in the intelligence community, so I haven't seen the actual report. But I would say three things. First, assessing the impact of a covert nuclear program is complex. So you'd want all the different sources of intelligence that the intelligence community generates: imagery, signals intelligence, human intelligence, even the specialized unit in the Department of Energy that assesses nuclear programs around the world. Some of that collection takes time, and I would suspect that some of it, particularly from Fordo, may not be available at this moment, given it's unlikely there's power there. It's probably difficult to get data out. So that will take some time to pull together. And frankly, really what we'd ideally want is inspectors on the ground to see it. But you'd want as many of those sources of intelligence on what they call a national intelligence assessment, something that brings that all together. I think the second thing I would say, we say in the intelligence community, be clear on what we know, what we don't know, and what we think. And in this case, there's probably as much we don't know yet. And I would hope that even in a report like this, it would clearly detail what data it's based on, what data is missing that's needed for a comprehensive assessment. And then finally, what occurred here is deeply troubling for intelligence officers who really believe in the professionalism of the community and the culture of nonpartisanship. At the end of the day, intelligence is intended to operate in the shadows. And what occurred here, which is potentially the leak of a partial report, perhaps for political purposes, just can really shake Americans' confidence in the intelligence community and in its unique role. And I think the thousands of professional intelligence officers deserve our trust. So the larger piece here of we should be building up these institutions, not tearing them down, but things like this are deeply troubling because they run counter to the very culture and the nature of what intelligence should do.
Well, and to your point about it needing to be clear what is not known yet, how frequently are preliminary reports like this drastically different in terms of outcome than the full complete report where all questions have been answered to the extent of our capabilities?
In this case, because the program was covert, it's underground, so many of the sources that it's a hard assessment to do in the first case. It's particularly hard as well because some intelligence sources I would expect, some of the technical sources have probably even been destroyed in the strikes. So as a result, there needs to be a good assessment to say, what do we know today? And how do we rebuild potentially some collection that may be needed to make a real assessment as well? This one is probably, I would say, one of the hardest of assessments to do, both because it was intentionally covert, built into a mountain. So it's hard to get some of the sources we would rely on, like imagery, like signals intelligence. Potentially some of the individuals involved in the program may no longer be alive. So some of what might be signals intelligence may no longer be available. That makes it harder.
Well, you lead us to our very next question. And is there not a good chance, since this was in fact under a mountain, that we'll never know? And maybe we'll never know where that highly enriched uranium went.
I think we will certainly know that it had an impact, right? It disrupted the state of a program that was at a concerning point. The full details of what it would take to reconstitute, how difficult it is, it could well be that may take time, or we may never have a fully confident assessment for all the reasons we just discussed. But I think this is an important enough topic for the world, for global security, that I have confidence that the best intelligence officers in the U.S. across multiple agencies and frankly in partner services around the world are racing to try to pull together as good a picture as they can in order to give that answer.
Well, Anne, as you mentioned, global security, obviously there are many layers to that. And in part, when we're dealing with the questions around Iran specifically and its cyber capabilities, cybersecurity is something we really want to speak with you about, knowing that it does seem any military engagement or conflict between the U.S. and Iran and Israel and Iran has quieted down for now. How high would you say the risk remains, though, of something happening in the cyberspace, of Iran acting out in that particular way?
I think it's always wise to be prepared, but the risk is likely lower since Iran has responded. As you said, whenever we're looking at Iran and geopolitics, it's good to look at cyber because they like to conduct attacks in cyberspace for 3 reasons. They have plausible deniability, it gives them global reach, and because they often do targets of opportunity. Iran will take hack and leaks of individuals who are of interest to them. But for right now, I would say the threat has certainly come down, but it's wise to be prepared given Iran has conducted cyber attacks in crises and geopolitical conditions like this in the past against Israel, against the US, and against individuals who they view as being, counter to Iran's interests.
There have been reports of Iran continuing cyber attacks against any number of nations now and have a history of attacking the United States in this role. What are we capable of doing back to them, Anne? I remember asking you a question about our capabilities that you were not able to answer in your time at the White House. Do we have, and do the Israelis by extension have the ability to go after Iran in a covert way, a Stuxnet 2, an opportunity to knock the lights out if in fact centrifuges are spinning again?
So first, one thing we will often do is remove Iran's plausible deniability. And when an attack happens, we'll make clear it's the Iranian government. And that's one way of deterring them from acting. So we did that, for example, after Iran conducted attacks against water, food, and energy systems just about 2 years ago, after October 7th. And they did it under a hacktivist group, Cyber Avengers. And we both publicly attributed it to the Iranian government and named some of the individuals to show our level of visibility into their program, and then privately conveyed to them, knock it off. So that's one way we deter. And then we, of course, maintain the capabilities you would expect to respond as needed if required.
Well, so, and deterrence is one thing, but to your point about responding as needed, offense would be another, would it not? It's one thing to make sure our own cyber defense is secure, that we're acting in that defensive way, that we're deterring Iran where we can. It's another for the U.S. to decide to go on offense in the cyberspace against Iran. What do you anticipate that is something that still might happen if diplomacy ultimately fails?
The U.S. maintains the capabilities to respond. Those are often subjected to a larger, what are we trying to accomplish in a given case? I think for now, it would appear that the U.S. has conducted the strikes, Iran has responded, and now we're looking to see the next steps in achieving a long-term, debilitating impact on Iran's program. But the U.S., as you would expect, maintains the capability at this moment in time. I think that would be part of a larger conversation around what are our overall goals and where does cyber fit into those goals.
Really interesting to sort of hash this out here a little bit. And as we learn more about our cyber capabilities defensively and offensively, I just want to ask you quickly in our remaining moment about a conversation that Fed Chair Jay Powell had in testimony before the House earlier this week. He was asked about cyber threats by Iran against U.S. banks and said that he was in touch with regulators, parts of the government that work on cyber. How real is this threat? How prepared is the Federal Reserve for it?
Iran has conducted cyber attacks against U.S. banks in the past. Just about 10 years ago, they conducted denial of service attacks against banks' websites. They didn't have significant impact, but it certainly, shook people in terms of recognizing the reach of cyber attacks. And frankly, the fact that Iran viewed private sector targets as ways to convey a message. And we've seen that with, I would note, other countries as well. A large source of the North Koreans' money, since they're under such heavy sanctions, is hacking of crypto entities. They've gleaned billions of dollars in stealing crypto to finance their missile regime. So banks are certainly a target, whether for political purposes like Iran or whether for very practical money-raising purposes like North Korea. I would say our financial sector is one that takes these threats very seriously, both in coordinating across the sector. That coordination is some of the best of any sector, only rivaled, I would say, by the energy sector, and in the degree to which the intelligence community and CISA makes a point of sharing threat information.
All right, Ann Neuberger, thank you so much for joining us. Former Deputy National Security Advisor for Cyber during the Biden administration, now at Stanford University. On this early edition of Balance of Power, we'll have an exclusive interview with the Commerce Secretary, Howard Lutnick, at the late edition at 5 p.m.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. We are looking at the S&P just shy. I mean, the last record close, I believe, February 19th, 61.44 on the S&P 500. We're at 61. 36.
Yeah, we're seeing an upside 0.7% in the green on the S&P 500. The Nasdaq Composite up 0.9%. The Dow up 0.8%. Amy Morris is going to have more details in just a minute, but we could be getting to a record close, Carol.
I know, right? And there's some enthusiasm, no doubt about it, in the equity side of things. A lot of it has to do with investors betting on Federal Reserve rate cuts. We got to say, economic data back on our radar. So too is the state of the U.S. economy. So we're going to get into that with our Michael McKee. He is back from Washington after 2 days of testimony by the Fed chair. We're also going to get into the state of Fed Chair Jay Powell's tenure. It's top of mind because once again, the administration, various members, and I feel like even the president continuing to put pressure on Jay Powell. And maybe there's a report that maybe he's already got some names in mind.
Okay,
Might
also,
take his place.
yeah, there's a lot to talk about with Mike McKee. Let's just say that. Also on our radar is what exactly happened in Iran, the details on the impact of the U.S. strikes on Iran's nuclear capabilities. And Carol, we've also got a great roundtable, a deep dive into semis a little later this hour.
On our morning call, we're like, there's news on Micron, their earnings, NVIDIA back among the world's largest market cap companies, hitting a record. It's, I think, at a record level again today. So we're going to do that deep dive. And then we're also going to do what you need to know about vaccine policy. There's some things coming down today for the U.S. and also globally. So we're going to dig into that a little bit later on.
All that and more coming up this hour on Bloomberg Business Week Daily. First up, though, check out the day's trade and top business stories. Here's Amy Morris in Washington, D.C. in for Charlie Pellet. Hey, Amy.
Hey, Tim, and you're absolutely right. It's Wall Street bulls driving those stocks to the brink of all-time highs, investors setting aside any geopolitical fears amid the hopes that the Fed may start cutting rates again. We do check markets for you all day long here at Bloomberg. The S&P 500 up 44 points, NASDAQ up 172, the Dow up 355 points. The 10-year Treasury yield at 4.25%, two-year yield at 3.71%. San Francisco Fed President Mary Daly believes tariffs may not lead to a large or sustained inflation surge, and she is supporting a rate cut in the fall. Now, despite a slowing labor market, Daly sees no warning signs of weakening, and she says monetary policy is currently in a good place. She spoke exclusively to Bloomberg Television. Fewer Americans sought unemployment benefits last week as layoffs are still low. Jobless claims fell by 10,000 to a 6-week low. Jobless workers collecting unemployment rose by 37,000. Now, that's the most since November of 2021. With many businesses reluctant to create new jobs, recent college graduates are now facing the toughest job market in more than a decade. The economy shrank at a 0.5% annual pace from January through March as President Trump's import taxes at least temporarily disrupted business. Commerce Department is reporting a downgrade from its previous estimate of 0.2% drop in the first quarter. And a divided Supreme Court is allowing states to cut off Medicaid money for Planned Parenthood amid a wider Republican-backed push to completely defund the organization. It is the country's largest abortion provider. The 6-3 ruling was handed down earlier today. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stinovec.
All right, gotcha. Amy Morris there in for Charlie Pellet. All right, we're going to kick off this hour with a look at the U.S. economy. We got a mixed batch of economic data. Failing, though, as you know, as you just heard from Amy, failing to stop the S&P 500 from pushing within striking distance of a record high. Treasury yields we've seen falling alongside the dollar amid growing bets, though, Tim, as we know, on those Federal Reserve rate cuts, or at least expectations of such.
This all as members of the Fed continue to be out and about. They are speaking on monetary policy, and that includes San Francisco Fed President Mary Daly earlier today on Bloomberg Surveillance with Lisa Abramowitz.
Of course, if the tariffs are a one-off, you can look through them, and if they're just not going to materialize, then you have to watch both sides of the mandate. And I think that's really important. It's not one or the other. It's both sides of our mandate that have really come into frame since we brought inflation down from the really high levels to something that's closer to our target. Ultimately, we have to watch both sides, and that's what I'm doing. And then the fall looks promising for a rate cut. I don't know for sure. I mean, we have to be open about what we don't know. Humble is, I think, the word that comes out of the inflation run-up. And so, but we will, there's a lot of differences of views on the committee. I see that as a real positive right now because people bring their perspectives, and the data will guide us to what is the one that ultimately looks like reality.
President Daly, John was talking about the palace intrigue.
And I do wonder about how the increasingly political overlay to the Fed has complicated your messaging, given that there is this debate about the dual mandate, et cetera. How much has it affected the way that you communicate?
You know, not really. One of the things that I recognize on a regular basis is if I go out and talk to the people who live in the 12 Federal Reserve District, so that's 9 states, very diverse states in the West, they don't actually bring this up at all. What they bring up is, what do you think is going to happen to inflation? Will you be able to restore inflation to 2%? Will you be able to restore price stability? Do you think the labor market is going to be preserved during it? Because ultimately, I really want both jobs and lower inflation. I want to be able to get ahead. And so far, the people in my district are cautiously optimistic overall.
All right, that, of course, was the president of the San Francisco Fed, Mary Daly, earlier on Bloomberg Surveillance, on Bloomberg TV and radio. And, of course, you also saw Bloomberg's Lisa Abramowitz there. Hey, meantime, the Wall Street Journal has been out today reporting that President Trump is considering naming the next Fed chair early in a bid to undermine the current chair, Jay Powell, that so-called shadow Fed. So let's get to it. Michael McKee is with us, back from D.C., Bloomberg News International Economics and Policy Correspondent. He is here in our studio. We're going to get to the future of Fed Chair Jay Powell, Mike, but the data, walk us through, because are the indicators increasingly pointing towards a weakening, slowing U.S. economy, or maybe not so fast?
Well, they've deteriorated some, and the surprise indexes have started to go down. It's not anything that you can point to and say this is definitely going to be bad, but the GDP number that came in today, we don't ordinarily pay a lot of attention to it because it's the third revision of the first quarter. But it was significantly marked down because consumer spending was significantly marked down, which is not a good starting point for the second quarter. Tomorrow we'll get the May spending numbers, and that'll be very interesting to see. Everybody wants to know, are Americans pulling back or not?
You know, this is not old news, but it's the first time I've had a chance to speak with you since you've been back from Washington. A couple days ago, we saw a tweet from the Vice President, J.D. Vance, who said, "I'd love to hear an argument for why Powell cut rates 50 points right before an election, but can't do it now with inflation lower." I want Mike McKee to give his interpretation of an answer to J.D. Vance.
I don't have to give my interpretation because the vice president was clearly not listening to the Fed chair up on the Hill, because he got asked that very question. And he pointed out that going into the September meeting, we had seen unemployment rising for about 6 months. And they were getting worried about being too tight for too long, because remember, they were at 5.25%. And that they were contributing to unemployment rising, and that would maybe send us downhill on the economy. So that's why they did 50 basis points at that time. After that, they did 50 is an unusual number for the Fed, so they went back to the 25s, and then they decided that they'd gotten rates down enough, and the unemployment rate stabilized and started going back down again. So that's the Fed's explanation of what they were doing, and if Vice President Vance would love to see an explanation, he can watch the Bloomberg TV tape of it.
What about the environment right now being different in the sense of the potential inflationary aspect of tariffs and tariff policy? Because before the election, there wasn't the specter of tariffs happening and sort of looming over the economy.
Inflation was going down when they cut rates, and it has been going down for a while, still is. We'll see tomorrow with the PCE numbers, because of base effects, it looks like we're going to see a little uptick in the year-over-year numbers, very mild month-on-month, but it just makes the optics a little harder for the Fed. But at this point, it's the uncertainty that's killing everybody and killing business decisions, because people don't know what tariffs are going to be. They certainly don't know what's going to come out in the budget, because you've been reporting today, of course, that the big, beautiful bill's got some big, bad problems in it in terms of the Medicaid stuff. So when companies feel that there's a risk out there, they turn to the things that they can control. And what can they control? Expenses. So the fear is that as long as this uncertainty lasts, companies are going to get to a point where they're going to have to say, well, we got to do something. So let's start controlling expenses and then cut back on sending me to Washington and stuff like that, and then get rid of people. That's the big issue.
I want to get back to what Tim asked about J.D. Vance, because I think the point was that I think he was trying to say that it was politically motivated.
And a lot of the responses to that post were Powell's political.
Right before that. But based on where the economy went after that and the other moves, and prior to, I think it's safe to say, before President Trump came back into the White House and we started hearing tariffs and trade, like that starts to impact kind of the thing. Was the Fed right in those moves? The 50 plus but 50 in particular, was it, can we look back and say that actually was really the right move?
It's a little hard to say that in the sense that we always say monetary policy works with a lag, and it can take up to 12 months or so for it to get into the economy. But it's a little harder to know nowadays because with all the instant information that we have, it can get into the economy a little bit faster. But we did see the unemployment rate go down. We did see growth pick up. So you could argue that the Fed certainly was correct. And when Joe Biden left office, the economy was about as good as you could hope for.
I was going to say, we were talking about American exceptionalism, like nonstop, right? At the end of last year into the early part of this year. Hey, just before we wrap up with you, Mike, Jay Powell, is he okay? And if, I don't know, with what you are hearing and the constant picking, it feels like, at him, or if the president comes out and says, I've got your replacement, Jay, does it make him less effective? Or as long as he's in the job, he's got the job?
As long as he's in the job, he's got the job. It may dim his enthusiasm for looking at Trump's truths on his social media.
Can he step down if he wanted?
He could always resign if he wants, but I don't. He seems pretty dug in. He doesn't want to leave. And there's really no way for Trump to fire him or replace him. The whole issue of a shadow Fed chair is kind of difficult to see how you would pull that off because there's only one seat open between now and then. So, whoever it is would have to get confirmed to that seat. And the Fed board would probably not pay a lot of attention or any attention, might go in the opposite direction of whatever that person said. And anything that person said seemed to toady to Donald Trump would hurt their credibility on Wall Street, and maybe they don't end up as Fed chair because nobody wants them. So I'm not sure that's going to happen, but with Donald Trump, one never knows.
Keeps life interesting, to say the least. Mike, thank you so much. Good to have you back here at home base. Michael McKee, of course, Bloomberg News international economics and policy correspondent. All right, let's get to an event that happened early this morning, a big press conference.
Yeah, by U.S. Defense Secretary Pete Hegseth with an update on the U.S. strikes in Iran. Oil prices in New York rose as much as 2% today amid the conflicting signals over how much the U.S. strikes hobbled Tehran's nuclear program and whether Washington will continue to target Tehran's oil flows. With an update on this, we turn back to Bloomberg Economics senior geoeconomics analyst Adam Ferrer in our Washington, D.C. bureau. Adam, look, we're going to get to the time spent on berating the media in just a second. Perhaps we want to get to what really matters. What do we know for certain at this point about the impact of the U.S. attack on Iran's nuclear facilities and capabilities? Because we've heard different things from different sources.
We certainly have. I think it's important to start with looking at what this briefing this morning was. Interesting to say the least, and you already commented on the oddity of kind of attacks in the media, but on the content, there wasn't actually anything particularly new. General Kane, the chairman of the Joint Chiefs of Staff, provided a very in-depth breakdown of U.S. defense of its facility in Qatar after the Iranian strikes, and then significantly more detail and a quite interesting video of kind of the effectiveness of the GBU-57 bunker buster, trying to highlight how it was and could be used against the target nuclear enrichment facility at Fordow. But at the end of it, we were left with no more information on how effective the strikes were than we had started with. And in fact, General Kane even emphasized that that assessment would not come from the Pentagon, but rather from the intelligence community. Now, outside of the briefing this morning, we have heard additional information from other important voices, including the head of the International Atomic Energy Organization, IAEA, that highlighted that from their perspective, there's reasonable understanding that the sensitive equipment at Fordo is most likely incredibly damaged. And that in and of itself is leans in the direction of obviously the president's comments that there is a lot of impact from these strikes, but we're still left with lots of questions.
Yeah, I mean, I'm just thinking Iran's supreme leader claimed victory in the war with Israel, saying the U.S.'s intervention achieved nothing. Those were some of his first comments since that ceasefire came into effect earlier this week. And I think you've got European officials kind of questioning, because they believe, I think Iran's stockpile of highly enriched uranium remains largely intact. So there's much to be learned sooner, I guess, in the future. The IAEA, the International Atomic Energy Agency, will they be the ultimate arbiter of telling us what was done, of really finding out what happened? Like, where does it land?
So from the U.S. perspective, we're, as General Kane mentioned this morning, the intelligence community is going to continue to work to develop that broader and more fulsome assessment on the battle damage. However, at the end of the day, without folks on the ground actually going to the site, which the IAEA could do under an inspection regime, you're never going to have that definitive evidence of what was and was not destroyed. In addition, the questions remaining on the 400 kilograms of highly enriched uranium likely wouldn't be solved even if inspectors were able to return, if they weren't able to enter the sites. So we are left with very big questions about where that concerning amount of highly enriched uranium is. We talked last time about the fact that this enriched uranium could be easily transported in the back of 10 sedans, and the IAEA even has mentioned that Iran told them shortly after Israeli strikes began that they would take special measures to protect their nuclear equipment, including highly enriched uranium, which could have included dispersing it outside of known facilities.
Hey, before you go, just got about a minute left here, Adam. The lead on our story is the Defense Secretary berates media as questions linger on Iran strike impact. This was at the briefing, but this was also in response to lots of questions that have been out in media questioning what the impact has been. What do we know? What do we need to know, if anything, about kind of the messaging that was coming from the administration? Because it does seem like press, all kinds of press, are just doing their job.
So I think the top line takeaway is that the questions being asked by the press are the questions that are still trying to be answered by the government itself right now. And we saw that this morning from Secretary Hegseth and General Kane, where while emphasizing the strength and breadth of the strike, not providing any more finite information to define what success really was and where the Iranian nuclear program sits today. I think we have to always remember that at the end of the day, the Iranian nuclear program will not be decided by the equipment it has access to, but rather their intent and their interest in moving forward with their program.
Great breakdown on all of it. Adam, thank you so much. Adam Ferrer, he is Bloomberg Economics Senior Geoeconomics Analyst for Asia Pacific. Do want to mention we've got a rally underway. S&P 500 on track for its first closing record since February. When we come back, deep dive into semiconductors. This is Bloomberg.
It's 2:21 on Wall Street. I'm Amy Morris. The S&P 500 keeps gaining, now on track for its first closing record since February. We do check markets for you all day long at Bloomberg. The S&P 500 up 0.8%. NASDAQ up 1%. The Dow up 0.9%. The Russell 2000 is up 1%. The 10-year Treasury yield at 4.25%. The 2-year yield at 3.71%. We're waiting earnings from Nike. After the closing bell, the company continues to eye a turnaround despite tariff headwinds and inventory challenges. Store traffic, though, is improving, so Nike might report better direct-to-consumer sales. Shares of Nike more than 2% higher at this hour. Walgreens Boots Alliance reported quarterly profit, beating Wall Street expectations. The company is set to be purchased by private equity firm Sycamore Partners for $10 billion by the end of this year, with plans for the future of Walgreens unclear. Shares of Walgreens right now up about 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Messer and Tim Stenovec.
All right, gotcha, Amy. Thank you so much. Amy Morris there in for Charlie Pellet. Hey, folks, not sure if you've noticed, but Micron Technology rallied after it reported earnings last night in a big way. It's down, though, as we speak, about 2% in today's session. Micron, the top-performing chip maker on Wall Street this year, company delivered an outlook that wasn't quite rosy enough to keep its 2025 rally going. So that's on our radar. And Tim, so too is NVIDIA.
Yeah, gaining back the mantle of being among the world's largest market cap companies, surpassing yet again Microsoft. Shares back at a record. And then, oh yeah, you've got the world powers continuing to spar over computer chips in today's ever-expanding digital economy. We knew we needed to do a deep dive when it came to semiconductors. And we've got the right person to turn to. Ed Ludlow joins us. He's Bloomberg Television co-host of Bloomberg Technology. He joins us from our San Francisco bureau. Ed, I want to start with Micron. And by the way, we're also going to get to the Tesla news, just a deep tease for some news that you and Dana broke a little earlier in the day today. So stay tuned for that, everybody. Micron, though, down today despite some upbeat news yesterday. What happened after the report, perhaps during the call?
Yeah.
What did analysts say about potentially why the stock could be lower right now?
Well, with any earnings, there's always the mechanical part of like what was the outlook or forecast for the current period relative to the very highest expectations, not just consensus estimates. And I think a lot of the sell side have come out and said we had really high hopes for Micron anyway, because we know the story. In AI, building data centers, for every one of these like super exciting NVIDIA GPUs, you have a corresponding number of Micron high bandwidth memory chips. But actually, the transcript of the earnings call is really worth going back over. What was the thing that analysts asked over and over again? It was about pricing. So when your sales come in ahead of expectations, your revenue is higher than the average of the street estimates. It's not necessarily that you sold more stuff than they expected. If you charge a higher price for that stuff, obviously on the top line, it's going to look a little better. And that pricing component was key here.
All right. So, right? The devil's in the details, always. Yeah. All right. Okay, so that is just a sign of what? That they're just not able to meet demand, and so what they do have, they get to sell at higher prices.
Yeah, so like it's a really simple calculus that high bandwidth memory chips are a little bit supply constrained. In other words, it's expensive to build out new capacity because it's a highly technical process. A high bandwidth memory chip is super fun. I actually have a piece on the internet. Your audience, if you will indulge me, go out and find it where I explain what HBM is. But it's basically loads of DRAM stacked on top of each other and squidged with wires running through it. And that process is really hard. And so the other big part of the Micron story is them saying, like, you got to bear with us because we've committed to expanding our capacity in America. It's just very expensive and it takes time. And if you're going to do that in an aggressive way, that also impacts your margins, as does pricing. So it's the same with NVIDIA and the GPU. All of the really core compute components that go into a data center right now, the demand is currently greater than the ability to supply, although that's a constantly moving dynamic.
All right, so then what additional color do they actually give about demand, real demand, not just, what inflated revenues because they were able to charge more?
Again, devil in the detail. And what's really interesting is, like, look at the executives on the call. This wasn't necessarily the CEO, Sanjay Mehrotra. It was like this broad range of both technical and business executives. And one of the questions the analyst posed was, hold on, you gave us the same time a year ago this kind of longer term guidance for a fiscal year. Why aren't you doing that this time? And the most they could get out of them was focus on our data center business, look at how it grew sequentially, look at how it grew year on year. Our expectation is that data center business over the course of a fiscal year will outperform. It will be the growth driver against the other stuff that Micron does. We have memory chips in our smartphones and computers. Micron has a role in that with NAND and traditional DRAM, but those are more cyclical and commoditized industries. All we're telling you is that longer term, we expect the outperformance and growth to be in data center.
All right, even with the stock lower, it didn't stop a bunch of analysts coming out and raising their price targets.
So many.
KeyBank, Piper, Sandler, Morgan Stanley, JP Morgan. I mean, they all came out, so they're still expecting this stock, Tim, to go higher.
Okay, well, speaking of stocks going higher, let's talk NVIDIA. Shares higher right now by 1.2%. $3.8 trillion is the market cap for NVIDIA right now. It did surpass Microsoft to become the world's most valuable publicly traded company. Ed, the last time NVIDIA hit a new record was pre-DeepSeek, if my calculations are correct. What has happened since then to give investors the confidence that this company can still move higher?
So you have to look at this AI thing as an ecosystem. And what's happened since then is that we've got through the bulk of earnings season, where everyone that participates in AI development, the builders and operators of data centers, in other words, hyperscalers, cloud computing names, the model makers themselves, we had a lot of news from OpenAI, Meta, Amazon, AWS, have this kind of dual mandate. In aggregate, what I'm seeing, and it's in our reporting as well when we cite those buy-side names, they basically say we have more conviction in this long-term NVIDIA story now than we did 2 months ago, because all of the people that NVIDIA does business with and sells to have come out and said, yeah, we'll keep investing, we'll keep building. And right now, NVIDIA has a monopoly. One thing that I find so interesting is right now, NVIDIA is the big headline because it's continuing to hit new all-time highs. But also look at recent terminal coverage of AMD. NVIDIA has a near technical monopoly in this market, but AMD has also been getting a number of upgrades because the market sees them taking some market share, closing the gap with NVIDIA, but both of them growing together. So the demand, big picture is there for high-performance GPUs that were initially used to train AI models. Now very much it's focused on inference, which is running those models to yield results.
So off and running, it's justified. I mean, the stock is up. I'm just looking from April 4th, and I know a lot has happened in the broader market, but it's up 65% from that low in early April. So everything's justified. I don't even look at the valuations. I don't even know if it matters, does it? I don't know, a PE of 50 and a forward PE of 36. Do these even matter on a name like this based on what you are seeing fundamentally?
Just as many people come on the show and tell me like fundamentals matter, but you'd be a brave person to miss out on the NVIDIA name. And that has been a big part of the story. So too is the retail investor, right? Mm-hmm. That's a really important factor because it's something tangible that people can understand. NVIDIA gave us what we know today through ChatGPT. We wouldn't have ChatGPT without NVIDIA. The retail investor gets it. But yeah, I think that, multiples have been a really big point of discussion. Put the Mag 7 names side by side, in both their performance year to date from a share price perspective, but also those fundamentals, and you'll see some commonalities there too.
I'm just going to say 69 buys on NVIDIA. You've got 9 holds, 1 sell, if you look at the Bloomberg function on the terminal. And I'm also looking at just more broadly what's going on in semiconductors today. You've got most of the names in the stocks, I think more than 20 or about 24 that are actually higher in today's session. So we're seeing that kind of all in. Does that tell you that it's a healthy economy?
Yeah, it was really interesting because I was thinking about like the change of tone on the NASDAQ 100 or the Philadelphia Semiconductor Index in the last week. Mm-hmm. And you either believe that the rising tide lifts all ships, right? The exception to that being Apple and Tesla, where there's been literal headline risks to those names. The headlines have been poor and they've suffered. But the primary driver of this market, particularly since the S&P 500 bottomed in April, it has been AI. What is different now is it's slightly broadened out from beyond NVIDIA to include Broadcom. People know they have a role in data centers, but also on the software side, like Palantir, for example, is a really big name in that context. Again, building on top of the infrastructure work that's been done in the last couple of years.
Yeah, Yeah, name two that's closely tied to people in Washington right now, Ed. You mentioned Tesla, so that's exactly where we want to go. And to the Bloomberg exclusive from you and Dana Hull a little earlier in today's trading session. Tesla shares down about 0.2%. They've been searching for direction all day. You and Dana reported that a Musk confidant has left Tesla. It's the latest high-level exit from the company. Who was this person? Who is this person? And what does it mean big picture for the company?
Yeah, so this is Omid Afshar, and what sources told Dana and I is that as of Tuesday night, Wednesday, he's no longer at Tesla. He's left the company. And it is surprising because his most recent responsibilities were manufacturing and sales for North America and Europe, which is clearly a broad remit. He is very close, or historically has been very close with Elon Musk. His origin is kind of like Elon's chief of staff. He ran the office of the CEO and has been promoted. You guys might remember that I broke a story in 2022 that internally he had been the subject of an investigation about the procurement of some unusual materials, some glass, and others. Yes, and others had reported at that time that this was a project for Elon Musk, a personal project. It's a very long story, but the abridged version is he's now gone. So has a very senior member of HR staff, also from Austin, we've learned this morning. And it's part of a series of high-level departures in recent months across all lines of Tesla's business.
Well, Tesla's expected to report global delivery results for the second quarter next week. You guys point that out in your story. What is going on inside Tesla? Are things calming down now that Elon's back? Is he back and he's like, wait, I gotta make some changes. I've been busy in Washington. What is going on?
I want to say that there is some other reporting out there that Omid was fired. I think, honestly, we do not know. And I don't think that it's as simple as saying, well, Elon's come back, so he's making changes. Nor do I think it's as simple as saying Tesla has sales data coming next week. Was it a rough quarter for them? And so the blame lays squarely with Omid. I don't think that's the case either. You know, what I'm hearing very much is that this was unexpected. Omid had also been involved in the robotaxi launch out in Austin. He basically ran that place locally in Austin, Texas. And as recently as Tuesday morning, like literally the early hours of the morning, he was posting on X, sharing videos about the robotaxi launch and some of the success of it. So there's much more reporting to do here. But what I would say is that, you know, he is somebody that Elon Musk held very closely. You know, and Elon Musk, I know, you know, I've spent many years talking to people about this, how he views somebody as a threat or as accretive or helpful to his own goals is a big calculus.
We only have 30 seconds here, Ed. It's not enough time for a full answer here, so fair warning to you. Speaking of threats, the Chinese automakers versus Tesla. Outside of the U.S., how big of a threat is this to Tesla? 20 seconds.
Yeah, in Europe, there's evidence that BYD is doing that. But did you guys see the Xiaomi headlines and the sign-ups for their new SUV? And so in domestic China, that's going to be a big question as well. New models and Tesla's limited range of models there.
Yeah.
$35,000 SUV.
Yeah. I mean,
it's remarkable.
How do you beat that, right? I don't know. Ed Ludlow, we said we had a lot going on in chip world, Tesla world, and we knew we had to talk to Ed. Ed is, of course, BTV, co-host of Bloomberg Technology. Catch it at 11 a.m. every day on Bloomberg Television. Coming up, we switch gears to vaccines. That's next.
2:40 on Wall Street. I'm Amy Morris. We keep an eye on the markets for you all day long here at Bloomberg. The S&P 500 is up 0.7%. NASDAQ up just about 1%. The Dow is up 0.8%. The 10-year Treasury yield at 4.26%. The 2-year yield at 3.72%. Sources say Omid Afshar, a powerful executive at Tesla and one of Elon Musk's closest confidants, has left the company, the latest high-profile departure during a volatile period for Tesla. Tesla stock is little changed. Sources tell the Wall Street Journal CoreWeave is in talks to acquire Core Scientific. No details yet, but Core Scientific has been growing fast. Core Scientific is one of the largest owners and operators of high-powered digital infrastructure for Bitcoin mining and hosting services in North America. CoreWeave is a cloud infrastructure provider for AI. CoreWeave shares are down more than 1%. Core Scientific shares now up 31%. The Supreme Court in a 6-3 ruling says the Medicaid Act does not give beneficiaries a privately enforceable right to choose a specific provider. That decision allows the state of South Carolina to block Medicaid funds from going to Planned Parenthood for cancer screenings, contraception, and wellness checks. It sets a precedent to allow states to cut off Medicaid funding for Planned Parenthood, even if it's not for abortion services. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stenevec.
All right, Amy, thank you so much. All right, folks, Health and Human Services Secretary Robert F. Kennedy Jr.'s Vaccine Advisory Committee recommended Merck shot to prevent newborns from getting RSV at the same time.
That's a big deal.
I know
RSV
it's a big deal.
For kids, I mean.
It's right.
Yeah.
Right.
It's scary stuff.
Like when we talk about, at least in the past, when we've talked about the importance of RSV, we talk about the importance from kids. You know that you've had little ones.
Yeah, and I think this is pretty new. Like we haven't been able to get this for my kids.
You have not.
Not this early. Yeah.
Not this early. All right. And then we also had the vaccine panel moving to restrict the use of some flu shots for Americans. And then one more thing, Tim, we had the actual Health and Human Services Secretary come out and say that the U.S. will cut funding to the organization responsible for vaccinating children in poor countries. So it's a move that some experts say will result in unnecessary deaths. So there's a lot going on in this space, something that I think we just take for granted in terms of vaccines, but there's some debate over it.
Well, here in the studio with more on these developments and more, Bloomberg News health reporter Damien Gardet joins us in the Bloomberg Business Week studio. I kind of want to start a little bit back in time. I think this is yesterday's news, and then we can get to everything that happened today. The questions over the vaccine schedule for kids. This is something that anybody who has a young kid knows. You look at this thing, your doctor looks at this thing and says, okay, these are the recommended vaccines at this age. They work in tandem sort of with the American Academy of Pediatrics, I believe. What's happening with this from Washington right now?
Right, so the American vaccine schedule is recommended by the CDC, not required, but I think for most people, you just kind of go with what your pediatrician tells you, and that's where it comes from. What we learned yesterday is that the CDC's group of vaccine advisors intends to reopen the book on the vaccine schedule, which in the abstract, kicking the tires scientifically on something like that seems perfectly reasonable. The reason for the alarm that you may have heard from public health officials is that this is a handpicked group by Robert F. Kennedy Jr., who famously has advanced and espoused debunked theories about the safety of vaccines going back to the 1990s, if not before. So people are reading the tea leaves. Is this an attack on the vaccination of young kids, which is something Kennedy has fixated on for many years and tied various vaccines to the development of autism and other issues for which there is just no evidence? So the concern is that when they reopen the book, their consideration of the evidence behind, for example, the measles vaccine or anything else that's recommended for young kids will not be even-handed, and that this could be a kind of breadcrumb trail to a dismantling of public health in the United States.
Well, how does it work in the panel? What evidence are they looking at? What research are they looking at? What goes into determining their decision, or is it kind of how they feel?
It's pretty rigorous. So there's a multi-step process. Any new vaccine, which at some point each of these vaccines was new, must first win approval from the FDA, which looks at safety and efficacy also pretty rigorously. And then it goes to this panel of independent advisors to the CDC, the Centers for Disease Control and Prevention. They pour over even more of that data and look at things beyond what the FDA looks at, including the cost and cost effectiveness of these things and real world evidence as to how safe they are, how well they prevent disease, and what side effects they may have.
The U.S. does not have the only children in the world.
Right.
There are children all over the world. I'm wondering how the U.S. vaccine schedule is different than vaccine schedules in other parts of the world.
So at least against like the big 5 European nations, they're pretty much the same. We all vaccinate against about 15 of the same childhood diseases. There is some difference in like hepatitis A, hepatitis B, basically based on prevalence in different countries. Some countries, that's more of a risk for young kids than it is in others for all kinds of reasons. The number of individual shots you get varies, and the US has more of those than, for example, Germany or the United Kingdom. This is a little bit in the weeds. Even though we're vaccinating against largely the same diseases, in Europe there are more combination vaccines that we don't necessarily use in the US. So the number of needles varies, but I would say by and large, Japan, other comparable nations, we are trying to prevent the same diseases in our kids.
So they're basically giving a shot that may cover numerous things, right? Whereas we are doing individual shots.
Yeah, and
why is there a difference?
You know,
I mean, if I have a little critter, I don't want to
fewer needles the better.
Yeah, exactly.
You know, it really does.
I did have a little critter. She's a big critter now, but I mean, yeah, like that was something you wanted to limit as much as possible.
Right, and it boils down to basically, you know, the way that like reasonable people can disagree. Different groups of experts will look at safety and risk and cost differently. So one example is measles. In the United States, we recommend the MMR vaccine, which is measles, mumps, and rubella, and then the chickenpox vaccine separately. There is a vaccine that has all 4 of those things together. It can lead to, in small numbers of cases, seizures. And the CDC decided years and years ago, better to do them MMR plus V is what they call it. Overseas, it's largely, or in many cases, MMRV. And there are other cases like that, where basically reasonable people, sort of equivalents of the CDC in countries around the world, came to different considerations. And some of this does have to do with cost.
Does it seem like the Secretary of Health and Human Services is fulfilling promises that he made as he was testifying? If we remember back a few months ago, it was pretty contentious, and there were some holdouts who ultimately ended up supporting him because they said, hey, he will not do the things that the worst critics are saying he will do.
Right. The short answer is no. I mean, one specific case is, as you mentioned, it was Senator Bill Cassidy from Louisiana, who ended up being
a doctor.
Who is a doctor, and clearly was, or at least in public, seemed very pained over this vote, over whether to confirm Kennedy, and ended up being basically the deciding vote as a result. And in order to get that vote, according to Cassidy, Kennedy promised him explicitly that he would not mess with this particular committee on the CDC. Now that's according to that's according to Cassidy. Kennedy did not, to my knowledge, say that publicly, but I think we can trust the senator, or at least we have little choice but to. Cut to this June, Kennedy fired all 17 of the standing members of this committee and replaced them with 8 people, one of whom resigned before the first meeting. So the remaining 7, and they include people with non-traditional backgrounds, not necessarily MDs or vaccine experts, and in a few cases, people who have, like Kennedy, echoed those debunked claims about vaccines causing autism or other safety risks.
Well, someone would say that a panel should have diverse points of view, right? So that you get a healthier debate. Having said that, is it typical that an administration changes this panel completely? I mean, it does change over time, right?
It does. They're appointed to 4-year terms by Health and Human Services secretaries, and it's considered, serving on this committee is like a real badge of honor in public health. Whether you're a vaccinologist, a pediatrician, a registered nurse, you often, it's almost like a minor league baseball system. You will serve on the working groups that serve this committee, and then to be selected
there's a farm team,
is an honor. It's kind of, yes. So to liquidate, maybe not the right term, to fire outright all of the standing members and replace them, that is unprecedented.
Go ahead.
The one thing I wanted to get to is that they may not provide the U.S. funding for vaccinating children in poor countries. As we learned with the pandemic, pandemic doesn't know a border. And I wonder about this. So what's top of mind for you? And forgive us, it's only 30 seconds.
No, that's all right. The separate issue, so as you mentioned, Kennedy announced that the United States will no longer fund Gavi, a program that was founded in part by the United States to vaccinate children around the world. This is cause for serious alarm around the globe. As you noted, the next COVID is not something that will just stop because of a border. We need to see what the knock-on effects of this are, but I mean, the United States pulling out of funding as the major funder is a serious concern.
Who needs ChatGPT? We just need Damien. Thank you so much. Damien Cardet, Bloomberg News health reporter, coming up. Check on trading some stocks on the move. This is Bloomberg Business Week Daily.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, we're coming up with just about an hour to go till we wrap up trade on this Thursday, but we've got a rally underway. We're rolling off our best levels of the session. What does that mean? We are still up about 45 points on the S&P 500, 6137. We need a few more points to take out a new record on the S&P 500. NASDAQ 100 at another record close, on track for, is up about 0.9%, a gain, Tim, of 201 points to the upside. And you've got the Dow, if you're interested, 372 points higher. It's up almost 0.9%.
The highest that the S&P 500 saw today was 6144.
That's it.
That was a record.
Yep.
The last record.
So intraday.
Intraday, yeah. The last record that was back in February.
Correct. And that, I think, was...
Yes, go on.
Yeah, I had it at the top of the show.
6137? Is that right?
I had it 6144.
6144.
On February 19th. I think that was the record close.
Okay, so record. Okay, interesting. Okay, so 6144.66. You got a lot of screens up here, people.
Don't you guys work at Bloomberg? You have a lot of information at your fingers. Okay, just ignore us. I'm Carol Masser along with Tim Stennebeck. Let's get to some stocks on the move.
With us is Bloomberg News cross-asset reporter Denitsa Sakova. Denitsa, Coinbase is a company that you got on your radar today. How come?
I'm going to stay on the topic of new records. And Coinbase actually hasn't hit a new record for 3 years, actually more than 3 years. And potentially today we're set for a record. It's, of course, coming on growing acceptance of cryptocurrency in Washington. We've had that stablecoin bill. And we've talked a lot about Circle, which has been on a crazy rally. But that's not the only company. Coinbase shares have surged more than 1,000% from late 2022. Which, of course, is the collapse of FTX. And it felt, at that time, that 1,000% rally is never happening. Clearly, we were wrong. That rally is happening, and the final leg has occurred as the U.S. Senate is passing legislation for stablecoins pegged to the dollars. That has been a new round of enthusiasm, especially in a place where crypto enthusiasm wasn't a big thing in Washington. So that's definitely helped. And just to show you how bullish the street is, we have a target of $510 from Bernstein analyst. The current price is $379. So 510. That's a crazy rally.
1,064% up from December 28th, 2022. That's a lot.
That's wild. I think there were a lot of people back then. And remember the last record, it's been years, as Denitsa said. A lot of people back then were like, does the industry even recover post-FTX?
I mean...
It's come back with a vengeance.
It's such a warmer environment, right? The sentiment has changed dramatically.
It's very different when you have supporters in Washington.
All right. Coin,
very good point.
Coin, of course, the ticker, as you said, up 6.6%. Let's go to Penn Entertainment. Ticker is PENN.
Yeah, we're moving into casino. The stock is up 4.9%, and there is also some analyst optimism there. It's coming from Citizen, which raised their recommendation to market outperform. Penn Entertainment has faced a lot of headwinds. They had a big partnership with ESPN, which actually the industry hasn't been too bullish about it because it didn't do that well financially. Now Citizens is actually seeing many catalysts: casino operating growth, shareholder returns. They're pretty negative about what has happened recently. They said the company has overpromised and underdelivered, so pretty harsh tone about what is in the past, but clearly a lot of optimism about the future. That deal we were talking about with ESPN, that was like a $2 billion licensing agreement. And actually in that note, Citizen mentioned that as a bullish catalyst, that ESPN does not extend if ESPN doesn't extend the bill after 2026, that's a bullish catalyst. The stock was down 87% from all-time high, so this is a much needed relief, the 5% boost today. It has 11 buy ratings, 11 hold ratings, and zero sells. So there isn't too much negativism there, but clearly it needs some pressure on that side.
This used to be $136 a share stock. It's now about 18 and change.
Yeah.
Just giving you a little context.
Everything Denitsa has today is a gainer.
She does.
Only good news.
Wow. We like that.
Come on.
All right.
Well, we like that if we have to choose gainers later.
So sorry, although I'm listening to these and I'm like, darn, why didn't I choose this one? I did not choose this one, but it's a good one, Meta.
that one has been on a tear. It's been up 50% since the April low. That's incredible. Today we have advanced talks to acquire PlayAI, which is a small startup using artificial